you got a cold in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Ooh, look at you, bringing the Halloween spirits every day this week.
I told you, I have a lot of Halloween clothes.
Very nice.
You can borrow this if you want.
Thank you. I'm all right now. I appreciate it.
How are you guys today?
Good.
Hanging in
No
there.
complaints.
Have you battened down the hatches, or is it all stations ready? You're locked and loaded for tomorrow night?
I'm just happy it's not going to rain. So we got no rain coming.
Yeah, it's going to be like
50s.
55.
Yeah. So, I mean, that's a good Halloween. The kids can run around without jackets if they really have to, because I remember when you were a youngin', like, you did not want to wear your jacket.
That's like a young person thing, though.
Yeah.
It is
Just run hot. You got all that.
It is the total devastation of all Midwestern kids that their glorious costume has to, more times than not, go under a coat.
Yeah,
Yes.
right.
Yes.
He hated it. He would not do it. So I'm glad that they were able to do that.
Yeah.
Because I remember
Did you stock him with the bapples? Is he ready for his, like, the parties and all that good stuff?
Apples is so yesterday. Okay.
I was going to ask, what are Vinny's plans?
Angry Orchard.
It's Angry Orchard.
You can't buy him alcohol.
No. They were stolen from the fridge.
You can't knowingly supply him with alcohol. You can't knowingly look the other way while he steals your alcohol.
I didn't look the other way. It's very tricky. No, that's their new
The Angry Orchards.
Angry Orchard of choice. Yes. They're not doing that. They're into edibles now. I'm just kidding. Look at her. She's.
I mean, dude,
I'm just teasing,
you
right?
can parent however you want to parent. Like you.
Yeah, look how good I did here. I mean,
Yeah, right.
it's amazing.
I mean,
Always had a job, graduated in 4 years.
Oh, James. Thanks, buddy.
Oh, James is still mad about what you said about Caleb Williams yesterday. He likes Caleb Williams.
I know.
Yeah,
And
so.
Caleb's,
You're not gonna get any love from him today.
It's all right. That's all right.
Production.
Sorry, James. Okay.
Yeah.
but you have all the supplies and everything for.
Yes. Oh, yeah. I got over 200 full-size bars. Got a bag of little fun ones too, in case we get out there.
Sure.
I got to move the. I have 2 dogs that are pains in the.
Sure. Well, the doorbell going off and
Drives them
people
nuts.
knocking. Right. Yeah.
So I take everything kind of outside. So I got my fire pit all ready to go.
Okay.
Got my wood all ready to go. Got my whiskey ready to go. Got a table.
Now, what are you gonna wear though to greet
A bear.
the kids?
Bear. I'm a furry.
Yeah.
Oh, that's right.
Yeah.
Do you take pictures and post them?
Sure.
Yay.
Sure. I can do that. Yes, I can do
Yay.
that. Well, I'm doing that for the grandson,
He doesn't know where his toes are. He doesn't.
No, he does. He's talking now.
Okay.
Yeah, he's talking now. Last month, he didn't know where his toes were.
Okay.
Last month. This month, he's talking, so he's better now.
That's good. That's good.
I don't think they're going to make it to my neighborhood. She only lives 2 miles away, but I don't think they're going to make it to our neighborhood for Halloween, so we might have to.
Why? Because the kids just get tired, or
Yeah, I mean,
Yeah, that's fine.
Yeah, I don't know. So they'll probably stay in their neighborhood. So Grandma will go over there probably with them while I'll man the door. Because the kids come early. The best ones are the kids, are the early ones. The 3 o'clock ones, the ones that get like right out of school.
3 o'clock. Who's coming to your house at 3 o'clock?
Well, they get out of school around.
They don't have like sanctioned time. I don't know how this works.
I think it's like 3 to
I thought it was like
Yeah,
from like 5
the
to
suburbs
8.
usually stop it at like
8 or
Yeah.
something like that.
Yeah, I thought it was like 5 to 8, because you
Yeah.
gotta let people get a
Yeah.
chance to come home from.
Well, it's the early ones, whether it's 5 or 3, I forgot.
Sure, yeah.
But it's the early ones. It's those young kids that come, in their costumes.
Yeah.
The older ones, like when he was getting older, like Vinny, they'll come like, with a hockey jersey on that they stuffed in their backpack and they just put on because they want a candy. I'm not.
I think you should just give all kids candy. Just give everyone candy.
Oh, I do give them all candy, but
Yeah.
reluctantly give them
Yeah,
candy. The
you
little
can't
ones,
deny them candy on Halloween.
Right,
Right.
that's what I'm saying.
Well, the little ones
Just
come up there-
cranky about it.
So I put it all out on a table, like every whatever I have. You know what I mean? So I put all the different 8 or 10 different flavors that I have, and the little ones will always come up and ask, how many?
Yeah.
And I'll, the answer's 1, but with the little ones, I'll go, how many do you want? And they'll go.
Okay, don't make it creepy.
Well, he's dressed in his bear outfit.
right. Yeah.
How many do you want from Uncle Furry?
Yeah.
Oh no! I am calling the state.
2, and I like
Papa
you can
Bear.
have 2 or 3.
Where is Chris Hansen?
So that's my day. So that's what I'll do. So I can't wait. I love it. Halloween's like one of my favorite.
Halloween is one of my. I just love little kids like all dressed up in their cute little costume, and especially like if the family does like a family costume. So.
Although it's bittersweet for me because 22 or 23 years prior to that, it's the day before I got kicked out of the house. So
we don't need to unpack your trauma right now. Nikki, what'd you do last night?
happiest. It was my kid's favorite holiday. So I said, please let me have Halloween. She was gracious enough to let me have Halloween, and then she kicked my ass out.
Okay, I don't know how to pivot out of that. Nikki, how are you?
Nikos in the chat would like to have the Great Pumpkin Heist story teed up for.
Oh yeah.
Just to put that out there for the team. Nikos,
You know what?
I'll
I'll fly by to Casa today. See if I can.
You should do that actually.
see
You should see if Tom has a pumpkin out. Now that he's got all this free time, like his place should be looking like Martha Stewart up in there.
Yeah.
I doubt it will, but maybe I'll fly by. Fly by. It is off the beaten track though, but I and I always get a ticket going down that street. What is it?
Ravenswood, Montrose.
Montrose.
Yeah.
Montrose.
Well, don't speed on Montrose.
I know. It's 30. I mean,
Yeah, it's cool.
I'm surprised you're able to get over 30 on it because normally it's just traffic. So
and it's got red light cameras everywhere. School zone.
So stop speeding through school zone.
Yeah, I don't know. Yeah.
Okay.
Nobody there.
All right. Well.
Anyway.
You could do what my motorcycle peeps do. You can just take your plate off.
There you go.
I don't condone that.
Do those like smoky ones work? Does anybody know?
I don't think.
I don't know. They're all illegal.
Yeah.
I wanted to try because I saw like an Instagram ad, like a spray you put on, and so it looks clear, but when the light of the camera hits it just is a big flash ball.
Yeah.
Again, not sanctioned. Whereas tastylive does not endorse illegal products. Anyway.
Yeah, you can't do that.
Yeah, can't do that. How about you, Nikki? What'd you get up to last night?
I did one of those seafood boils.
Ooh.
Like the Louisiana seafood boils.
At home?
No.
Oh, you went out.
The King
I was gonna
Crab
say, 'cause
House.
At home, that's.
You ever been to the King Crab House?
The one on Madison?
On Halstead.
Oh, on Halstead.
It's like past Athenian
I
Room.
don't think so, but I think what the
And they're
Angry
like-
Crab used to do.
No, those are like the
Bag in a bag?
yeah. But
Yeah.
those are like that's like the chain one.
Oh,
King
is it?
Crab House.
How was it?
It's like the old school spot.
Oh.
Wood bar.
Ooh.
Oh.
Yeah.
How was it?
Really good. Really
Can I ask, what's
As
like
opposed
the
to a
market?
Kevlar bar? Like what a bar's made out of nowadays? I
No,
haven't
like
been to
just
one.
like an old school wood bar.
Oh, gotcha. Okay.
It's
Instead
nice.
of like marble or granite.
Yeah, they got
fancy.
like the oysters on ice right in front of the
like in front?
bar.
Oh,
like
sweet.
yeah.
Very
it's like old
nice.
school.
So-
But you know what it reminds me of? Like Bob Chin's.
Oh,
It's like a Bob Chin's.
Shout out to Bob Chin's, Wheeling, Illinois.
Yeah.
What did you get? What were your meat or your seafood? Sorry, in the bag.
Shrimp.
Oh, you
But we
went
also
shrimp.
did like crab cakes and oysters.
It's expensive. That's what I was asking. I was like, what is the market price for one of these boil in a bag places now?
It's not too bad.
It's not too bad. Okay.
You didn't do
Yeah.
any crab?
No, we're gonna do that next time. We'll do that next time. If you sit at the bar, they're like 85-cent oysters. So you just go to town.
Oh, beautiful.
Do you like
good.
oysters?
Of course, I like oysters.
Wow. Okay. Don't make it weird.
Yeah, yeah. You eat enough, it gets a little frisky too.
Crab power. I mean, clam power. Yeah. You gotta do that.
Do you like oysters?
Yes.
Oh.
Well, there's some problems with oysters and clams right now. I thought I was reading.
No, that's the shrimp, the radioactive shrimp.
Oh, radioactive shrimp. There you
Sure.
go. There you
Yeah.
go. So you said screw it.
Screw it.
Well, our
Yeah, you only
government
live
is
once.
functioning optimally right now, so
Yeah.
I don't know how there could be any gaps in our food safety at all. Flawless, no notes.
The chat saying MythBusters busted all those red light camera myths.
Oh,
Like
Oh,
all the
about the
like
spray and
spray,
stuff. Yeah, that's what I said. Like again, I
Yeah.
see the
is that in
Instagram
the
ads.
YouTube chat? I gotta get on there.
Yeah, those are my
These
peeps.
good.
My peeps. I don't know. I'll ask them if they want you on there.
Understood.
Yeah,
I
I'll
don't blame
see.
them.
I'll ask my peeps. You know,
I don't
it's kind
blame
of our safe zone right now. I don't know if
blame
you got Twitter. You own me there, so it's
I know. You're right.
You know? I'll ask. They do. They generally do.
They're accepting. They're accepting.
They're accepting of you more than they were of Tom. They the peeps. They smelled it.
Understood. Well, I never say anything bad about it.
Yeah.
But Nikki, you're headed to San Diego tomorrow.
Yes.
Oh, nice.
Are you all packed
That's
or
right.
no?
No,
Okay.
I'm not packed.
I don't know.
That's like a last second thing.
Oh, it's a last second
just
thing.
Like throw things into the
Yeah, it's your last show on the
last hurrah.
Whiteboard tour.
Last show of 2025.
But there's still spots available if you want to see Mike, Nick, and Katie and learn more about portfolio management and futures and a whole bunch of other things. Go to tastylive.com/events. I mean,
Where you gonna be?
basically, if you're anywhere in San Diego, at the Music Box in San Diego.
Yes.
I think,
I
right?
think we've done that one before too. I think we've been there.
To the Music Box?
I think so.
Okay.
I think so, if I remember correctly.
I don't know.
Sweet.
Yes.
There you go. Yeah, November 2nd. Let me see. 30, 31. Sunday.
Yeah, it's a Sunday.
Beautiful.
Yeah, we don't get the prime time. We don't have the same budget, So.
It's actually, they pay us for you guys to go there.
Yeah, they're like, it's basically free, So it's okay.
Basically.
But yeah, stop by, have a drink with
Yes.
the crew, and it's San Diego, so some good tequila, that's for sure. No, there's
true.
lots of
close,
good, literally, that's right there. So
Close to the Agave.
Agave, yeah.
Farms, yeah.
Yeah.
Sweet.
All
Good
right.
job out of you.
Frankie's over here saying he had 6 of Bob Chinn's waitresses visit him as a wealthy bachelor in Paradise Valley many years ago.
What? What in a fever dream is happening?
These are the kind of things that happen in the YouTube chat. It's a safe space. Usually
Frankie
that doesn't.
loves Bob Chin's.
Frankie does?
Always has. It's his favorite spot.
I haven't been there in a million years. That used to be like those
couple months ago.
rolls, the buttery garlic rolls.
Yeah.
Oh, yeah.
I still got them. Yeah. They're good. Good. It's a good place.
Yeah.
Good place.
We drove over from Indiana because my dad wanted to go. He's like, look, little kid, pack up your shit. We're going to Wheeling, Illinois. And I'm like, okay.
Going to Bob Chin.
Yeah.
It used to be one of the highest grossing restaurants in the country
I
Yeah.
believe it, yeah.
at one point. It's huge.
Yeah.
It's fallen off a little bit, but it's good.
Yeah.
Good. Still nice.
It didn't keep up with the times.
No, it didn't. It's
Yeah.
very old now, but like great for big groups.
Yeah.
You know?
Oh, but it was cool, like, because I remember when we went, like, they literally have, like, the freight slip of how fresh everything is that's,
Yeah.
like, flown in. It's, like, up on the wall, I think.
No, they do an excellent job.
See, now I'm hungry. Now I want crab cakes.
See?
Darn it. Hey, we got a great show
Crab
for
cakes, you don't want to go far. If you don't want to go far, Hugo's Frog Bar.
Oh, yeah, the place is great.
So good.
Yeah.
There you
I don't
go.
want to
They're some
pay
of the
for it, though.
Oh.
Those
I
are-
used to do the poor man's surf and turf, a burger and a
crab
crab cake.
Oh, that's good, yeah.
Very, very nice.
That's good people watching in that Viagra triangle
Yeah,
right
if you
there.
sit at the bar, you will get picked up. There's not a doubt. All
right.
in anybody's mind.
Look, it's cuffing season.
Speaking of being picked up.
Yeah, it's fine. Hey, we got a great show for you today. It's a thrilling Thursday here at Tasty Live as we round out the end of the month. A lot of great stuff headed your way at the top of the 8 o'clock hour. Trades from the research team. I sincerely hope the research team is wearing costumes today. But the greatest.
You're gonna be sorely disappointed.
I'm so disappointed. Like, you guys just don't. I wish I worked in a more festive office.
Yeah, we should be.
But the research team is going to present their trade ideas. Had a massive amount of earnings this week, so it'll be interesting to find something that's not being affected by impending earnings. And then at 8:40 we have Hear Me Out with Mr. Dylan Radigan. What are you talking about with Dylan today?
Ooh, we've got a couple of good topics.
I mean, they're always spicy. We're talking about Fed talk and employment and is AI going to replace us and make us all poor and UBI.
Talk a little bit about stocks, right?
We talk about stocks and just like retail trading. We're going to talk about
This is
the
an
China.
hour-long segment?
We're going to talk about the China trade deal.
Okay.
Is it real? Will it stick? Does it matter?
Will they consummate it?
Yes, yes, yes. The Sora videos are quite repulsive of those.
I wonder if Dylan is on Sora. Because you can do like cameos now. So Sora is being sued by Cameo, which is a Chicago company. We had them on the show.
Right, they're in the building somewhere.
I see they have a Cybertruck, yeah. But
Oh yeah, they do have that.
But you can do now just an AI cameo, and that's what Sora's calling it. And then Cameo was like, we're going to sue you.
Yeah, not so quick.
Yeah, rightfully so. Okay, well, Dylan's going to be talking about a hodgepodge of topics, so keep it locked here at 8:40 for that. Then 9 o'clock, our market measures, part of our Zero DTE series, Impatient Bulls, Zero DTE SPX Put Spreads, Part 2, Electric Boogaloo.
And you.
That is quite the title. You want to give us a little tidbit or a little taste of what that's going to be about?
We've kind of covered it before, or we've been doing it for the last 2 weeks. It's just put spreads and SPX, and
okay.
Now we're looking at management of these. Frankly, it's pretty intuitive that put spreads over the last 2 years have worked swimmingly. Market has gone pretty much
Not swimmingly.
They've gone straight up.
Yeah.
The market's gone straight up. So it's more of, it's something that people ask about. Why not just do the put spread? Because market just goes up every single day. And
right.
Over the last 2 years, it's worked really well.
Sure. Works until it doesn't.
Yes.
Hey, and then live from the trade desk, we got Quentin and G Money in the house.
Woo-hoo.
Quentin counting down the top trending tickers over at Tasty Trade, and Glenn on the Tasty FX. I like how the day you wear the opposite shirt of the person who's coming in. So yesterday Ryan was in, and you had an FX shirt on, and then today
that was
Glenn's
2 days
in.
ago.
Okay, but then now Glenn's in, and then you got.
I had the FX shirt for Glenn.
Yeah.
To be completely honest, I thought it was a crypto day, but then I remembered that we had Ryan and we were talking about the IBIT calls.
Yes.
That we did. So
well,
that's my fault. I'm really
it's
sorry.
always
Yes,
fun.
it is.
It's still something that this is still product.
We offer, yeah, still keeping it in the
Tasty
family.
crypto.
Yeah, there you go.
Can I do a public service announcement right
I
now?
literally can't stop you.
I sold NASDAQ futures last night about 20 handles higher than where they are right now. Please don't do it, okay? Because I did it. They went about right to where they are right here, and then they rallied about 150 handles after that. So
should I buy them?
Be very careful if you're trying. I thought I sold the top. I was able to take only a 15 or 20 handle loss.
All right,
So you bought them?
Yeah, we'll buy them here then. Perfect.
I know you maybe don't super duper believe in it, but isn't there some sort of credence to, funds and big things like reshuffling towards the end of the month or the end of the fiscal year? Like, I'm just saying, be careful.
Maybe that's what it is, but I'm telling you right now, don't do it.
Yeah, don't do it.
Be careful.
Don't do it, girl. Well, that is our run of show for today. Programming note, morning show. It's going to be me, Jamal, and Bat.
Woo!
Look at that. Kicking it off because Nick is headed to San Diego.
You got 15 handles.
I know. I was just about. I didn't want to tell
You
you.
want to take them? You might as well just take them. I mean,
How did
why
you
not?
do that? That's amazing.
Yeah, there you go.
There you go.
There you go.
Actually,
Hey.
15 handles exactly, pretty much.
You should just quit for the day, Nikki.
Well, I knew it had to be because he was perfectly on point right there. He's like, this was the spot.
This is it.
This is where I capitulated. This was the one.
Yep.
So
But we need your trade ideas for tomorrow's
Yes,
show.
we do,
So
we do,
for
we
Bat
do.
and Jamal. So if you
Yeah,
have,
Jamal's coming on because half day baby bat over there.
did you not? Where were you 5
Yeah, I
minutes
know.
ago? I was explaining
I'm getting there now. I was making him 15 handles.
Okay, cool.
Is what I was
Cool.
doing.
I was
Cool.
watching. I was watching.
But yes, trade ideas for fast market tomorrow. A 1, a 2, a you know
That
what
was
to do.
intraminute. That was a pretty beautiful thing.
Yeah, that was 43 seconds to be exact.
The stamina.
That's how good I am.
Yeah.
Hey, you want your daily dose?
Sure.
Ah,
Hit me with my theme music. Let's go.
Our leading story.
today's
Breaking
headlines.
news. Across the wire.
This just in.
Top story. Jump in.
In today's headlines.
This just in. Leading stories.
Breaking news.
Freaking new.
All right, everybody. Today is a thrilling Thursday. It's October the 30th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
I am ready for the news.
Who has earnings today?
Everybody today.
Okay, yes,
You
today.
want to talk about yesterday?
Nope, I got
Apple.
him. I got him.
We got Apple, Amazon, Coin, CBOE, ABBV, ExxonMobil, and about 100.
Reddit. Reddit.
Yeah, Reddit.
WDC, Net, Roku, Leo,
Roku like a
for
hurricane.
solar. Yeah, there's a lot today.
There's a lot.
Yeah, so yeah, check the platform and make sure you don't have any positions that
Check your own positions.
Right.
And you can do that by having a column in your position.
The indicator column, yeah.
Yeah, that has earnings, and then you just click on it, and they'll show you right away. You don't need me or anybody else.
There you go. I think they put up a list there. There you go.
There we go.
Hey.
Oh,
Oh, look at that beautiful list. Hey, getting to the first headline of the day. Fed cuts rates again, but Jay Peasy raised doubts about easing at the next meeting. By a 10-2 vote, the central bank's FOMC lowered its benchmark overnight borrowing rate to a range of 3.75 to 4. That did send Treasury yields higher. That meant bonds lower. I'm not sure what bonds are doing this morning.
yeah, 117 handle. You're 100% correct. We haven't seen the 117 handle since the beginning of October.
I hate these
you
massive
get long
bond
here?
moves.
It's a decent spot. You're kind of in the middle of nowhere. I wish ZB had good IV rank that I would look to sell something. If not, you're going to have to do, the futures one way or the other. We're about 3 ticks off of the lows. You would definitely not be buying highs. Probably
What about like the 116 puts?
you could. I would rather see you get less delta than more delta of the future, even though the IV rank is low.
Yeah, selling the put instead.
Yeah.
All right.
Yep.
What are your thoughts on maybe no more rate cuts?
Well, I mean, would they have one? From what I read, please don't quote me on it, but from what I read, one
30.
You bought them at 30. Good.
Yeah. Sold
I
them.
sold them at 30. Good. Which is 30 ticks.
Yeah.
One Fed governor wanted a 0. Another one wanted a half. The rest were pretty much in the quarter. It was kind of the guidance on
Sure.
how they were
Yeah.
talking in the
I
future.
think it was the first, or at least it's been quite some time, where you had dissents on both sides.
Sure.
Yes.
But one of the Fed governors was directly appointed by the president.
Yes.
Moran. So
Yes.
he's got, a playbook that he's like, I need to get this way. But he's one person.
Yeah.
But yes, you're right. This is the first time.
It was symbolic.
But then you're right. There wasn't also another guy. He was like, no.
Yeah.
He's like, y'all get nothing.
Right. I mean, we
hey-
had 0 interest rates, and we've had 20% interest rates. I mean, where are we? Somewhere around 3 in the orders, I think, or something like that. So
Yeah.
relatively low.
Well, the dollar liked it. The dollar gained yesterday as the Fed cut bets recede. Yen is on guard. Dollar did nudge higher in Thursday trading as traders scaled back bets of a U.S. rate cut in December. Let's talk.
Yen's
about
not on
currencies.
guard. Yen is on all fours and upside down,
Yeah.
like a dead one of these.
Dead bug.
Yeah. The yen down 605 ticks. That's almost a 1% move.
Yeah.
Yen.
Wow.
Been fun trading those FX products.
Pairs trades. Yeah. That you've been doing.
I closed out the US dollar Swiss franc that I had. I've been long the dollar in multiple ways. I'm still long the dollar against the Canadian dollar. I'm short the euro dollar pair, so I'm long dollar versus euro. I'm short the euro British pound pair because that's got pretty wide. They're very highly correlated, but that spread has really widened out to the upside. And then I'm short the euro against the Japanese yen, which has not worked. So I'm a little mixed bag here, but some of the dollar pairs, long dollar that I've had, I've taken off. And I know Ilya is certainly swimming today in the dollars.
And also Glenn will be in later,
Yes.
so you could talk more some interesting FX pair. Because Nikki, when you started, did you ever think that you'd be trading the Swiss franc?
I had no idea.
Yeah.
I mean, I've traded the shekel. I've traded the New Zealand dollar. I've traded, the Aussie dollar. They have the futures for that. But yes, I did not expect to be talking about any of these.
Yeah.
The Scandinavian pairs were never
A little kroner.
a kroner was never, that was not in my
Didn't seem like that was in
repertoire.
your
Right, you were
No.
more cronut,
Yeah.
less
Yes.
kroner. Yes.
Yes.
Not bad, by the way. Gimmicky, but it wasn't bad.
No,
Yeah.
that dude, he did something there.
Yeah.
Hey, the Fed slashed rates, but crypto tumbled on the news. Crypto taking a nosedive after the FOMC minutes came out. What up with that?
Yeah, what up with that is right.
I don't like.
109 handle, 109 and a half right now in the Bitcoin futures, down 1,600. Back near its lows, not on its lows of 108 and change or so.
They just sold off about $1,000.
They did. That's right. They're over 110 a moment ago. Yeah, no October. Not going to happen.
What's going on in your precious iBit? But
more
Coin.
day.
Coin has earnings after the bell today.
Yes.
What can we do in Coin? What's the expected move there?
Down around $3 right now. The expected move from last night, which will be updated when the stock opens, obviously, around 28.5. Probably going to hold steady there. IB rank 43. Pretty good. Coinbase has been going sideways-ish.
Yeah.
Down the last 3 days with
Yeah.
some of the crypto products, but sideways-ish.
Yeah. That's cool. Hey, well, you want to talk about just being a luck box? MasterCard is making a bold move, and they're buying Zero Hash, friend of the show, for around $2 billion. Of course, Tom's an investor.
No. IG.
Yes, but Tom was an investor, though, of Edward.
No, it was.
I thought he
always-
was.
No, it was always tastytrade.
Oh, okay.
But Edward.
Telling me he didn't, write a check on the side. He's like, here you go.
No. Edward Woodford,
Yes.
the CEO.
Who we've had on the show.
Who we've had on the show.
Super nice guy.
Yes, he always said he was the best young CEO that he ever had.
Because this was a pivot. Zero Hash wasn't his first idea. He'd
correct.
come up with something else. It's
correct.
an interesting story.
correct.
But MasterCard, I don't know if you can do anything in MasterCard, but congratulations to Zero Hash and I guess to IG shareholders.
And
Yes.
it's more like 1.5. The $2 billion would be an unattainable
I said approximately
number.
2
Yeah,
billion.
but it'll be unattainable. It's with all of the, and it's great win for Zero Hash and for IG for investing in him. So
Are you running for office?
No, but I like Edward. He's a good.
I do too.
He's
I
a
don't.
good guy.
Okay.
554 looks basically unchanged.
They reported earnings this morning, so
Yeah.
I mean this was probably part of it.
Yeah.
Sure. But it had gone from 580 to 555 or so where it closed, and it looks unchanged. I don't know if the earnings have come out yet or anything, but it looks
Same thing with Visa. I mean, Visa went basically nowhere too.
Yes.
Yeah.
Yes. You are correct.
Hey, you talked about your kroner earlier. Well, the world's largest sovereign wealth fund, which is Norway's gigantic sovereign wealth fund, advanced 5.8% during the third quarter, notching $103 billion profit amid AI optimism. Equity investments make up more than 2/3 of the portfolio, returned 7.7%. The U.S. has stated that it wants, or it would love to also have a sovereign wealth fund, but Norway's is the world's largest one. So
5.8%. What is this? Returns for ants?
Yeah, really. I mean,
5.8%. That's like an afternoon.
yeah, but but when you hear that that's
maybe a week.
I mean, have you watched like?
Have you not
AMD?
watched the market?
I mean, what the hell? What are you doing?
Ricky, when you hear that meager 5.8% is $103 billion.
Yeah, it could be a $1 trillion
Okay,
if this was on
all right.
pace with the rest of the
Calm
market.
down.
So hold on one second, and I want to get back to the Zero Hash news just a moment ago, because this is big, that's big. You know, Zero Hash raised money last month on an $800 million evaluation.
Sure, because more banks like Morgan Stanley are going to start partnering with them, and
Last month.
yeah, I know
A
everything.
month later, it's doubled.
Sure.
Maybe things are getting frothy. Maybe things were so underpriced. That's the market, right?
Yeah.
That's what you gotta consider. So
That's Chicago. No,
that's right. That's
Okay.
right. That's right. I remember when 6%, 5.8 was a good return. Now you've got
In a quarter.
yes.
Yeah, that's not bad.
Not
That's
bad.
20% a year.
Yes.
I'm making a joke here.
yes.
Yeah.
5.8%
Yes.
not being good.
Hey, let's get to all the earnings from last night. A couple of companies, maybe you've heard about them. Meta shares dropped 9% despite an earnings beat as the company takes a one-time tax charge. Meta said they reported a $15.93 billion one-time tax charge. Meta's earnings revenue came in at $51.24 billion versus $49.41 expected. The company lost $4.4 billion on their stupid Reality Labs headset that he's wearing right now.
Could have saved
and
them $4 billion.
Zuckerberg tried to defend the company's massive AI capex, saying that the company is seeing the returns. Let's talk about Meta's earnings and your thoughts.
Damn you, Zuck, and your goofy glasses. Taking dollars from my pocket.
681, you are correct. Numbers that we hadn't seen since it dropped from over or approaching 800 now back down to 680 and change. It'll be below its lows that it made on October 6th.
What was the expected move?
Oh, under 10%, closer to around 6%.
Oh, okay.
Yes.
I think it was higher than that. I can tell you
Okay.
right now. So
So
Meta.
I just didn't know if this was outside of the expected move or like right in line or.
Oh yeah, you're right.
Yeah.
I mean, it was a $50 expected move. So
right.
it's a,
They moved
yeah,
75.
Yeah.
Okay.
Yeah.
Okay. How is the IV? Like, what do you think is going to happen to the IV in Meta today, this morning?
Probably going to stay a little bit more elevated than
Okay.
normal. So maybe a post-earnings trade for our option trades today, every
Option trades
Tuesday
today.
and Thursday.
There you go. It's Thursday.
Nice.
Usually when the stock goes lower inside the expected move, volatility is going to collapse and it's the end. But since it went outside the expected move and still collapse, it'll probably stay bid-ish. It won't go down as much. So maybe you'll get a pre-earnings type premium post-earnings. Maybe something to do.
Alphabet topped $100 billion in quarterly revenue for the first time. Congratulations, Google. Google's cloud business grew 34%. Alphabet beat Wall Street expectations, reporting revenue of $100.235 billion. That's insane. The company said they're going to increase their capex to a range of 91 to 93 billion for 2025. That's up from 85 billion. Google's cloud unit, which houses its AI services, aka Gemini, showed solid growth and $155 billion backlog from customers. They will be offering YouTube employees, so behave in the chat, a buyout package. So not sure what Google's doing this morning.
New highs. 297. Let's round up $22. Being a bucker here in the market with all four indices lower this morning.
How does it feel to be the market's favorite? Did you
How does
trade
it feel?
Google,
Yeah.
Nikki?
I did. Not gonna be a great open.
Okay.
Oof.
I was kind of neutral.
I mean,
Well-
stocks go down, you lose money. Stocks go up, you lose money. What's going on with you?
No. I was long it into the move to like
To new highs,
to
which were yesterday.
270. That was beautiful. That was perfect. We stayed right there. That would have been perfect. 300. We're a little past where my happy place is.
Sure.
So
You're a little uncomfy.
uncomfy, yes, but that's okay. We're small. We'll be fine. We'll be okay. You just watch and learn.
I am. I can't wait.
Thank you.
Microsoft takes a $3.1 billion hit from its OpenAI investment. Microsoft said it's invested a total of $13 billion into OpenAI. That's pretty good. Microsoft's was weirdly hit by an outage right before their earnings. Their Azure, their cloud services went down yesterday. Also, Amazon Web Services down briefly again yesterday. It was just weird, like right into earnings. People were like, hey, how come your stuff doesn't work, Microsoft? And then Microsoft was like, well, what happened was, look over there. What did you do in...
Microsoft getting crushed down $13 right to where it was on Monday.
Boom. Boom.
No, I mean, I'm being serious. I mean, it's off of its highs that it made 48 hours ago around 550. But it's 529. 529 plan. If you don't have one for your grandkids or loved ones,
Are you okay?
get one. That's how my mind works.
Here's a company I'm not as super familiar with this company. It is like the most generic name ever. But ServiceNow. I'm not sure what services you need now, but I guess it's AI. So this is the magic word AI. The ticker now, NOW, they plan a 5-for-1 stock split, which the CEO said is aimed at making the share price more accessible for employees and investors. And I guess they're trying to get into the AI space or let more people know that they're in the AI space. The stock has hovered around.
5 to 1, you said?
I'm sorry?
5 to 1?
Yes, 5-1.
No, that's good. Stock's $900 or so. Now it's
Yeah.
$946 on this news, so it's up about $35.
Sure. Street likes it.
Yeah.
Off its highs of 1,200, but it'll be close to its, I don't know, trading highs for the year of around 1,000 or so.
Can you trade the options in ServiceNow, or should you maybe?
You know, I
No.
looked at Dees and they're not tradable. They're
Okay.
$3 wide.
Yeah.
Well, maybe things
But-
will change when it gets.
So if it's $3 wide and you're doing a 5-for-1, so you figure Maybe they'll get to $2 wide, maybe even tighter than that now. So maybe there'll be something there. Yeah, maybe there'll be something.
See what happens. I don't know if you traded this, but eBay's holiday quarter profit forecast disappoints. Those shares of that company fell nearly 9%. The e-commerce platform forecasted profit for the crucial holiday quarter below Wall Street estimates. Street hated it. eBay's third quarter revenue came in at $2.82 billion.
Yeah, what a difference 9% makes here. I mean, eBay was flirting with making highs. Now it's trading closer to $90. Back near its lower end of its range for the last 4 or 5 months or so. Remember, eBay back in August went from around $75, $80 to $100. It's been hanging out in that 90 to 100 range. It's going to be 90 this morning when it opens. So maybe there's something to do there. IV rank of 60 is going to be good. We'll see if the IV rank stays up there. Markets are fair to crappy.
Okay.
So be careful.
Maybe on the open they'll get better.
Maybe something with defined risk. Sure. eBay market makers do better. I mean, $100 stock. We don't have many $100 stocks with good movement, good IV rank. 40% monthly implied volatility. Do better.
Starbucks reported same-store sales growth for the first time in nearly 2 years. Brian Nickel, who's been tasked with turning around the coffee chain, says that the company's turnaround strategy is seemingly working after struggles in the two biggest markets of U.S. and China. I'm on Starbucks, maybe? I don't know if I have a slide for that. But the coffee chain's global same-store sales rose 1%. And a fun fact from the earnings, Starbucks coffee delivery makes $1 billion. It's $1 billion business for the company. Yeah, they do. Starbucks, you can order on the app, on the Starbucks app. Hey, and
you mean like drinks and stuff like that? Yeah, I'm sorry. I was thinking more like bulk. I apologize.
No. Like
IV rank of 47 in Starbucks is pretty good. 80. I'll round up and say $83, down about $1, $1.50. I mean,
we did that diagonal spread yesterday. I think it's going to work out.
I think
like maybe a small profit, maybe a small loss, maybe. Depending on because we're right at the money. We did the 85.
Right, it's a volatility play at this point, right?
And you got no realized volatility here.
Yeah, you did
the stock's down $1,
didn't you?
Yeah, that was a what's your assumption trade.
Yeah.
Oh, nice.
So the 90 call probably loses 80 cents. And ideally, that long call out in December, the 85, basically stays flat. So.
Yeah, that's what you're hoping. It's a volatility play for sure.
As long as that option trades for more than $3, you're good to go. So that should be good.
Well, another restaurant that did not do as well as Starbucks, and that's Chipotle. Chipotle stock plunged 13% as the chain had to lower their sales forecast, and they say younger diners are cutting back, normally seen as a pricier option in the fast casual space. I still love Chipotle.
You mean younger diners' parents are cutting back?
Yeah, Chipotle's Wall Street quarterly expectations.
Did you finally get the credit card back? you took down Chipotle with this?
No, he still got the credit card. He's all good. He's all good.
All right.
Chipotle's revenue came in at $3 billion versus 3.03 expected. Net sales did rise 7.5%, fueled by new restaurants, but still not enough. CMG, what do we do?
We're gonna be
kind of poo-pooed the bed here. New lows.
Oh no!
You don't hear that every day. You haven't actually heard that all year, probably. 32, not from this stock, maybe, but yes, but for regular stocks, 32.5 CMG.
Gross. What a pig.
Yeah, but if you wear a costume to the store tomorrow, you get a discount on a burrito. Okay.
Oof.
Do you get free guac or something? Is that
no? You just get you can get, I think, a big burrito for like $6, which is
that's pretty
good.
That's pretty good.
Yeah. Pretty good.
Well, I hope that works because I'm long. I'm going to be long stock at like 38. So GF1.
I love Chipotle, and according to the Chipotle dashboard, because I'm in the rewards program, I'm in the top 4% of people who eat at Chipotle in the state of Illinois.
See,
wow,
they should have known. She loves Chipotle
because for the gains. I love Chipotle. Anyway, Hey, Fiserv cratered yesterday, 44%. And I'm done with all the earnings stuff. This is just a stock that was just, it was the worst day ever for the fintech company after they slashed their full year guidance. FI.
I wouldn't touch this with a 10-foot pole.
You wouldn't touch it with his money?
No. I mean, it's gone from, in the last,
This year,
it's gone from 230 to 70.
Yeah.
Like, you got big
It's under
problems.
69 now. Yes.
Yeah,
Nice.
it's more. Yeah, it's down another $2 pre-market.
Yeah.
You got some problems.
You got some problems.
Yeah.
And markets aren't good. IV rank of 124.
Oh my God.
Yeah, is really telling you that the stock in the next year can double or go to zero.
Yeah.
So tread lightly. Markets in here are not good, and the put market, some of them, unless they're going to tighten up after the market opens, but zero bid at $5 kind of thing. So you got to be careful.
OpenAI is laying the groundwork for a juggernaut IPO that would value the AI company at $1 trillion. I don't know if a company's ever, it would be the biggest IPOs of one of the biggest IPOs of all time. They're considering filing with securities regulators as soon as the second half of 2026. So they're doing this piece by piece. First, they were a non-for-profit. Now they're a prop for benefit, something, I forget what the designation is. And now they're like, okay, now we have our eyes on global domination. We're going to file for an IPO, maybe. I don't know.
Yeah.
$1 trillion
Has to be the biggest.
is
there's
crazy.
only a
Right, I know. Well, I'm just going to say one of the biggest, so
Yeah.
I cover my butt.
Yeah, but definitely the biggest.
Yeah.
It's I mean,
That's just bananas.
the numbers are crazy, but it makes sense given all the dollars that have been thrown around here. I mean, you got to be worth $1 trillion if you can throw $100 billion at Oracle and $100 billion at this other company and $5 billion here and $10 billion there. Then, I guess the problem would be if it isn't oversubscribed, which I would guess is a very low probability. I think everybody's going to want.
I don't know about that, but I agree with you. But
You know what I'm saying? Like you think this isn't going to be a double, or at least
I do.
The day it opens.
That would make it oversubscribed. I mean, usually.
Yeah, that's what I'm saying. Like,
I thought you were saying maybe it's not going to be. I apologize. I misunderstood what you're saying.
oh yeah, that's what I'm saying. The risk is that it's not going to be oversubscribed, which I think is very minimal probability.
Right. Yeah.
Like I think everybody's going to jump on this to get some of these shares.
I mean, I will say, just as an anecdote, I used ChatGPT yesterday because I was making a video and I needed an image and it was late and there was no one here. And so I just typed it in and it literally took 30 seconds. It looks amazing. Yeah. And I was like, I hate that I like this.
Yeah.
But there were no artists here because they had gone home. Anyway, this is funny. A Snowflake executive had to file an 8K with the SEC after an executive shared unauthorized financial guidance in a street interview with an influencer on Instagram. What are we doing? The video was posted by an Instagram account, and it features Snowflake Chief Revenue Officer Mike Gannon. And in the SEC filing, Snowflake had to reaffirm their previously issued guidance, and they were just like, yeah, this dude is trying to talk to a pretty girl on the street, trying to flex on some numbers. And then he had to file an 8K form.
Snow is at all-time highs. It's going to be a couple of dollars off, but all the indices are down right now, about 1/3 to 0.5 percentage point. So market's a little bit softer, well inside the expected move.
Amazon set to report their earnings after the bell. The juggernaut of an e-commerce retailer is going to have some things to answer for, whether that's their web services or their AWS, their cloud, the retail arm of things, the AI through investments in Anthropic and just other stuff. Will be interesting to see. But Amazon is opening an $11 billion AI data center in rural Indiana. And fun fact, I know the town where this is going. It's going in a place called New Carlisle, Indiana. So my dad used to work by there. But when I was 10,
that's near is it by Carmel?
No, that's Carmel's by Indy. New Carlisle is in the northwest part, sort of the state. You can look it up. But when I was 10. We got a dog from New Carlisle from a farm. It was a border collie, and his name was Raisin, and he was my best friend. But he came from a farm in New Carlisle, and he was so cute. He was.
I've sent dogs to the farm. I don't know if I picked one up. Maybe you picked up one.
But this is just wild that these massive tech companies. Because if you drive through Indiana now, you'll see all the. It's just weird. It's just I don't know.
Cheaper land.
Yeah.
What are your plans for Amazon's earnings?
Amazon Ivy rank of 44 is pretty good, son. 227, down around $3 this morning. It has earnings obviously after the market closes today. Well, not obviously if you didn't know. It's after the market closes today. Good Ivy rank of 44, trading near its highs. What are you thinking?
Well, we sold puts yesterday, the 210 puts in November. We did that for fast market. I also have an upside crab trade. Long the December 230, short the 240s in the weekly. So I'm kind of skewed upside, but kind of inside up.
With all these high flyers from yesterday being a little bit soft, I would be a little bit leery with that.
What do you mean? They're half and half. You got Google.
Google's the only one higher. I mean,
Yeah, there's 3 of them.
okay,
Heard of 'em?
majority wins.
Okay. Eli Lilly, which I think had earnings this morning.
Big move to the upside. It was $40 a moment ago. I haven't looked in a few minutes. It looks
30.
like $30 now.
Even up
Well, they announced yesterday they're partnering with Walmart to offer the first retail pickup option for discounted vials of its weight loss drug Zepbound. They're going to allow U.S. patients to access vials of the blockbuster injection at direct-to-consumer prices, but through retail locations for the first time. Walmart has 4,600 pharmacy locations as well as home delivery.
We're talking about Walmart now or Lilly? Because Walmart's been on a
Both.
slide the last week and a half or so. 102, decent Ivy rank of 33. It doesn't have earnings.
gave up the OpenAI bump.
Yeah.
It did give up the OpenAI.
That was the OpenAI shopping cart
Right.
investment, whatever that was.
Yeah,
that one's gone.
whatever that air was, yes.
In a hilarious but I guess potentially harmful mix-up, if you shop at Aldi stores or Giant or Martin stores in Indiana there, look out because the Texas food manufacturer has recalled its taco dinner kits because instead of taco seasoning, they are now packaged with cocoa mix, which is a problem if you're allergic to cocoa mix. Also gross if you're just straight up making tacos and you're like, why does this? Oh God, no. I don't know how this happened. I don't know what kind of factory this is that they make tacos, but also cocoa. But
Yeah.
what I know.
It must be the packet that got. I don't know if they.
Yeah, there's pictures. It's a white nondescript packet. And yeah.
That's pretty funny.
But the casa,
Safely say I've never had this.
the casa mamita
yeah, this
taco
is.
kit were sold in 28 states. Yeah, they've been recalled by the FDA. So don't eat them. No
That's
bueno.
pretty funny.
They will
Yeah, I don't
taste
have
like
to look in the
chocolate.
pantry for this.
Yeah.
Yeah.
I rock with the taquitos. You get,
Oh, taquitos?
they get those.
Those are
What
different than Takis, right?
Yeah, Takis are the chip.
Yeah.
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 Taquitos are just like they're frozen and you throw them in like the air fryer or the
Got it.
oven.
Got it.
You
got it.
just
Like a
munch. Yeah.
enchilada? No, what's the?
No, it's like a tortilla like with meat and it's like
It's all the same.
yeah,
isn't
it's
it?
all
Like
the
a
same. It's like
tortilla roll up.
yeah, roll up. It's
Yeah,
like Taco
yeah.
Bell's thing.
Yeah.
But you pop those in, you get them.
Ooh, don't eat a Taco Bell unless it's breakfast.
Okay. Hey, can I finish here? Or you guys want to go? I don't want to take too much time from the
Sure,
research.
sure.
Last
No,
story
no.
here. I've never heard of this guy, but congratulations. Aiden Hutchinson has now been given the most guaranteed money ever for a non-QB by the Detroit Lions, a 4-year contract. It was worth $180 million with 141 of that guaranteed. He's only behind Micah Parsons. Again, I've not heard of this guy, but congratulations. Ahead of TJ Watt, Myles Garrett, Danielle Hunter, and Max Crosby. So congratulations to you, young
Lions,
man.
they're in the
He's
running
really
for the
good,
Super
too.
Bowl, right? Aren't they? I mean,
They're a little
still up
spotty.
there.
They're okay.
Yeah, they're a little spotty,
They
but
had
they're
some
up there.
injuries, I
Yeah.
think, but
Yeah, they're up
I
there.
think they're a dark
Yeah.
horse. I watched them. They played good.
Yeah, they're good. I mean,
yeah, but we
well
took their
coached.
guy though, so
Yes.
like that's
Yes.
hard
Yes,
for them.
It is. You're
They're
right.
still a well coached team.
Sure.
Yeah.
Yeah. Of course, I love Dan Campbell,
Yeah.
like for personal reasons.
You're allowed. You're allowed.
Hey, finally today for my viral video of the day. I'm just calling this. I love men. I love dudes so much.
Wow.
Just-
Okay.
Wow.
Just here we go. Watch this.
Oh, I like this.
I was gonna jump in and grab it, right?
I could jump over.
Oh yeah.
Did you just take a puff of cigarette or something?
Like a vape.
Oh, vape.
You will.
Now, did he make it? I think he made it. Like, I gotta give him that.
He kind of, but he.
He was right.
That's not
there.
even the guy that jumps. He was just like testing.
Yeah, you
it.
will.
Oh, he's not the guy that jumps.
He will.
If you're doing a long jump, you got to give him where his feet land, not where his body lands.
No, if you're doing the long jump in the sand, it's
Oh, it's
the
your
last
hands,
point.
it's the last
It's the
point.
last
Oh.
point.
Yeah, you're right, Nikki.
Yeah,
So-
you don't make it.
He don't make it.
He don't make it.
I
And
I
fall
love
in the
men.
water.
He dead.
I love men. I love the lads, as they say.
We make it interesting, don't we?
Yeah. I love it. No notes.
Beautiful.
What's coming up next?
We're going to take a quick 90-second break, come back. We got more Tasty Live after this with Confirm and Send on this Thursday, October 30th, one day before Halloween. Market's getting a little scary, down 27. Even the S&Ps are back 97.
Ow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a look at the market. Even the S&Ps, man, it is so hard to trade futures directionally overnight, in my opinion. I wanted to get short the market 100 handles ago on the NASDAQ and got shook out 100 handles over that. We trade up to 26.4, I'm rounding, now down to 26.1, a 300 handle move. We're down a little over half a percentage point right now on the NASDAQ at 110. Just made a new low under 26.1. New low for this little session, as you can see here, obviously just off of highs. NASDAQ down 158, even the S&P down 27. Russell down 12, all down around the same. Dow down 160 and change. With Microsoft leading it lower. Microsoft's been down around $15-ish. It's down around 13, 14 right now. Volatility, after rallying the last 2 or 3 days, going sideways right now at 1880. When I woke up this morning, when even the S&Ps were close to unchanged, volatility was in by about 40 cents. It's now down by about 5 cents. So it's rallied ever so slightly, hitting at 1880 here. Bonds, 117.15. You sold some bond puts this morning. 5 ticks off of their lows. Maybe you're up a tick or a tick and a half or something like that. Bitcoin down 2,300, under 109. Bitcoin looks sick. It's been looking sick even with the rally. Never got up over, 120, 122, something like that. It was always under 118 or so. Now 108.8. Let's just call it 109. Ethereum doing the same. That's 2% move in Bitcoin. Ethereum down about 1.5%, $62 to 38 and change. Talking about the futures here, down 98. Oil down 51 cents, back under $60, sliding last 5 or 6 days. Still in the middle of its most recent range, lower end of its range for the last couple of months. Gold down 19. Had some good movement. A $100 move last night, down about half a percentage point to 39.80 after trading up to about 41 yesterday, I believe, close to it.
Yeah.
Silver down 20 cents. Nat gas up 6 and change, 3.8. I got to mention corn, wheat, and soybeans. Soybeans with a huge run last couple of weeks, going from basically the doldrums of 1.2 up to 1.1. Oh, let's round up 1.12, although it didn't get there. The yen is doing completely the opposite, which means the dollar is getting stronger. Yen down big, although the British pound, I believe, is unchanged, down small now. And the euro is probably down small also. It is. On the earnings front, which we have to mention, Starbucks, if we go in that direction, down around $2. Carvana down around $20. Microsoft down around $13. Google up 20. Meta down around 70. MasterCard was up 1 or 2, and Lilly was up around 40. And those numbers are subject to change, obviously. Let's take a look here at confirm and send, and then we get straight to trades from the research team.
Yeah. Think we get long some oil?
How are you going to do it? Ivy rank,
like selling the 55 strike put?
Yeah, you certainly
in like
could.
December.
Sure.
47 days out.
Sure. Ivy rank of 29 or so.
Yeah.
Been going sideways-ish to a little bit higher, creeping. Yeah, sure. Directional play. I like it.
Yeah.
Beautiful. That was easy.
I mean, it's 1 tick wide.
Well, that's
Trades in mid-price.
Yes. Yes. That's typically how you get filled.
Cool.
Let's do it.
Confirm and send. Let's do it.
With it being the heart of earnings season, it is yesterday and today. I mean, today you've got a plethora of Apple, Amazon, Coin, just to name a few, Reddit, as you said. If I do an earnings trades, would you back away from zero-day SPX or maybe use zero-day SPX differently, i.e. hedge against earnings trades, given the amount of volatility an earnings trade can introduce?
Yeah, I think if you are doing more than your normal allocation of kind of zero-day trades via earnings, like these shorter duration binary event trades, I certainly think you could lay off the SPX and just lighten up, those binary event trades. I consider the SPX zero-day trades to be kind of binary event trades because you're just trading that day. So
binary event, yeah.
Yeah, so it makes total sense. I mean, for the big earnings, when you're talking about the net of the earnings from yesterday are in totality probably not good for the market. And so if you're doing put spreads in SPX and you're leaning long Microsoft and Meta and Google in your earnings trades, you're on the same side of everything. So maybe, if you're thinking about it from that perspective and you want to do all of these things, maybe you do, a short position in SPX versus longs in Meta, Microsoft, Google, like that sort of thing. Like you use it as kind of a pairs trade versus, I think either way, you got to kind of differentiate away from the zero day or away from the earnings trades.
I think you hit it first when you said it's all about the buying power. If this earnings trade uses, more buying power in your portfolio, then you got to stay away from the zero day. If you're not using more buying power than you normally use, I mean, the 0 days are going to be over before the earnings come out. I mean, the bell rings at 3, earnings come out afterwards. There's going to be no movement. So you can for those who trade earnings and those 0 days, I think you can trade both at the same time. The world is your oyster if you want to. Volatility staying steady here or up 18. Let's take a look. Trading 1880 up ever so slightly. Expected move almost $37. You remember yesterday with all the other news of
$20 or something?
Yeah. No. It was around $37, just about what it is today. So I think you're getting the benefit of high implied volatility without having to worry about the Fed speaking. So today might be the day to do a 0 day if you have extra buying power. We'll talk about that after the bell. Next one, please.
For scalping, can you please rank which products you prefer using among futures, stocks, or options? Also, if you use options, would you buy them or sell them? Good question.
You prefer using among futures, stocks, and options. I mean, scalping. Like, I love to trade pure options. And if you notice on everything I do, it's basically pure option trades. But if I had for scalping, futures are the best thing. And I've been harping all morning about how hard they are. I mean, I sold futures in the NASDAQ 100 handles higher, 130 handles higher, and lost 15 handles. So after being up 20 or 25 handles on them and not taking my profit. So, I mean, futures, you have to have conviction on them. Trade them small enough. Maybe I traded them too big. If I traded them small, I probably wouldn't have done anything and said, let the market beat me. So futures are first. I can't put stocks up there because it just uses too much buying power, but that would give you the best one-to-one, not best bang for your buck, but that's one-to-one on the movement of the product. So I'd have to go futures, options, and then stock.
Yeah, because the options you can use in the money options as a synthetic stock position, which is, and if you're doing like a weekly expiration for those options, or even some of them that have like, the close to dailies now, you can get some bang for your buck.
You certainly can.
And then using options as a scalping vehicle, you're probably using them from the long side. I mean, you're buying in the money calls to be, upside scalp, in the money puts to do a downside scalp. I typically am not looking to buy out of money long calls or puts, for most of the trading.
Very good, sir. Next one, please. If you were asked to create a course on market awareness, what would you teach? How would you explain to someone new how they can develop market awareness?
I think building a watch list is probably the first step I would do. Putting the futures on there and just, understanding the futures and all the different products that are traded from, the indices to oil, basically everything when you go through the market. I mean, that's the key is understanding those and looking at them every single day. I mean, like you kind of build that market awareness, through just repetition. So I think building a watch list is probably the first thing I would do. The next thing would be, actually putting some trades on and participating in markets and seeing how options move and how time value plays into options, how correlations play out. Like if you're, long the Meta and you're short Microsoft, you see those kind of play out in some way. So I think those are the two ways to do it is
being a voyeur, right? I mean, this is one time when being a voyeur is a good thing.
Well, you can't do that for too long.
No.
You'll watch the futures for a little bit and then put some trades on and build a watch list of stocks that you're interested in. Whether you think they're undervalued, overvalued, you like the product, what their product is. It doesn't matter what the reason is. Just make something where you can look at it every day because that's the only way you build that market awareness.
Oh, you're 100% correct there. But you have to watch, right? And the only way you can watch is by doing. You do it small, right? Just always do it small. Next one, please.
I'm interested in opening an account with tastytrade, but I've never traded options. Your content is amazing, thank you, but extensive to the point I am almost overwhelmed. It is like a fire hose. Can you please suggest a starting place for learning as well as which strategies you would consider to be fundamental or foundational?
I wish you were answering this, and obviously you can after I'm done, because you really should, I think, to follow the
We have a Learn Center, which is greite.
Yeah, which you were instrumental in doing, I think, is the place to go.
Yeah, you get our strategy guide, tastylive.com/guide. You can get that there. But yeah, start with the learning course, get through that. And again, I think this goes to the previous question. Get in the open an account, get in the platform, build a watch list. Start looking at futures, start looking at what we're talking about, and look at the charts, and just kind of get familiar with what's happening in markets, and then put some trades on. I mean, that's you can get as small as you want.
You can get as small as you want in the largest of stocks. $1,000 stocks, you can have $500 worth of buying power, and in a $50 stock, you can have $500 worth of buying power.
Yes,
with options, but you have to learn how to put on a vertical spread, which is not a difficult thing to do. If I can do it, you can do it. Anybody can do it. You just have to learn how to take advantage of what you see on the screen, and you go through it in that guide, which is pretty nice. So that's the first place I would go, and then look at the follow page. You know what I mean? Go on there and just see what somebody else is doing, and maybe just watch that trade for a little while and see how they adjust it or take it off or have pain or whatever the case may be. If the assumption fits yours, maybe you look to do the same thing as they're doing. But remember, if you don't own the trade, you probably won't be successful in the trade. Like, you have to own the trade. It has to be your
Gotta have risk.
It could be an idea brought up by somebody else. I mean, I get 1 million of them, you get 1 million of them by other people, but you have to own the trade yourself.
Yeah. Totally.
Let's take a quick 90-second break. As even the S&Ps just made a new low. They got down to 68.88. They're about 5 handles off of that right now. NASDAQ down 160. Russell down 15. And the Dow down 200. Volatility down by 8 cents. We'll take a quick 90-second break and come back. We got more Tasty Live after this with trades and the research team. Next, it's Tasty Live.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of Jersey Shore get overexposure. I'm too Titanic for you Twitter and twist. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What? What?
Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick.
Retweet.
Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I make it real easy for family to talk. I make ex-girlfriends real easy to stalk. I show you life in real time that's completely amazing. I show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars, Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got 1 million customizable backgrounds.
It's so totally boring.
My card's on the table, hash mark. Facebook is disabled.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Trades and the research team. Who's our first researcher? My man Sahil, how are you?
Doing good. How are you guys?
I'm sorry. You got a big smile on your face. How come you got a big smile on your face? You're one of the happiest guys I know.
Because of what you guys say during the break.
I know.
Go on air. Okay. You guys say some very questionable things.
See, he used to tell me Barry White. That's what
Barry White's good too. Barry
Yeah.
White's good too, but this is better. You always have to improve, son. If you don't improve, you're going backwards.
Omaha.
I see. Okay.
It's, you know. Yeah.
Sade. S-A-D-E.
I think anything
Check
you
her out.
guys...
Is this 1982?
It doesn't matter.
Is this
It
old?
transcends the time.
Oh, okay. Yeah. All right.
Anything you
telling
guys
you.
mentioned from back in the day.
I'll check it out.
Questionable some.
Oh, you? Oh, my God. It'd be a short thing with you. You got a lot of talent. Yeah.
Well, I mean, I have a... Yeah.
Wow, Tony. Okay.
I hear Beth.
Oh my gosh.
Okay. All right. Yeah. No, I'll give it a try.
I'm trying to help you here, okay? You're not giving me a lot to work with. I'm trying to help you here.
I'm beyond help. Gad has tried to help me many a time, okay? It's not working.
What do you got for us today? A trade idea.
So how are we feeling about all the stocks that are entering the AI market, the AI boom? Do you guys think there's an AI bubble like there was in the late 90s with computers? You think... Or you
It's
think
certainly
all
set up
priced
to
into
be
the
that
market?
way.
Okay.
It feels a little frothy, but I think it.
Markets at highs, these valuations are at highs. Company that don't make money or are giving out money.
Yeah.
I mean,
I just think the numbers can get even.
I finally have a trade I think that Nick is not going to like. He takes pretty much anything, way more than Tom.
Yeah.
I think I went a little bit too far with this one.
Right. Okay.
I'm
What do you
trying to
got
come up
here?
with some interesting place. So PayPal is now the partner with OpenAI, the official pay partner. Nobody uses PayPal. I've been hearing. So
That's what I said. I was like, who
So I
cares
don't
about?
exactly know why they partnered with them. So in hopes of the AI boom having some sort of juice, I think it already came and passed with this stock, but maybe a little bullish play.
It rallied like $8 on earnings. It
And
was
then
at
came
like
right back.
and it came right back to 70. It's
It
up.
went from right here to about almost 80, 78 or something like
Yeah.
that. Now it's back down to 70. It's actually up.
In 2 days.
Yeah, in 2 days.
I mean, that was a 2-day move. But we
Right
had
up and then right back down. People are realizing now the stock's not it.
we had puts in here, short puts.
Okay.
We have puts. What does we have puts? You're short
we
puts.
had them.
Yes.
We had them. We
We have
closed them.
We're short puts already. Yes.
No, we're not.
Oh, we're not. I
We're
thought you
not
said we were.
short puts. You have you're looking at the account. You can look it up. My
didn't
God,
look,
are
I
you
just
blind?
took
They took them.
Blind and deaf
See,
now?
I go on the follow page, see if you guys have a position.
Yeah,
you
no,
guys
we
don't
took-
have one, so that's why I put it on. So
See? You see? He
responsible,
knows.
okay.
So we sold puts, and then we closed them after earnings. So we took some profit.
SMRT.
And now we don't have a position here. And now the stock is back, and we actually sold the 65 puts in November. So now we'll look to do them in December.
Very good. A little longer.
So I
dated.
don't
like
hate
that.
this trade. I like this trade. Ivy rank at 30. Oh, we got a little ding too.
I see on the show we're all friends. During the break, we say whatever we want.
Yeah.
Okay.
Yeah.
See how it is. Okay.
Since the stock is up a little bit, and I know it's fallen off, what about a Jade Lizard?
Yeah, we could do
Like
that.
you could do like the 72.5, 77.5. You're never going to get $5.
You guys had a Jade Lizard research piece yesterday.
Yes, we
Played into
did.
that. I should have played into that.
He doesn't remember that because he's old and decrepit.
Short-term memory is going.
Short-term memory.
But my long-term memory, Sade. Remember that. remember that.
I will
That's still
remember
working.
Yeah.
If she doesn't live up to the hype, I'm coming to blame you. Okay.
It'll work. Even for you.
Oh,
Who's our next researcher?
Yes.
A man who needs no help. That's right, my man Gad. How are you, brother?
I'm good, always good, healthy.
You are good. Healthy, did you say?
Yeah, healthy.
Yeah, you know what? That's the main thing, my friend. That is the main thing. If you keep that, you'll be solid. You can fix everything else. You're right.
Healthy.
Right. Good
I'm
job,
saying
buddy.
this because recently I've been I lost like my best friends, like in accident. They did accident.
wow. Say it again?
They did accident.
It was an accident.
Oh, wow.
So, and then those two guys, they died. So
I'm sorry to hear that.
Wow. Okay, that's heavy.
Brutal.
It's a little bit too heavy for me at 8:15 in the morning here. I'm sorry.
Yeah.
Yeah. What do you say, man? That's
yeah, that's why I say I'm happy, healthy, and good.
Yeah.
Yeah.
You got us.
Yeah, we got us.
Yes. Yes.
Awesome.
All right, well, let's pivot here.
Yeah, what do you got for us here?
I such the
I'm gonna tell you something somebody told me. So when you lose a loved one, if you mention them and never forget them, then they're never really gone. So like when I lose friends, I try to remember their memories and their stories that I had with them, and I try to bring it up from time to time because then they're never really gone. So that's why I mention my mom all the time. Try to mention my dad, but he's kind of in purgatory. But you just mention those people, and they're never really gone.
Yeah.
So they're with you all the time. All right, what do you got for us, man?
So we got Oracle.
Ooh.
So since September, Oracle has been the highest price was like 330, and the lowest has been like 240. That's why I choose earning candle, basically.
Yeah, Oracle's been kind of the bastard child. You have to go from like the 200 handle up to about the 300 and change handle.
Yeah.
It's back down to 275, back in the middle of its range. I think an iron condor is the right strategy for this $275 stock. It's got earnings coming early December.
It's early December, yeah.
Yeah, I think it's a December play. Markets can be a little wide in here, but again, $270 stock or something like that. So down a little bit today.
I like it.
I like it too.
We'll add this to the list. I think we're 2 for 2.
Yeah,
I think
we're going to do
this one
this
is perfect. So.
Yeah. All right.
Cool.
Good job. Good job out of you.
Thank you.
Who is our next researcher? My man. Hi. How are you?
I'm doing great. How are
Early
you?
bird gets the worm. How you been?
So far, so good.
Oh, okay. I'll try to change that today before I leave. All right, awesome. What do you got for us today?
I got a post-earnings strangle for EMPH.
Ugh,
I know Tom thinks that. It's been a while. I haven't touched it, but price is low.
Yeah.
A decent IVR after earnings. So I just try to see where the bottom is.
Oof. Yeah, well, you're there. I mean, I don't think it's ever been lower that I can remember. It is $30.65, down around about 65 cents. IV rank at 39 is pretty good. You're limited in December with $5 wide strikes.
Right, so that's why I actually use November. It's a short play. So any bounce or drop in the IV, I'll close it. It's not a big play.
Yeah.
It's only less than $300.
Yeah, that is
profit.
that is the good thing.
Yeah, $30 stock. It's fine.
You maybe can even go down to 29 now that the stock's down another 60, 70 cents this morning. Try to make it a little bit more.
Yeah, but the credit is how much? $2 now?
Yeah, it'd be hard to see, but yeah, a little over $2.
Okay.
That I can see like 240, depending on where to.
I'm kind of slightly bullish. So this one is.
Then you would stay with your strikes.
Bullish with the strikes, but actually neutral on the delta.
Right.
Yeah, because you have the upside skew there.
Yeah.
So.
Yeah, I mean the stock's $30.75, and you're selling the 30 puts. Definitely a bullish on the strikes scenario here.
Yeah.
Yes.
Maybe look at December, just doing the 30 puts there. At
Just
$2 and change.
And then you guys are more bullish than me now.
Well, it's just playing what are you going to do?
Yeah,
it's either November with 22 days or December with 50 days. He's just trying to give himself time to be right. His break even would be around 27 and a half. Your break even is going to be similar.
Yeah, it's right there.
You're November,
the
he's December.
risk.
Yeah. 6 of one, half dozen of another.
Fair enough.
But I like the December. If I had a default December, I might. If I had a default to one of the two, I might go December, just because 22 days seems like the stock has some movement to go. I might actually look to sell the 45 calls just because they seem like a rip up.
45 call. What is
45 calls are trading for around
delta?
55 cents or so, about a 12 delta.
12 delta.
I mean, since he's going at the money and the stock's going to be a little bit lower this morning, he's going to have 50-ish deltas. He'd have 30-ish deltas on the whole play.
Right. What's the point of selling 12 delta call? I think short put probably better, right?
I say the same thing to him. Like,
who is our next researcher?
Thank you, Kai. That's good. We'll put that on
too. Black Cat, this is your time of the year. I know. So I didn't ask the other guys, and I should have if they were dressing up, but I'll ask you. Are you dressing up for Halloween?
I am dressing up. I don't know what it's going to be yet, but we're trying.
You're late in the game. I mean, this is like the bottom of the 8th or something.
You go to
like
Spirit today, and there's nothing.
Oh, you got to do homemade.
Yeah, you can't.
Well,
you're done.
I had a revelation like a week ago of like what I kind of want it to be. And it's a total gamble whether everything's going to arrive on time. So default's going to be Trinity from the Matrix because that's just easy.
Yeah, that's a classic.
Which one?
You guys seem
Trinity
like you have full leather, full leather suits, right?
Yeah.
Full like latex suits. It's so easy.
Yeah. Just don't play any Sadie.
Sade.
Yeah.
You know Sade, don't you?
I know Sade. I looked her up because I'm like, she doesn't have an R in her name, does she?
No, but you're
She
from
does
New
not.
York. That's how you say it.
Yeah.
You say Sade?
You have to. Maria. R's wherever they belong.
Idea.
Orange. Right. Orange.
Orange is a new one. I haven't heard that.
Orange.
Yeah.
What do you got for us?
Oh, I don't even know anymore. Let's look at IBM.
IBM.
Don't throw shade on IBM. IBM's been a big mover.
Don't throw Sade on IBM.
This is the chart of the century, this thing.
Yeah.
This thing is
IBM
nuts.
rallied about 25 handles the last couple of days. What do you think about doing in here?
I was looking at neutral, maybe because I'm crazy. I don't know. With something like this, I just when I see a big run up like this, I kind of expect things to calm down a little bit, and maybe that's, I don't know, a bad idea. I don't know. But neutral is just always kind of my default directional assumption with something like this. It's IV rank of 28, no earnings anytime soon. So outside of the earnings cycle. And it didn't have very much like movement this morning. It's down a couple bucks, but I thought like, hey, let's maybe put on a little baby trade. It is adjusted for the couple dollars that it moved down this morning. So I'm looking at the 275, 345 short strikes, $10 wide. I don't know. I have a tough time making directional assumptions. So this is just kind of my go-to. What do you guys think?
You know what? I don't know if you're going to be able to get filled at anywhere near this price.
The spread, the markets have not been good.
Not good.
I don't know. It's probably because of how violent the move has been in both directions that the market.
I put it in at $3 and then adjust down.
Yeah.
If I could get anywhere near 275, I know you got 273 up there, but if I can get anywhere near that, maybe it's a trade. I mean, you're really selling the 15 to 20 delta, depending on where it opens, strikes here, which is I like the area. I like the IV rank is okay at 28, but I like the probability of success on there. So if I could get somewhere around your price, that might be good. I think it's gonna be hard pressed to get it, but we'll see.
I think it's gonna be tough.
Never know. Maybe it'll be a Halloween miracle.
Oh, Halloween miracle! That's my favorite kind.
Julia, thank you, and thank the rest of the research guys. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with EMA/S&P down 29. The opening bell is next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here.
Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live in about 3.5 minutes here. E-mini S&P futures down 31, languishing near their lows, about 5 or 7 handles off of their lows, which they just made a few moments ago. NASDAQ down 145. It, too, is near its lows, about 30 handles off its lows. Russell down 17. They're on their lows. That's the weakest of the group here. You can see 0.75 percentage point versus 0.5 percentage point for everything else, with the Dow down 215. Volatility, red, down 2 cents, small red, basically unchanged, 1883. We had just the opposite the last couple of days, where the market was going higher and volatility was going higher, as you can see here by this chart, right? Last couple of days, market has been rallying and volatility has been going higher. Now market's going a little bit lower and volatility is unchanged. You might think volatility is broken. No, it's just predictive. Jay Powell talking, a lot of earnings coming out, more earnings coming out today with Apple and Amazon and Reddit and Coin and SIBO and a bunch of others. Volatility is going to stay bid here at 1885. Even if we rally a little bit, you would probably get, I think the lows are in for volatility. I don't know if the highs are in at 1926 if we go a little bit lower. Bonds down 27, 117.11, about 2 ticks off of their lows. I know you sold some bond putties that are probably unchanged or even right now. Bitcoin getting a little sick, 109, under 109. Ow! 108.80. Ethereum down 93 cents, actually a bigger move on a percentage basis on the futures. I digress. Basically the same. Oil down 55 cents, under 60, mid-range. Gold down
sold the
7.
Puts there.
Say again?
Sold puts, 55.
In oil.
Yeah.
Yep. Got it. Gold down $16, $17 to 39.83, just under 4,000, a 0.5 percentage point move there. Silver doing the opposite, up 2 and change. Soybeans with a big move to the upside. I don't trade a lot of soybeans. As a matter of fact, I can't remember the last time I traded soybeans. But they've had a monumental move the last 2.5 weeks or so. Some of the earnings plays from yesterday are going to affect the market. We'll go to the biggest one, Microsoft, hanging in there, down 12. It was actually down a little bit more, 15, 17, that I saw earlier. I'll go to the other side now. Google's really the one that's up this morning. of the big names. Sorry, if I can spell right, I would get it up there. Google 290 up 15. It too was up around 20 or so earlier today. And Meta, and we're just set to open here in a moment. 668.
I got long another NASDAQ contract here. It feels
so you're trading them from the long side. I was trading them from the short side, and like when we had the break a moment ago, you're like, should I nibble on another one here? Like I'm bearish, so I know. It makes it hard for me to say, yeah, you should probably scalp them. So you're on your own here today. So I was bearish last night and got shook out. So I'm on tilt.
That's fair.
Okay? That's where I am right now. I have FOMO. I had them kind of thing, and now I'm not clicking on all cylinders.
There's our bell there. I don't know. I just feel like you got volatility.
I hate trading futures. Go ahead.
Yeah, the micros. I mean, we're small. I'm not trying to
I gotta get Johnny in them. If I traded them small, I would have sold out the up move. I would probably have profits. You're right.
It's not a core part of my trading. I mean, this is just kind of engagement trading here.
Yep.
You take small amount of risk, but I don't know with where volatility is. I mean, like you're not seeing vol really move.
It's had a nice 10% move in volatility on nothing in the market. I mean, you
got to fix it 16 and change. It just feels like, it's kind of a mundane move. I don't know.
Listen, you can't be right every day. It's okay if you're going to be wrong today. Let's take a look at what's moving the market here today. We'll go to the downside. Meta down big, 85 or $86. That's an 11% move on Meta, well outside the expected move. Carvana down $45. It's a 13% move on Carvana. eBay down $13. Did it too have earnings last night?
Yes.
I got it. eBay doesn't have good markets to trade, but it too down 12% or so. Tesla down 11. It's a 2.5% move. Microsoft down 11. That's a 2% move. Roblox down 11. That's an 8% move in Rose. Taking some stocks out to the woodshed here. These are big moves in one day. CMG, what a pig. Down 20%, $8. That's the most. That's the most disappointing, I think, of all them. The rest of these stocks were out at or around their highs, coming off highs. Now you got CMG can't get out of its own way. Let's see what else is moving this market. MSTR down 6, unchanged. United Healthcare down 7. Amazon going into earnings down 6. Boeing down 5 or so. Baba Oakley down about $6 or so.
Yeah, OKLO. They did like a share offering of
never a good thing on a company.
$3.5 billion or something. Not that should surprise anybody. I mean, the stock was like
I'd offer $30.5 billion.
I agree. Yeah. I mean, I don't know why they stopped there, but that's probably helping a lot of people with a little bit of the downside move.
Let's see the Buckers. Lilly up 22 for earnings. Lilly was up around 40 earlier. Lilly's always one of the biggest movers. Not going to be one of the biggest movers today with some of these percentage moves that we've had being double digits, but it is up 3%. Trading at its highs, but not as high as it was pre-market. Google up 12. Apple up 4 and change. Weird market with Apple. Google higher, market down by 0.5 percentage point. So maybe you'll get something, son. We'll see.
Yeah.
GLD up 280. A little surprising there with gold down $12. That's because gold trades 24.5 pretty much. I'm talking about the gold futures. GLD closes and then opens. So you'll get a little bit of disparity. IBM up 75 cents. I know we were looking for a trade in there. Haven't done any of the trades from the research team that I can see as of yet.
Yeah, you want to put some of those on? So we got.
Take a look at them.
I was waiting for some of the markets to tighten up. I was looking at PayPal, and the markets are like 30 cents wide.
Yeah, they really were fringe kind of trades there. Meta down almost 100, down about 12% or so. Ivy rank of 44 is going to stay bid. I was talking about that for maybe a post-earnings trade.
I think you stay in November with Oracle.
Okay. That would be pretty tight, 22 days. Oracle down $10. You're probably going to trade it directionally then?
No, I was going to do the strangle. Yeah.
Okay.
I was thinking about like 20 delta on either side. You do the 240, 300, trades at $7 and change. I just think because you avoid the next round of earnings, December 8th.
Okay, you can do that. Sounds good to me.
And this is one where, volatility certainly upticked. From a proximity standpoint, your put is a lot closer. So just to give you context, a 20 delta put, $240, $26 out of the money, 300 call is your 20 delta call, $35 out of the money.
Yeah, call skew abound here. If you're a little bit bearish on some of these stocks, those 1-by-2 ratio spreads, or just, an equal premium on both sides. So like if you got $3 for the put and you do $3 for the call, you're going to be further out on the call than you would be on the put. You could do something like that if you're looking to do that. Gold down 21 right now. Just to quote some of the currencies here for a moment.
I'll put it in order for the PayPal 65 strike put at $1.70. The markets are junky there, so I'm not going to chase it. I'm just going to let it sit, and it'll tighten up.
You need a little bit of market movement. That's right. You'll kind of buy it on the way down as opposed to trying to chase it.
Yeah, and I got Oracle in at $7. We'll see if we get filled on there. If they pop volatility a little bit, we might get filled on that one.
Yen is down big still, actually making new lows. And let's see what the euro. Euro is a little bit weaker, so your dollar is going to be stronger. So your forex trades seem to be working for you.
Yeah, I'm going to take off the. So I have.
The S&P's down 40 new lows.
So I have the Canadian dollar and the euro dollar positions. I'm going to take those off here. I'm still short the euro against the Japanese yen, which is my most painful of the batch. But they are small, so we can just sit with them, and the FX boys can continue to make fun of me for my size.
I like it. Good job out of you.
First time for everything.
First time for everything. Good job out of them. Good job out of you. Volatility now up 10 cents to 18.95. You want to look at a 0-day?
Yeah.
We want to wait a little bit. We can wait a little bit.
We just got paid. We just got filled on our PayPal position.
Oh, so you did it at your price, $1.70 or so. Look at this. You're filled over the mid price as of right now. Maybe the stock upticked for a moment or downticked and then upticked. That's why you get it. You're doing the DEES 65 puts. You'll see the market's 52.180. Last is 170. That's you, son. You are the market.
There you go. I'm a market maker now.
You can make 4 cents. If I was trading in the pits, I'd be looking for that 4 cents.
I'm going to roll this Google position out. I have the puts that basically are, they went to like 70 cents. I'm going to roll to basically the at the money strike. So we'll go to the 280, and I'm going to sell the 255 against it in December. So I'll lean slightly short delta, certainly short premium here. It's going to cost me a little debit to roll the strangle, but I have the embedded call spread that I'm going to close in another position. So once I get filled on this, we can take a look at what this total looks like. I'm going to try this at 2.
Beautiful.
Fast market here. Now you got volatility.
Right. Even the S&P's down 51. Volatility over 19 for the first time in quite some time.
Okay, so
Russell down 15. NASDAQ the weakest of the group, as you would expect with some of those earnings coming out. That's what I wanted to see last night, but didn't get.
Oh, there's my Oracle strangle. We were just
volatility upticks.
We said that just 5 minutes ago. That was kind of what you needed here.
Yeah,
was for volatility to uptick. And
even the S&P expected to move 43 from 37, so that too has expanded.
Yeah.
Maybe we wait and talk to Dylan first, and then we look to put on.
Yeah, we could
get closer to 9 o'clock, which kind of supports our research of putting these trades on. Sound good to you?
Yes. I'm trying to get filled on this Google trade.
I understand what you're doing, son. I get it. It's hard to do more than one thing at a time. Not easy.
Yeah.
Right?
1960. There we go. All right. So I'm filled on that.
Very nice.
So I can actually show that if I want to jump to the platform. So we started with this crab trade. So this was a 1-by-2, and we calendarized these. So we did the December 250. We sold the 265s twice against it. We did it for a small debit. We then sold the put in November because you're synthetically naked an extra option, right? So you have a naked call on this position. So we had the buying power already tied up to sell the puts. We sold that put. Into earnings today, obviously huge move to the upside, or it's come in pretty significantly. We needed this kind of to be at 270-ish. Was kind of where we wanted it to be. But into this move, closing out of the current strangle, rolled it to the 255, 280 strangle, which we were discussing, leaning slightly short, but really short volatility in December. So we have that strangle roll, which costs us a little bit of a debit because you're rolling from the 265 call that's 15 points in the money to the right at the money call, which is changing your delta. I mean, you're getting less short. You're still short, but you're getting less short.
Sure.
It's buying the guts and selling the wings in some capacity. We then had this embedded call spread, long call spread, because we're long the 250 call in December, which obviously goes up in value. The 265 in the shorter duration still holds a little bit of extrinsic value, which is why we got only 1560. It's a $15 wide. But if we had been closer to 270 or to 265 even, this would have been a way meatier roll. This would have been a $20 roll, something like that. So it nets us out at a $14.60 premium on this total position right now, and it's marked at $19. So we're out about $400 on this trade, despite us putting on the position, and we could even show this. We were at 240. Stock's up 20% more, like just about 20%. And with the adjustments, which helped selling the put and then, having a little bit of that dynamic delta, we're out $400 on a 20% move in the stock. And now, obviously, if the stock goes up another 20% from here, it's not going to be ideal. But if we chop around here and we get a little bit of a vol contraction, this will be a nice position. But, it was about as bad a case of a scenario as you can get.
That's the point I wanted to make. You still have hope.
Yeah, you're short delta into a 20% move, and you think there's a lot of pain here, and, you're out a couple $100. So.
Good job out of you. I know we're going to have a great job out of our next guest. We got Dylan Radigan coming here, and we've got Hear Me Out. As even the S&Ps are down 50, just a skosh off of their lows by about 5 handles. Volatility traded over 19 to 1926. It's just there at 19 right now. Bonds are down 25. NASDAQ, the weakest of the group by a good margin, a little over 1 1/8%, which is 300 handles or 300 points. On the NASDAQ, just to give you the Russell's only down 7. Dow is only down 50. Interesting market. I guess Apple keeping the Dow a little bit higher. Maybe Apple trying to save the market here. Apple up $1.60. We'll take a quick 90-second break and come back. We got more Tasty Live with Mr. Dylan Radigan. Hear Me Out next.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade's Money Match event, unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. tastytrade. Make your move.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
It's too good. Baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. 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 I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love
We are back, son. You know what that means? Well, we usually have Dylan Radigan, but he's having a little problems with his internet, so we're going to go to some Tasty Extra, look at some trades since we have
You think he's in a taxi somewhere? You think he's in Turkey?
He's eating turkey.
Istanbul?
Yeah, I think he is a turkey.
Istanbul? Or was he in?
I don't know where he is now.
Yeah,
he's like
somewhere.
dog poop. He's all over the place sometimes.
Yeah.
I don't know where he is.
Did you see his picture, though, of the...
in the sauna?
In the sauna.
Yeah. Yeah.
I've
Oh,
been
he was
hitting the
flexing.
gym.
That was a flex. That was
Got a lot of free time. Hit the gym, you know?
A lot of free
time. All the time in the...
Yes.
Nice.
Well, let's do some. Look at this. Even the S&P's only down 19 after trading down at 68.67. They're about 40 handles off of their lows. Nasdaq still the weakest of the group. Russell up 14. Dow up 205. What's moving in the Dow here? Goldman Sachs up 14. Caterpillar up 5. Apple up almost 2, helping the market. Let's see what Microsoft is doing. Microsoft's down 11 off its lows. Hasn't really caught a bid yet. Tale of two tapes. Russell and Dow higher. E-mini S&Ps and NASDAQ lower. Son, let's take a look at Reddit, Apple, Amazon, Coin. Where do you want to go to first for earnings?
The volatility is just getting smoked right now.
Volatility 1860 in by 25 cents.
The VIX is below 1650.
Yes, this is just the area where I got short.
Oh, we had
last
this
night when I got shook out.
What do we do with this Roblox position? So Roblox was up like $10 pre-market.
RBLX, wow, down.
It had earnings as well. We did this put ratio spread. I think this was Kai came with like a $3 or naked
Roblox
put
played up to 125 down to 116. Yeah, go ahead.
Yeah. We got this 120, 115. It's marked at like a 51-cent credit, but these markets are junk. We did this at a $1.60. We close this or sit?
I think this is your full position.
Yeah, we're out.
You actually sold it at a 50-cent credit, correct?
Yeah, so we're closing it at a 50-cent credit.
Yeah, you put it on at a credit.
Close it.
Sold it at a credit. That's nirvana.
Yes.
Right? I mean, usually if you sell something for a credit, you're going to buy it back for a debit. You actually bought it back for a credit. That's about as good as it gets. Market's a little wide in there.
Yeah. I forgot about this Starbucks trade that we had. So remember we were talking about the diagonal spread. So that 90 call went to 12 cents. So that went from $1 and change to 12 cents. We made 90 cents on that. The long call, the 85 call that we had is at 365. If you remember, we talked about if it was above $3, whatever that value is would be our profit because that was our basis on the trade. We did the trade at 319. So it's marked at about a 50-cent profit with the stock basically going nowhere. If you just bought that call, the call lost 50 cents. So it's a $100 swing because of that $100. You cap the upside tail with the diagonal spread. You cap the upside tail profit potential in exchange for, a better than 50-50 shot.
That's correct.
You set these trades up and they're at entry 50-50 shots, but in the concept of them, because you're selling short-term premium, the dynamic of that position changes greatly the next day because all of that juice comes out. But you miss if the stock opens at 120, you sit and you're like, shoot, I missed.
Well, that's what the dynamic position is. Like, it's not sometimes just setting it and forgetting it. It's being dynamic with the overall plays.
So we're gonna try and close that one and take a couple bucks out of that.
All right, so that's the S&P's expected move now 34 from 42. So you talk about volatility coming in. Volatility really has come in.
Yeah,
greatly.
Somebody bought some NASDAQ at the lows.
You did buy some.
I don't know who that would be. I'm not sure.
Very nice. Very nice. There's no high fives in trading. By the
way. Okay. What else do we have here?
Apple, Amazon, Coin.
What are you thinking?
CBOE. Let's take a look at Amazon first. I mean, Amazon's such
Amazon I already have, so I'm long Amazon. I got long Delta. Well, I have diagonal spreads, and we sold the put, and then I have a call crab trade, which is basically. I mean, this tells you about these trades. Like I have 18 deltas here,
right?
But I'm
18
long delta.
Long deltas.
I'm short a 23 or a 10 delta put. So, a lot of that delta is in the put.
Yeah.
The crab trade, which is a diagonal.
It's a position, son. What you have on is a position.
Well, I'm neutral delta, but if the stock opens inside the expected move, I'm going to be long delta.
Ivy rank of 44 is pretty good. Expected move for overnight tonight for earnings about $14. Those earnings will come out after the market closes.
Hold on, I'm going to close.
Apple, you have a position? Let's take a look.
Okay.
Apple, you do not have a position, and maybe we take a look at that.
What do you want to do there? Bullish, bearish, neutral. What are you thinking?
Apple up $1.74. Apple at all.
I got one
Ivy
micro
ranking
NASDAQ left.
19. You have one
micro left. Little runner to the upside. If we go down, I'm going to add more.
Okie dokie.
Maybe. Subject to change.
You actually sold them 7 handles higher than I sold them, so better job out of you than me. Apple up $1.67 at highs. Ivy rank of 19 with earnings coming out on the 30th. I think it's a defined risk trade. Maybe one of your ratio spreads. You're not going to get the vol differential that we've gotten on others.
You got a feel here, though? You bullish, bearish?
Man, expected move of $8. I would probably be playing it a little bit to the downside.
I thought the same thing in Google. Like, it's had this epic run. How much more could you get? And then the stock
Google's up again.
Well, yeah, but it came in a little bit. I think doing it. I think
you're just
right.
not going to get a good vol differential between Nove and Dees.
Yeah, you only have you have to go into the weekly. I guess you could do Nove, like. You got 2 points difference. It's not a ton, but
what about Nove 7 versus Nove 21 day kind of thing on?
Okay, yeah, you could do that. So if you wanted to do that, you go like
at least there you've got 7-8 vol differential between the two.
Yeah. So here's the play. I think you can do. You buy the 275 in November, and then you sell 2 of the 280s in October 31st.
Sell 2 of the
on the call side, or you do the 282 and a halves. You want to do the 282 and a halves?
You're selling the OCT 31s 1 day.
Yeah, the 1 day. So you're selling. If you move it to the 282 and a half, you got the.
I'm going to put up on the screen. You're buying 1 of the 75s.
Yeah.
Selling 2 of the 80s or 82 and a half.
I can put this up. So if we flip off yours and I'll go to my platform. So what this looks like here, and I can even move this too, so we get it even more.
Oh, look at you. There you go.
I know, it's my new hand. So if you flip over to Theo, and then on the right side here, if you go to the analysis mode, you pop over to the next day. This is sort of what your risk profile looks like. You got a couple bucks of risk to the downside. You get this sort of tail event, 260, 255. You probably lose, $100, $200. You're playing for kind of the inside sort of vol crush. I mean, you're going to get.
You got an $8 expected move. What's your window in there for being profitable? Down to about
265,
which is.
So you get an inside move in either direction, and you'll make a couple bucks. Your ideal spot is inside up. You make the most money inside up. You probably make a couple $100. You obviously have tail risk on the upside, but it's up to like 290
short unit.
Yeah, so 290. But your risk to the downside, like you were kind of saying, play it to the downside. You don't want to have a lot of risk to the downside. You're only risking $100 or $200 to the downside.
Yeah, I like it. You have more risk to the upside, but an upside move actually helps you.
Yes.
You have a little bit of
inside up.
You really can't. You don't get your face ripped off to the downside at all. Like if it's 2 times the expected move to the downside,
you're wrong, and you give up a couple bucks, and it's
not even. I mean, it's a 50 cent, 60 cent. It's not big.
But it's asymmetric. I got filled 365.
365 debit.
It's asymmetric in that if you get the inside move to the upside, the profit is going to be a lot bigger than the tail downside move that you'll lose on the downside move.
Very good.
You have the upside, you're naked an extra call. So, but that's fine. If we get that move to the upside, I'll do the exact same thing that we did with Google. You roll out the call, sell the put, and you're in a strangle. You got some extra juice from the call spread that you have there. That's $8.50 wide or $7.50 wide. I'm sorry.
Reddit.
What do you want to do there? What do you think?
You don't have a position in either. We could take a look at that. RDDT down $6 and change here. Reddit looks like it's been going sideways. Good IV rank of 44. In Reddit, let's take a look. What's the expected move? $28. $28. That's a huge expected move. In Reddit.
What do you think about a iron condor here? I don't want the risk. The naked risk here. Like I'm thinking 240, 250. I mean, that's up.
Markets aren't the best in here, to be quite frank.
They stink.
How about I like the 80-72.5 1x2 put spread.
80-72 in the week?
In the 1 day. Yeah.
80-72.5.
Yeah.
I kind of like that too.
Yeah.
For $1?
Yeah, $1.19 credit is the mid price. I mean, markets are wide here, so I would definitely go in closer to the mid price or even above it. You got a 60-cent wide market on the one put, and you got a 30-cent wide market on the other one. I think mid price is pretty close to where you'll get filled, so I'm going a little bit above it. Stock's a little bit weak. Stock's down about.
What do you think about the 180, 170?
Traded under 200, so I just keep it in there. What's that?
I was thinking maybe the 180, 170. You got a lot more volume.
It doesn't. Yeah, then you're doing it for a small credit. Even. Yeah, sure.
And the markets are.
It's a 1 day play. You're going $30. With your meat of your 2 times the expected move to the downside. You really got to think Reddit's going to get killed here. So I would go in. I would try mid price and then go.
Think Reddit's going to get killed here?
And a little bit lower. What's that?
You think it's going to get killed here?
No, I don't. That's your outlier move to the downside.
Yeah.
Your break even is 160. The stock is 205, so you're going about 1.5 times or more the expected move.
These markets stink.
Markets do stink. That's why I say
10 cents is where I'm just going to sit at 10 cents.
You just sit. That's it. The market's not acting crazy good here. No. Volatility is actually up 10 cents now.
Yeah.
Even the S&Ps are down 21. Nasdaq's down 146. You might see a little bit of weakness coming in the coming moments here. So if you look at the sell puts, maybe you're going in a little bit above.
What else do we got earnings?
Coin, if you want to go in there. Market's kind of crappy. The SIBO, ExxonMobil, if you want to do kind of a oil proxy there, you can look at that.
What about coin? What do you think?
Ooh, coin. Coin down 14. This is one I'm not crazy bullish on, even though the stock has had a 4-day slide. Bitcoin has had a big move lower. IV rank is only 36. $24 expected move here. Reddit has a larger expected move. I think Reddit's a much better play for selling premium or looking to do something than coin. When you look at the markets, I'll go to November, just look at the markets. The markets here stink. I mean, $1.50, $1.70. I don't think you can do anything in coin.
Yeah.
Even the S&P's down 17.
Two-sided action today.
Two-sided action for sure so far. You got a tale of two tapes with the Russell and the Dow both up. Dow up the most, about 0.5 percentage point, 240. Even the S&P's down the least, down 13, and the Nasdaq down 110 or so. Well off of its lows, well off of its highs, mid-range for the day. You ready to take a quick 90-second break? We'll come back. We got a market measure next. Good job.
Yeah, sure.
Good job out of you. We'll take a quick 90-second break and come back. We got more Tasty Live after this. We've got a market measure for you.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient. And tastylive does it again. They teach it in a way that is fun. It's easy to understand. And you're learning from people that have done it for 40 years.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son, and you know what that means. Time for a little bit of a market measure. Let's see what's going on with the market here, because we've had a good two-sided action, as you said this morning. Tale of two tapes here. Even the S&P's down 26. NASDAQ down 178, about 50 handles.
I'm gonna do this first, just so you know.
Okay. That's okay.
We hear you. The voice of God.
It's like a voice from above. NASDAQ down 180. That's the weakest of the group. Russell up 390. The Dow, the strongest of the group, 211 volatility, up by 15 cents, flirting with 19 again. Bonds down 21. You sold some puts earlier, 117.18 on the bonds. Bitcoin has not caught itself a rally. Hasn't really moved down almost 3,000. Oil down 40 cents. Gold reversed after being lower, up 25. Following silver, which is up almost 60 cents. We did a little survey on YouTube and talk about what trades from the research team everybody would put on. A little kind of mixed here. Kai came in last, bringing up the rear with his neutral post-earnings ENPH trade.
Aww.
And Sahil, his bullish short put in PayPal, a little surprising to me. PYPL unchanged now, up 14 cents. The low is 69. 22, which was near the opening. It opened right here at 68 or so. That was your fan favorite, followed by Julia and Gad basically neck to neck. So good job out of the team for putting that up, and thank you for voting. We do appreciate it. Nikki, you ready for this market measure sponsored?
Yeah, let's do it.
Let's do it, my friend. Impatient Bulls, selling 0-day puts, part 2.
Yes.
Expected move on the E-mini S&P, since we'll put that up there, is now 33.5, actually creeping up a little bit. It was 32 just a moment ago.
Cool, let's do it.
Let's throw the slides up there, please. There
yes.
we go.
So at Tasty, we often like to avoid a directional bias and have focused our previous 0-day research on delta neutral trades. A steady upward movement in SPX, however, is leading us to look more closely into being bullish because it's worked for quite some time. This week, let's continue our analysis on selling 0-day put spreads, examining different exit mechanics to mimic our traditional capturing of profits when trading 45 to 21 days. So we've looked at these in the last 2 weeks as just the full amount. So we've been looking at different deltas and just managing them at 50% versus not managing them at all. They've been highly successful because it's only 2.5 years of data. Now we're going to break this down into a little bit more management here. So getting on to the next slide here. So we're looking at 2.5 years of 0-day SPX data. This is all looking at every 10 minutes is the pricing here when we can actually trade these. So the results we're looking at $10 wide put spreads every day at 9 a.m. That's our opening position, exploring a range of profit targets from 10 to 50%. And then we're looking at the results versus traders who left all the positions, or we're contrasting the results of all the positions, wins or losses at noon, and those who are willing to stay in until the close looking for their profit target. So we're looking at either exiting at the profit target or closing at noon. So we're examining the total number of winning trades, the total profit or loss, the maximum drawdown, which is the high to low profit to loss range. So your drawdown from the highest peak to the lowest trough. And then, looking at these mechanics every day by starting at an unlucky time in the study. So that's really just like if you were to pick the absolute worst time in the last 2 years, your drawdown would be X. All trades were assumed to exercise at the mid price. And of course, this is Chicago time. Around 9 a.m.
Central Standard Time.
Yes.
Sure. What do we got here?
So the first one, we're looking at the 50 delta short strike. We're exiting at noon, so closing at 10%, 20%, 25%, 35%, and 50%. If, as you would probably guess, taking the higher profit potential is obviously going to yield the highest average P&L, and that's just a function of where the market has gone throughout the last 2 years, right? Mm-hmm. So averaging these at 10%, which is what we've been doing with our SPX trades.
Yes.
When you're directional into hindsight of the 2-year bull market that we've had, has not been the best way to do this. It's been, targeting higher profit potentials just because these are meteor positions. You're at the money. The market has generally gone up, and that's why when you look at the max drawdown, it looks counterintuitive, which it kind of is if you were to consider a more sideways or two-sided action type market. But this market has gone just straight up, and so your relative losses here have been few and far between. That's why $1,000 drawdown or $2,000 drawdown in a spread it's not that wide, but you would expect to have, a week or 2 weeks where your at the money spreads aren't, profitable, but you really haven't had that situation here.
Sure. And they also get that little bit of slippage too, right? I mean, that's what it really comes down to.
Yes. Next one here. So we're looking at the 50 delta short strike, closed at a 10% profit. Where this is just keeping it to the end of the day. So we looked at noon. Now we're looking at just holding through the end of the day and waiting for that profit target. You're obviously going to increase your winners because, again, it's been a bullish market. So if you've been losing at noon, a lot of times you've been winning at the end of the day.
Sure,
and that's just kind of how it's gone. That's why your profit potential moves, or your average P&L moves from basically $0 to $27 per, on an average. And that's because you're holding this to expiration, and it's been generally up from there. Your max drawdowns come more in line across the board, and that's because you're waiting until the end of the day. So if you don't hit these targets, it is, you're taking that loss at the end of the day here.
Beautiful.
So here we're moving a little bit further out of the money. So we're going to the 30 delta short strike, again, exiting at noon. So we close at 10% profit, 10, 20, 25, 35, and 50% profit. You can see your win rates are awesome here. Again, your win rate is increasing because you're moving out of the money in a market that has been mostly up. The average P&L, again, you see the same dynamic here. If you knew that it was going to be a 2-year bull market of epic proportions, taking a higher profit potential really was a lot better.
Stating the obvious here a little bit, right?
Yes. That's the point here, is that, you got to take, and this is, I love doing research pieces and I love back testing. And I think it's great. And I think it helps people build a confidence in what they're doing. But it is hindsight.
It is definitely hindsight.
And there's a difference when you're sitting here, and the E-minis are down 50 or 60 handles, and, you got futures that are higher prices and you're adding to them and you're doing other things. Like, it's different when you're in the moment and you're trading. So this is, just because you see big, amazing numbers in a look back of 2 years doesn't mean that things won't change into the future. And the market itself changes so much. The research we did 10 years ago when I started, the market was a different market. It was a different size. The products were a different size. Volatility was in a different dynamic. There were different geopolitical things, different news things, different freaking technologies. We didn't have, seriously.
Yeah, everything was different.
Things changed. So looking at an iron condor in 2010 doesn't tell you anything about what we're looking at now. So you have to take everything with a little context to the market.
Mm-hmm.
Anyway, it's worked. It's been profitable to sell puts.
As you would expect.
As you would expect. We're not doing anything groundbreaking here. So looking at a 30 delta short strike, of course, your win rates go up. You're further out of the money. If you're looking at holding these to expiration, you get a little bit more volatility here. Your win rate, or your average P&L managing the trades, is better going into noon. And this is because your tails are bigger, right? So when you're selling the 30 delta options, your 50 delta position is 50-50 in terms of risk and reward. So you have a lot more risk and a lot less reward than this trade, which is further out of the money. And so if you're holding these, at the end of the day, you have very little reward and a lot of risk.
That's correct.
And so, it makes sense that your tail events and your P&Ls and all that stuff go down because you're typically realizing those risks. Couple takeaways here. So the typical reason to lock in profits early is to maintain a high proportion of winning trades. But as SPX climbed from 3,800 to 6,600, the vast majority of short puts were winners regardless of the management, especially with the out-of-the-money trades. As a result, being more patient and waiting for larger profits generally was more profitable. These are not shocking. In particular, taking profits at 10% and exiting losers at noon was the only way we found to be unsuccessful selling 0-day puts daily. Again, this is just on the data set that we're working with here. In terms of downside risk, as measured by maximum drawdowns, there was not a consistent pattern. Lower profit targets are better at avoiding serial losers, so you don't have as many back-to-back losers, but bigger winners means it takes fewer of them to make up for a loss. And, when you go up 50% or 100%, you make up those losses really quick if you're taking big profits. So with larger credits from two-sided trades, those trades make taking smaller percentages more appealing. With directional trades, it may be best to be a bit more patient. And, in directional trades, we're talking about really these put spreads, which are they've been a home run.
They've been a home run is the way to put it. You are right. You are right. Good little survey. Nothing, as you said, groundbreaking there, but it works when the market cooperates with you. That's really the takeaway there. Let's take a quick 90-second break. Interesting market. Even the S&P is down 24. NASDAQ down 180. Russell up 5. Dow up 268 or so. Volatility up by 5 cents. 1890 back under 19. We'll take a quick 90-second break and come back. We got more Tasty Live. Immediately found these messages. We've got, my friend Quentin and Ryan coming. Oh, sorry, Quentin and
boys
coming in. We'll be back in 90 seconds of Tasty Live.
Yes.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Best one forward. You've got everything that you have ever wanted. It's already the best
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with these people. Who's first? That's right, from the trade desk. I got my man Quentin, aka Q. What's up, Q?
Fellas, how's it going? Thank you.
What you got going on there?
We got a little festive spirit for Halloween. Got this from the Mayor's house, Mayor Bob, on the margin team, via Master Chow, head of the service here.
Okay.
So, by way of the company, these found their way to me for the day.
That's nice.
So you got some
Do they light up? Can you turn them on?
Yeah.
Turn them on?
Yes, yeah.
If you can turn them on,
Yeah,
turn
why
them
you
on.
can't
I
come
didn't know
in?
if it would bother the.
Bother what? You can't bother
Yeah,
anybody.
I think it's
Bother
too
who?
bright in here.
Yeah, we got all.
Just-
Oh yeah, there they go. You can see them.
Those are like Italian lights.
I don't know.
They're
I don't know
dim.
if it's being picked up, but this is what we got.
That's good.
That's what we got.
I like it.
All right. Nice. A little
You
festive.
got the cherry pin too.
We're styling out here.
I know. I gotta. Do we have any of those left somewhere?
We have cherry pins left, but we don't have any of the numbered ones. And there were people out in Charlotte who had the numbered cherry pins. When we
Nice.
first started it,
I had number 7.
Do you really?
Lucky number 7. I don't know where it is though. I think it's in my desk at home.
Okay, all right, there you go. At least you have an idea of where you think it
You
is.
can't be admitting that you lost it.
Yeah,
I know.
because
I
you're
know.
supposed to be watching that stuff.
Supposed to be protecting that. That belongs
right.
in the Louvre, really.
I-
But if you need a cherry pin, I know a guy.
Okay.
I got
Thank you.
Tony.
Thank you. Thank you.
All right, let's get to some business.
Let's do it.
Yeah, let's do it.
Top 20 symbols going through the systems and their IVRs. At number 1, we've got Meta, 22%, Google, 32%, Microsoft, 16%, Tesla, 15%, no surprise there on any of those, NVIDIA, 24%, GOOG, 32%, CMG, 34%, Starbucks, 25%, Oracle, 54%, iBit, 53%, Amazon, 45%, Palantir, 34%, Apple, 19%, AMD, 50%, Roblox, 38%, GLD, 59%, Avgo, 20%, SoFi, 22%, MSTR, 17%, UNH, 25%. A lot of earnings on there, and a lot of the big boys moving the market.
Took $100 out of the
Little scalpy
bonds.
on your
Yeah.
bond. You sold them pre-market. You sold those putties at 30, bought it back at 23.
Something.
Little
Take
100.
you out for lunch with that.
Yeah, absolutely. Good job.
Oh, wait,
good
we
job.
got, what, Pat's Pizza? I think today I'm excited to
It's a good
try it.
one.
I've heard it's supposed to be solid.
Depends on which one.
Okay. Like they've got multiple branches, you're saying? Yeah,
There's one in the Loop.
it's not great. But where's the other?
The original one is in.
Pat's Pizza's good. The original Pat's Pizza.
Yeah, in Lincoln
Good
Park.
Tavern style.
Yeah, it's Lincoln Park, right?
Yeah. Yeah.
That's a good one, but they have one in the Loop that's like. It's not the same.
Yeah, and because it's.
And that's probably what we're getting, because we're close.
Yeah, close.
The Loop.
Yeah. Don't. See,
I don't know,
what you did
'cause-
to
I
him.
don't
He was
want to.
so
No,
happy.
I was just saying, like, if you
Whoa.
like it, you should know
Yeah.
the original is.
Okay. Well, you'd be surprised. Some of the places we order
Paper
from.
bag, sorry. Like,
Yeah.
one of the old
Oh, yeah,
school
those are the
paper
best.
bags.
Oh,
They
nice.
actually put it in like
Yeah,
a white paper bag.
And it gets
was
all
the oddest
greasy.
thing. And it gets all greasy. It was the oddest
Oh, I
thing.
love that. No, that's great.
Oh, it was the oddest thing coming
Oh.
from New York. You always had a pizza box. There
Well,
was
but if you
nothing-
get one slice, you get it in a white paper bag.
No, you get in a brown paper bag if you were in New York.
Okay.
Or no,
I would also get it in a, she on the Upper West Side. We get the nice white paper bag. That's what we
Wow.
would get.
yeah, I didn't know that's oh, right. Oh, because you're from Manhattan.
When I was growing up
Yeah.
from Manhattan.
Right.
Well, the other thing is that the New Yorkers, they get all kerfuffled with the boxes here, the pizza boxes.
we have the same pizza box.
No, because we have the flaps. You know the flaps that go
Oh
around
wait,
the side?
those are too complicated. Yeah,
They have just
the.
they just have the pull top, like
Yeah,
the one
that's
where you
too-
got like
there's
the
no-
little.
There's no need for that. There's no need for it to be like all. I don't know. It's too complicated for me. Like I'll
I'm
be
re-
stuck there in the lunch line trying to be the nice person that opens it up. I'm like, what's going on?
Really
Yeah.
think about it that in depth, but
Yeah,
you're 100%.
You can't really do it with one hand. So I agree with what Quinn's saying here. Is that
Yeah.
it's a little too much because you got to be able to open it with one hand and then grab a piece.
Yeah,
Like
just
you can't hold the
boom.
pizza
No.
and eat the corner. You know, like you gotta get the corner while you're like,
Yeah, fold it under.
well, you got to stop because it has both sides. It has the
true.
tabs, so you can't unless you're like reaching over
And nobody wants to do the reach around.
Yeah, nobody wants a reach around.
Yeah, I hold up the whole
sometimes
Omaha. Trying to open it, you know?
Oh, Glenn, you got something to say over there about a reach around? You freak. Sorry, guys. This is a kid.
Oh, wait. So yesterday with the Fed, did you fade the original move? Is that something you did? Because I think that would have worked out, right? It went down and then went back up.
I did.
Very nice.
And I got shook out like a Johnny.
Oh.
Yeah.
Because we actually went higher. See, this is what I talk about, like real trading and Twitter trading. You know what I mean?
Yeah.
I sold NASDAQ futures 180 handles higher than where they are right now. But they first went down 30 from where I sold them, and then they went up 100 from where I sold them. You know what I mean? Like, it's so subjective. Futures trading is very, very hard. If you
can't always hold the position with that loss in your face. I gotcha.
But the NASDAQ just looked weak to me after all of these earnings come out. That's why I'm a little bit worried about, Apple and Amazon. He played them a little bit to the upside. But I love being proven wrong because it's a 50-50 shot on direction.
For sure.
He put some good omnidirectional type trades on that if it's inside the expected move, which was what we love to play for.
In either direction.
It'll work out. If you get the direction, you get a bigger
Yeah.
kicker. If you don't get the direction, you've got a
You're
marginal to positive trade. So he did him right with having two people on different sides of the equation.
Yeah, Nikki, I will say the sentiment on the desk yesterday was like all bullish as well.
I know, because they've been listening to me all week.
Because it's worked.
You can't stop this market.
Yeah.
Because it's worked.
Yeah. Hindsight's always 20/20.
Yeah.
Hindsight is always 20/20, and that's what you have to just trade the here.
Yeah, you trade the market you have in front of you, right?
One thing we forgot about from yesterday is what's your assumption that CRM trade? Remember we did the stupid, aka the Super Bowl. That's one of the only stocks I'm looking at on my page that's up. It's up $5. We sold the November put.
It was great. You did it like 265.
265, and then we bought the 255, 260 call spread in the weekly into the service now.
And this stock opened at 250, actually down $2, which stunk for this position. You did it at 265 credit. It's now trading somewhere near a small debit.
Yeah, so I just closed it out.
It took $2.30 or something on it. So that was a nice trade.
So shout out. I think was that OK Avocado? OK Avocado has given us two trades. He had the VST.
Because you said I'm going to give him a shout out if it worked.
Whoever it was, we're gonna run the tape back and.
Hey, good job out of you.
Yeah.
Whoever it was.
Thank you.
Good job out of you is right. I mean,
good stuff. Oh, they got it.
Jerome.
Oh, Jerome, Miami.
Right.
Shout out Jerome. Appreciate it.
Shout out Jerome, indeed.
But you see, he wanted to just buy the straight up calls.
Buying the straight up call. Let's see how that would have done. He would want to do the 265.
I think they were at 40 cents. So he so you probably made a couple bucks. So they were
265 calls with we did the 22 days. Was he looking at the?
He was looking at the weekly because he wanted to play it in the weekly, and I think they were around 40 cents when we were talking. They closed at 40 cents yesterday, so I they were probably somewhere around there. They got as low as 30. They closed at 40
with 1 day to go.
With 1 day to go, they're now
you see right
marked
now
to like
stock
50
up
cents.
$5. You're basically even.
Yeah, you basically even make a small amount.
So the dynamic trade, although it uses a little bit more buying power, actually more buying power by fivefold, but $265 or whatever versus $40.
Yeah,
good trade.
Yeah, it could be tough when playing earnings.
Jerome, Miami, good job out of you.
It could be tough when playing earnings and you buy that naked option just because there's so much vol in those options already. And then when it comes out, even if you get the move, you don't always get the profit.
And that was just a great example how Jerome had a good idea. He could hold a position, right? It was a small amount of money put in there, but it really never came to fruition because he didn't get the move immediately and you needed an extended move. That's the difference from doing a simple trade as opposed to doing what the street will call a complex trade, which is really not that complex, combining three different strikes together, learning at least what the chances or the probability of success is on there, using similar money, relatively small amount of money in there, and having a trade that brings in a couple of dollars as opposed to trying to hit the home run with a very simple trade.
Yeah, like nothing wrong with wanting to take a shot.
No.
If you're trying to get those base hits, you might want to increased probability of success.
Very good. Very good. What else you got? Anything else for us? Do you have a shirt on that's festive too? It looks like Batman.
No, just
I
a
couldn't tell.
design shirt. This is actually from like my family friend. May he rest in peace. But his clothes fit me.
Another one. What's
Jesus
going on with everybody?
Which is very nice. Casey, they used to call him Mr. Fancy Pants, actually, and I got a lot of his clothes because they fit me.
Oh, nice.
And so, yeah.
You were in
very
Dead Man's
Shout out
clothes.
to him. Yeah, that's what we got.
No, that's good. Listen, you remember them any way you can. I just told Gad, then they're never gone. If you always remember them, you always talk about it. It's a good thing. I mean, I'm okay with it. I mean, my mom used to go to the synagogue and buy me clothes, so I wore, old Jewish boys' clothes. So,
sometimes it's like that. You know?
Glenn's having a field day.
Hey, Dad was away for 3 or 6 years, on a car buying trip.
Yeah.
College. So
he went to college.
Things were a little bit tight. You know what I mean?
Yeah, shout out to Casey and Sophie. Sophie, his
but
wife.
it's not how you start the race. It's how you finish it.
I'm laughing at Glenn over here. Mr. Northwestern over here.
Yeah, Mr. Northwestern. Probably got a full ride to the SOB. We'll talk to him in a quick second.
Oh, well, he's got the outfits. Glenn, his clothes are very nice. He doesn't wear anything twice, honestly.
Yeah, because he didn't have to pay for college, right?
Yeah. Hey, good for him, though. Good. I'm not jealous. I'm happy for him.
Yeah, sure. I'm not jealous. I'm happy for him, too. All right. Well, good job by you, my friend.
Thank you.
Oh, God. We got people in the chat. They're going, I'm picturing Bat in the Hasidic section of Brooklyn with a wool suit and the hat.
It wasn't Hasidic section.
Did you ever get one of the hats?
No, but
you probably wanted one.
I apologize. We used to steal them. So, like, when they were walking around, we would run by and grab them and then
can't
throw
do
them
that.
And stuff. So
you can't do that.
That was just a stupid child. So
Yeah.
Don't.
We all make
don't hold
mistakes.
it against me.
Don't do that.
I take amends for. I apologize for that greatly. I was an asshole.
Yeah.
Me and all my friends. It wasn't my idea. I just went along, but guilty just as much. Who? I get myself in real trouble there.
Yeah.
Who is next? Oh, it's Fire Marshal Bill. Fire Marshal Bill. Is that
what did we
are we
call
having a fire drill today?
Fire Marshal Karen.
Bill is.
He's our fire
Oh,
Karen.
you're doing it. Yeah, there you go. Fire
There
Marshal
you go.
Bill. That's right. That's right.
This is the fire outfit. This is, if you see this on, we got problems in the office. Yield.
Take
the elevators are closed.
Take the stairs, buddy.
Hey, I was a crossing guard in school. You want to end up like this? I don't think so. All right? So don't do this again. All right? I'm serious. You don't want to end up like me. Not a good thing. I just wanted to get out of class a couple minutes early.
Yeah. Makes sense.
And then I didn't man my
I bet you still have the vest.
Yeah. I had
Hanging
a
up.
white sash.
Oh,
wow.
That's what I was hoping he had. I thought it was like, it was a white sash with like fire marshal on it.
No, this
or
is
like
serious.
fire
This is serious.
safety.
This isn't a joke. This isn't game.
Do you get like a sign too, like a stop sign, or do you have to?
No, this bad boy.
This bad boy.
Oh, you need a stop sign. We're gonna find you.
Yeah.
We're gonna get you a stop sign.
Yeah.
Yield. And do you want like slow and stop, or do you want slow?
Red light, green light.
Yes. We're gonna get you one of those. Definitely gonna get you one of those.
Thank you.
For sure.
So does every floor of the building have their?
Great question.
Yeah.
Batista, yes,
do you
they
communicate? Do you have a walkie-talkie?
We have
Do you
comms.
Yeah, do you have comms? Chuck,
we have one stubborn.
Yeah.
Won't leave the studio.
The CEO won't take the stairs here.
Permission to carry him out?
Yeah.
Yep. I understand that. All right. I'll get him. I'll collect him. Yeah, so just a warning to you guys. I can't reveal the exact time and date, but it's coming, our annual fire drill.
Oh, they wait till it's freaking freezing outside for us to do the.
Yeah, to show, if you really care about your safety.
Yeah.
Anyone
That's
would
awesome.
take a walk in the park on a Friday afternoon in the summer. Oh, fire drill, woohoo.
Yeah, who cares?
But no, in November, get out.
Oh, that's too good. That is good.
I don't know if they know you when they picked you. Were you the only one that signed up? Obviously, they didn't have a choice, right?
Okay, you sound very jealous right now, which is okay. Because
No, I sound very realistic.
Because Tori will send out an email. We've had a couple people leave the fire safety team. And so
rightly so.
We have a couple openings, and you'll get an email very soon. I could put in a good word.
Do you have to vote for the fire safety marshal? Is this like a elected?
Also an
position?
excellent question.
Is this an elected position?
I don't. I respect Tori's decision making very much, but it was her discretion, to my knowledge, to make me the assistant elevator monitor.
She's like the.
Oh, you're the assistant.
Yeah,
you're like the also ran.
Yeah,
Todd's
you're like best available if nobody else shows up.
Yeah.
How many elevators do we have?
3.
We have 5.
Yeah, there are 5.
And you think one elevator monitor can stop people from going in 5 doors?
Well, but the elevators only open one at a time, so you can't.
Shouldn't you be in the stairs anyway?
Directing. You should be directing people in the stairwell.
Don't go up.
Holding the door open. Hold the door.
I thought you don't take an elevator if there's a fire.
Correct. Yeah. So I stand in front and say yield. Do not. Do not take the elevator. Do not press that button.
Do not pass go. Do not collect $200.
Exactly.
Oh my God. So good. It really is.
But yeah, just wait for the email. I'll try and get you on in a position of stature and status.
We could be the assistant to the assistant.
If you're lucky.
Dwight Schrute.
If you're lucky.
Be the
assistant to the regional manager.
Yes.
Not the assistant.
So did you get a full ride to Northwestern?
That's really funny. No, I'm still paying for it.
Oh, are you?
Yeah.
Yeah.
Every month.
You're a fringe player.
What does that mean? They don't.
What does that mean?
They don't give academic scholarships.
Yeah.
At Northwestern, they do not?
Third party, you can get one.
Yeah.
What does that mean, third party, like Evans Scholar type thing?
Yeah, like my girlfriend was a Evans Scholar. She got a full ride.
Hoity-toity, the
Very
two of you.
good deal for her.
Wow.
I should have looked harder.
What does she do?
For work?
Yeah.
She works at Deloitte.
You really are an underperformer. My God.
That's all right. Right?
Happy with your performance?
Yeah.
Yeah, just enough.
Well.
Good for you, my friend. You got any slides for us?
Yeah. What do you got?
No slides, but we have a ton to look at on the FX markets.
Yes. How was the Super Bowl yesterday? Was it as good? Were you guys on the desk oh, this is amazing.
Victory. Yeah.
Some rate cut uncertainty.
Exactly. Yeah. Loved it. We
dollar strength. You've been on the other side of that because you stink.
Didn't get the fake out that we've seen in recent meetings of, a reaction on the announcement and Powell saying something different, but we did get a more exciting Powell than we've gotten in meetings past. Held the line, could have said nothing at all, but instead he said, we are driving through the fog. And what do? When you drive through the fog, you slow down.
That's true.
You don't just cut.
Mm-hmm. Unless you're drunk and you got the money printer in the back seat of the car, then you just speed everything up. Yeah, I gotta get this home.
I gotta get this to the neutral rate. No, Powell, very wise gentleman, and said more than he perhaps usually does. And we had initial dollar strength on the announcement, and then this announcement didn't have as much data. And so into his question and answer had an increase in dollar momentum throughout the night, a little bit back and forth, which, these markets are open 24/5. If you were up trading 24 hours a day, you had some pretty healthy ranges, pretty consistent dollar strength, but a few pullbacks. And then you had the yen affected by
getting killed down almost 1%. It's just off of its lows, down 0.9 here or 600 ticks.
Yeah, so in the spot market, that took it straight through 153, all the way up to 154, which is where we're still above this morning. Contrary to Fed Chair Powell, the head of the Bank of Japan said nothing at all, very cautious, held rates unchanged, but did not want to commit to any sort of rate hike in the future, which had been somewhat priced in. And so yen falling off a cliff there, which, it's been good to see. And what's been really interesting is the kind of session movements we've seen, because we also had a European Central Bank meeting this morning right before U.S. Open, and that stalled some of the bleeding in euro dollar.
Mm-hmm. It got down about 200 ticks lower than this 157 and change. It's actually almost 160.
Exactly. So that's
2.5.
the one that's had, you know, some pretty clean ranges. Yesterday on the Fed meeting in the spot market, dipped below 116 and bounced all the way back by the end of the U.S. session, and then heading into Europe, got back above 116.20, and then you know, had a big fall right leading up to the announcement. Bounced back. Now we're trading at around 115.75. Lagarde saying we're in a good place, the ECB president, boosting that euro a little bit, but not enough. It's coming back. Dollar's coming back right now, slightly. So we've had some expanded ranges, as we could expect from all of these volatility events. But in terms of, you know, timing those elastic pullbacks, a little bit harder to do, but we've seen some consistency with aligning with global trading sessions. So you see a run up, you know, before Europe, that gets taken out. Before the U.S. session, we've seen very consistently dollar strength heading into it, and then getting pulled back throughout the U.S. morning. So
can you do limit orders to open?
Yeah,
you can.
Absolutely.
Do a lot of people do that, like as like a to try and catch that like big move? Because I know with it's the spot markets, you can have like a 1 minute move where you gotta like. Do people do that a lot?
Yeah,
like round
around
numbers.
some of those. Yeah, some of those psychologically key price levels are around those round numbers, as well as, you know, stop limit orders.
Yeah.
As well. So yeah, in your Tasty Trade platform, there's a market tab and an order tab, so you can do the exact same process, and then there's also a whole order section. So we'll see how it shakes out through the U.S. session. It'll be interesting, you know, which direction we kind of drift, but I wouldn't expect a ton of volatility throughout today. That's not to say we won't get, you know, some.
Euro's kind of settled in here in the middle of its range. Pound is similar, is doing similar. The pound just turned green.
Pound, if you're looking for some more extremes, hit today their low since April, whereas the euro's been trading in this range before. We've seen some 115s, some flashes, but pound hurting a little more than the others. Yeah, and then we had the trade deal with China finalized. Not too much of a story there, not too many fireworks.
Wasn't it just like pushed again?
Yeah, and that's what everyone was expecting.
Yeah.
So there was an outside chance of some sort of animosity in some direction, or some chance of a greater, more lasting deal. Didn't get either of those. So I think that's all that's expected from that this week. But who knows?
What's the next big thing in the currency world that you're thinking about?
Yeah, in terms of economic events, we've got, let's see.
You think like once the government reopens, is that a currency thing? You think that would be a dollar bounce? I would guess.
Yeah, so that's actually a very interesting point, because that, while it's easy to take that in the context of, oh, government shutdown, maybe dollar down, government back, dollar up.
Yeah.
That's actually treated, you know, whatever consensus they come to, whatever deal that is eventually signed to get the government restarted, is treated as, you know, its own kind of data point.
Okay.
Regardless of maybe there's a skew, a bias for, you know, business as usual helping the dollar, but you know, whatever stimulus package or whatever Congress agrees on could be perceived by markets as hurtful to the U.S. dollar or strengthening it. So, yeah, a lot to unpack, but unfortunately, it looks like a lot of the movement was pre-market. So if you were up trading FX before the U.S. Open, you said you got out of your U.S. dollar Swiss franc this morning?
I did that yesterday. I wish I held on to that.
Yeah.
Because that was up nicely this morning. I missed that one. But I did get... it's okay.
Gotcha.
I did get out of the long dollar versus the Canadian dollar. U.S. dollar versus Canadian dollar. So
that one, you took a little bit of pain there. We had some Canadian strength. Yes,
little bit, because I trade very small.
This is true. That's what we hear a lot on my side of the desk is Nicky is
that is one small
he's firing with his pea shooter.
I'm emasculating you a little bit.
We've got Euro inflation data tomorrow.
Yeah. And all the UK guys, they know it too, because they're all like, why do you trade them so small? And I'm like, what are you, like this big time? You just go full bore every single time you trade these things, you psychos?
Oh, that might account for some historic P&L.
Yeah, that's what I'm saying. I'm having a great time with these things. I'm $50-$100 here. I hold them. I wait.
And
all
good job out of
Sunday.
no margin calls so far. So there you go.
Yet, don't tempt me. Don't tempt me. I don't answer that phone call.
EMPH you got filled on.
Yeah, I sold that.
Your puts too.
I forgot to do that this morning. That was Kai's trade. I just sold the 30 strike puts.
The least popular of all.
That stock is
from the survey.
That stock is a dog. Fleas.
Good job out of you, my friend.
Yes.
Thank you.
Great
job. Marshall Karen. Thank you.
Just be ready, to evacuate at any time. Remember to unplug your coffee.
I'm going to film you. Yes. Okay. I hope I'm here for this fire drill. I am going to film you.
Perfect.
Thank you.
I'm going to film you in action, live action.
Well, it'll be good. It'll be a learning experience for the rest of us. We could send it out to the company wide.
Exactly.
To demonstrate.
Do you have what it takes?
Yes.
Raise the bar. Because my other,
I can't wait to show this to new mommy. This is going to be good.
My other ad hoc responsibility is my discussion with the margin team. A lot of them, are concerned with.
Can't what? Follow directions?
No. They're very smart and capable human beings, but some of them are worried about their heart health, perhaps, and they aren't so happy that we don't have an EKG machine on our floor.
So now you're going EMS, like you're going to be like our.
And I know where it is on the ground floor, but they're skeptical at my response time, how fast I could get.
How fast could you do it in a fire versus a non-fire situation?
Right.
So if there's a fire and one of them is having a heart attack.
Yep, that would definitely be slower.
That'd be a little bit slower.
Leave no man behind.
Because then I'd have to, get a little Reggie Bush.
Yeah.
Ducking and weaving.
Mm-hmm.
Didn't he blow out a knee or something? Didn't Reggie Bush blow out a knee?
Yeah, but some of those.
Oh, he could juke with the best.
Those college tapes are.
Yeah.
Ooh, boy.
But I'll work on my fireman's carry.
You can do it. I can do it. I'm going to take a quick 90-second break here. We're going to take a quick 90-second break. Great job out of you, Nick, today. 21 trades.
There we go.
Took some profits, massaged some trades, held on to some trades.
That doesn't even include the FX trades.
Doesn't include the FX
they don't
trades.
give me a
don't have
ding either.
And can't show them on the follow page
they don't
yet,
count. But I've talked to some people.
Oh, good.
There you go. Thank you.
It's the ding.
Thank you.
Great. Listen, today was the last day to see Nick because this weekend, tomorrow I will be on with Jamal doing the show, a regular time, regular bat station. But Sunday, November 2nd, you'll be in San Diego with Mike and the team, tastylive.com/events. If you have not signed up and you're in the San Diego area, it is free. Please sign up. We would love to have you there. Couple hours show. You'll woo everyone. It's going to be wonderful. Correct?
Yes, always.
Awesome. Let's take a quick 90-second break. Got time right now. You can sign up because we got about 90 seconds before Liz and Jenny come on. Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
This is Breadwinner Trivia here at Tasty Live. I'm here with Nick Batista. We're going to present him 4 questions. If he gets all 4 correct, I have to make him a peanut butter and jelly sandwich. Let's dive right into it.
And I'm hungry. I want 2 of those.
Which commodity is often considered to be a safe haven asset?
Gold.
Gold is the correct answer.
The shiny rocks, boomer shiny rocks.
What does the Sharpe ratio measure?
Return relative to risk.
That is correct. What is a credit default swap?
It's a credit that originates somewhere else, and it's traded for different amounts across many different parties.
That is correct. It's not gonna exactly match what they have on screen here.
No, you know, come on. I'm not the smartest guy here.
For all the marbles, for the PB&J, what is the national animal of Scotland?
It's the Highland cow.
It is a unicorn.
What? That's a trick question. I hope nobody heard that because I want to see a peanut butter and jelly sandwich get made.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
This body totally bustin'.
Everybody, and welcome to the Thursday edition of the Liz and Jenny Show. I'm Jenny Andrews. That beautiful blonde is Liz Deerking, and that handsome guy in red, in maroon, we'll take it, is Glenn. Welcome, Glenn.
Glenn, where's the safety vest? Did you just rip that off and then come running in?
And, you know, people's respect for your authority, they think that this is just some, you know, something. I don't want to become too powerful, basically.
You are the most powerful person in the room, any room you walk into, Glenn. Don't you let anybody tell you differently.
Thank you. How are you guys?
Jenny, did you see him in the safety vest?
No, I did not.
Okay, the chat was going crazy. They're like, what is this, the Village People episode? It was pretty funny. They do love you, G-Money. That's what the chat was saying, but yeah.
Well, Glenn, we still have to get you some red shirts, and I should have thought of you. Liz, I don't know if you... this is new. Guess where I got this? Guess where I got this new red top?
Aerie.
No, Disney World. It's a Minnie Mouse sweater.
No way.
Okay, now that tracks. Now it tracks. Now that you said it, I can't unsee it.
So I've got to get something for you, Glenn. I was just in Disney. I should have got you some kind of like red Mickey shirt, but I'll keep my eye out for you, Glenn.
That's awesome.
Glenn, have you ever been to Disney World?
I have, yes. Grew up on the East Coast, so would go to Disney World. Been to Disneyland as well, out there in L.A. Harry Potter World in L.A. Very cool as well.
Favorite ride, favorite park, go. We don't need any, just out of curiosity.
I think the coolest is the Harry Potter World. Other than that, Magic Mountain. Always have a place in my heart for the Buzz Lightyear ride. That one's fun. Where you shoot the aliens and it whips you around. I think I'm still scared of the Haunted Mansion. That one I have nightmares about growing up. I have an older sister, and so she assured me that it, wasn't like a very big roller coaster. It was a fun, easy one. Didn't mean it wasn't scary. So
I agree.
So Glenn is about the same age as my son, which it all tracks, Glenn. It all tracks. Like Buzz Lightyear's his favorite. He was Buzz Lightyear for Halloween 3 years in a row.
Awesome.
You grew up in the same era, and he was always terrified of Haunted Mansion. He had to bypass the elevator and go around straight to the ride.
That's awesome. My man.
Yeah. So
I love it. I love it, Glenn.
Okay, so big news, Glenn. You don't know this. Sunday, this weekend, is Liz's birthday.
Oh, I was I thought something came off in our FX account.
Big news, we need more money.
We're out of the shekel? Unbelievable. That's all I want.
This weekend. So I saw some tweets coming in already, Liz, people giving you a happy early birthday since your birthday falls on the weekend.
Oh, yeah, that's okay, though. It's not a big one. It's just a random number, so it doesn't matter.
27?
Good. Yeah. Nice, Glenn. Nice.
Yes. Good job. Oh,
still an important one.
You are. Do you want to know why? I just glanced at our Twitter. Do you know why the tweets are coming in? Because Scott Somer is my birthday twin. His birthday is the 1st, which is Saturday.
Yeah. So happy birthday to Scott Somer.
And don't take this the wrong way, all of our other viewers. I don't exactly know everybody's birthday, but I remember Scott Somer, one of our viewers, because it's the day before mine.
Now, if you want a birthday surprise, let's pop in the platform.
Is the shekel gone?
Glenn and Liz, you'll be pleasantly surprised if we pop in the platform and I go into Tasty FX and go to our positions. We used to have 3, now we have 2. I mean, we still have the shekel, we still have the euro, pound, but our most recent position that we put on is gone.
We're going to hold that shekel until we're right, and I have no problem with that.
That's Mikey Butler's strategy, and he just got out of his last one, so... it's worked for him.
I feel like we just got out of, it was the USD CHF, right?
Yeah,
we got
there you
out of
go.
that yesterday.
Fantastic. Yeah, you
Look
got
at that, 59.45.
and that was
that's all a
on.
girl can ever ask for her birthday is a winning FX position. So thank you very much.
You're very welcome. That's awesome. So was that one that you had a limit order in to close it, or did you guys close that manually?
We had an order. No, we had an order, and I didn't. Honestly, when I looked in here yesterday, the day before, that was still in here, and I thought, oh darn! I always like when Glenn comes on and we can tell him some good news. And so today, I was surprised to see that it was gone.
Fantastic.
So, on a side note, Jenny, I don't know if you know this. Glenn's been working like triple time. I saw you on Option Trading Concepts Live yesterday. Can you confirm or deny this?
I can confirm. And yeah, this was a big, I was on the whole hour because Jamal was out. And Tuesday, they had me on overtime. So that I'm like the very last option for overtime.
I don't believe that.
In every team's chat, it's Bueller. Okay, Glenn.
Well,
but I
Glenn,
had a route.
I don't know. I mean, I know they're searching for stars with change in the network, and Tom's gone, and I hear that you're top of the list for shooting to stardom.
Oh gosh,
skyrocketing to stardom.
Well, happy to be here and glad that you guys let me come on for Red Shirt Thursday.
Okay, wait a minute, hold on. I would be remiss if I didn't ask this. We just referenced your age. I did like that you used a Ferris Bueller reference. But how old were you when that movie came out? I mean, you must have just recently watched that.
I watched it growing up, probably middle school. My mom's from here, so she not made me watch it, encouraged me to watch it. But no, I did not watch it in theaters.
Yes.
His mom was from Chicago. He went to Northwestern.
Did you know, speaking of Glenn, if you didn't watch it in theaters, do you know that was like one of the most groundbreaking movies to watch in the theaters? Because if you watch all the way to the end, they were the first movie that did this. If you watch all the way to the end, the credits roll. So if you're in the movie theater, and once you had to watch it at the movie theater, is when he comes back on. Matthew Broderick comes back on. He's like, "You're still here? What are you still doing here? Go home. Goodbye."
That's really funny.
So that was so groundbreaking at the time. People were coming out being like, "Oh my goodness!" But we didn't have like any phones to tell anybody at the time, so people just kept being like, "Stay till the end." And we're like, "You did go to the end," but most people would miss the things after the credits.
But it wasn't like it wasn't that he'd be back for Bueller 2: Return of the Bueller. Because that's what Marvel uses it for, is a little sneak peek into what's coming next.
But Marvel's stealing it from Ferris Bueller's Day.
That's good to know. Thank you.
They were the first. They were the OG.
Okay, so I have up the chart here of the.
Jenny's trying to rein us in, Glenn.
The U.S. dollar franc, and this is right. Is this the Swiss franc?
Yep. Yeah.
Okay.
So
that we had the GTC and we had a bullish position on, and with the big move up in the last 2 days, we got out.
Fantastic. Yeah. Really reassuring signs from the U.S. dollar. We didn't have as much of a fake out on the Fed meeting yesterday. It had initial dollar strength, and Powell did all in his power to propel that forward by making the December rate cut a bit of a foggy picture, in his words, driving through the fog. We are. And so those rate cut odds now deflated, still favoring a rate cut in December, but to the tune of 60-70%, whereas we started this week above 90. And so U.S. dollar getting a bid across the board, Swiss franc now getting back above that 80 handle, the euro dollar getting below 116. And the news continued past the FOMC event yesterday afternoon and focused on Japan. If you go to that dollar yen, now we're trading above 154. This blew through a previous high. We were looking at around 153 on the heels of a Bank of Japan interest rate decision last night, where the leader of that bank was not as revealing as Fed Chair Powell, very tight-lipped, didn't indicate anything either which way. Markets were expecting a rate hike some point in the near future. No kind of details around when or if that would be happening. So they kept rates unchanged near zero. I think it's 0.5%. And so at least for now, that carry trade is intact with the U.S. dollar, perhaps not cutting as aggressively as markets thought, and Japan not hiking as aggressively as
Okay, so my question
thought.
to you then, Glenn, as you are our expert, because you've been on here before, and you can tell me I'm wrong, because I 9 times out of 10 am. But didn't we say the yen is the trend, is your friend? So would we go long this?
So yeah, there was a study I ran, a little back test, in which we compared trending environments, whether it was better to fade, a 3 up days in a row, or to follow that trend. And the U.S. dollar Japanese yen was one of those pairs that historically tended to keep going, trade more on a momentum basis. So this isn't to say that this isn't already a huge move. We gained over 1% overnight. And so 2 pretty big green candles. But if you zoom out here, if you just zoom out on this daily, if we're looking for, when we were last here, maybe even switch to a weekly chart, we can see that if you're looking for historic price levels, we moved, last time we were at this 154 level, we moved straight through it all the way up to 158, and then moved straight down to 150, 152 in our last occurrence around these price levels. So this is a market that absolutely can move a ton in a short period of time, which is partly why this pair is now held at a 5% margin requirement when previously it was 2 years and years ago, because this has moved so much in recent years. That's why this is perhaps one of your more expensive of the major pairs to get in. So there's absolutely merit to treating this as a trending market. If you are looking, from a risk-reward standpoint, maybe you could have called it yesterday and gotten a greater reward. But if you're thinking of possible take profit and stop loss levels, you could look all the way up to 158 as, the next kind of congestion area if you are looking at historic prices.
Can I ask you a platform question here?
Mm-hmm.
So, these numbers on this bottom, because on the bottom, this is a longer term, right? We're all the way to 2020.
Yep.
Or 2020, and then this little piece here is what we're looking at up top.
Correct.
Okay. So what are these numbers on the side? If I go to, back in 2024, this 4.064, what is that number?
Yeah, so what you have up right now is a technical indicator called average true range, and that is something we put on in one of our prior shows that shows it's some calculation of in this case, weekly price ranges to tell you what you possibly could expect in terms of elasticity going forward. So it's just a technical indicator.
So it's the movement, not the price. It's the movement of it, not the price. Okay.
Yeah. So if we go back to the daily, we can kind of contextualize this a little more. So this is saying it's using a 14-day look-back period, and it's saying that now...
And you get that right here, the 14x?
Yep.
Or this 14 here?
Yeah. And so now, you can actually see an average true range of over 100 pips over this daily time frame, just because this has been moving so drastically. And so that's more than a 1 standard deviation move. That's a different calculation that shows, a rolling daily close would be maybe around 80 pips. But this true range, more encompassing, and shows you, perhaps contextualizes what profit target and stop loss criteria would be historically appropriate.
And is this what you like to have on your trade page, or do you have something else on yours?
Yeah, I pull it up. I change them very often, so I don't usually keep one on at a time. I mean, Bollinger Bands are interesting for looking, just at, volatility, elasticity. But this is a good range of if I'm looking for, what movement I can expect in a day. It's an interesting kind of reference point. But as you can see, it doesn't change a whole ton. And so more so you can kind of treat this by pair. Like I know this one will move maybe 100 pips, maybe more, and something like the euro dollar will be less, around 60 or 70.
All right. So what do you think we should do? Jenny, I think we go the trend is our friend.
I'm not going to do that I wouldn't do that in my account. I'm not a big fan of like getting long here.
So you don't think the dollar is going to keep going up?
For me, I would look at it as, if I wasn't already long, I'll wait for a pullback. But I would
basically, this is saying the dollar strength to the end. So by going the other way, you think the dollar is going to get weaker.
I would just find something else.
Exactly.
I know we were on the yen. We were looking at the yen, talking about the yen. Doesn't mean I need to trade the yen. I would find something else to trade.
Exactly. Yeah, I think that's a great point in that, when we're looking at all of these popular U.S. dollar pairs, what that really tells us is we have 7 ways to have dollar exposure, each of which having their own, inherent exposure to other countries and perhaps historical correlations to whatnot. But these are, at least you could think about it, half of the exposure is U.S. dollar. And so if you're looking for to get long dollar and you are a proponent of historical price action, then, Japanese yen isn't necessarily one of the ones where a dollar is cheap.
We sold a put spread in it yesterday and we're down a lot on it. Not a lot, but more than I wanted to be down on it today because the dollar is weakening, right? So the dollar is weakening, which is why the yen is strengthening and the dollar is weakening, correct? So it's the exact opposite?
So in this, the price action, the dollar is still strengthening against the yen, regardless of product. But when you're looking at the 6J futures, the pair is flipped. And so in that chart, yen strength would be to the upside.
Yeah,
correct.
We put a bullish position on it yesterday, which is what we would have been doing had we gone with the yen as your friend yesterday. We would have been
So because we have this like 6J put spread already on, I don't think we should do like a yen dollar pair.
Because that would be doubling up. We would be doing the exact same thing.
You would be doing the opposite because
if we do the opposite, we'd be getting long. If we were doing that, we'd be getting long dollar and shorting yen.
Yeah, if you look at that 6J chart, what you're saying there is still you're trying to go with the trend, and the trend in that 6J chart is to the downside.
Yen's going down. Got it. Okay.
And it's easy to remember here, like whatever's first, that's what if the chart's going up, whatever's first is getting stronger. But then I see the confusion, then you flip it over, and if we go to 6J, like that's just
that's why I was like, wait a minute, hold on. We just put this on.
That's just the yen strength. So if the yen is getting weaker, if this chart's going down.
Yeah. Okay.
Absolutely right.
So, and it is confusing, Glenn. I feel like but you've been super helpful with our Tasty FX, teaching us the ropes.
All right, so let's put a trade on. What do we want to put on then?
So what's interesting to me is, of course, now you might have we've had an exaggerated dollar move. We had a little bit of a pullback actually this morning, but dollar strength now appearing to continue a little bit, or at least stop the pullback that we saw from the European Central Bank this morning. And so that's still interesting. Maybe that's a confirmation of, dollar might be able to hold on to these gains. But if you're looking outside the US dollar, tomorrow we still have European inflation data. That gets perhaps a little interesting because the ECB president today said, we're in a good place, all is well. Tomorrow, if there's a surprise there, maybe that narrative kind of unwinds. So I'm looking at a euro pound right there, the third pair on the popular non-US dollar.
I think we have the euro pound right here. So we have that, and we're down since we put it on. And we've had this order in I don't know.
Oh, man.
We've been in this for a while. But maybe we add to it.
Yeah, so this is now at highs dating back to 2023. So you're certainly not alone in thinking that this maybe would have reversed sooner. But yeah, that's funny. I didn't realize you guys had this on for so long. But yeah, if you zoom in a little bit.
Let's add to it. I think we should just when I say add to it, don't double it up. Just add a smidge.
I think it's okay. That's why we start small. So if we want to, we can add to it. So we're going to sell this.
And so it's nice is
did the font change?
We're constantly making improvements.
I mean, if you see this, I feel like I'm in Alice in Wonderland or something.
I did too. I didn't know what we were looking at.
The numbers?
Jenny's way better at the FX platform than me.
Yeah, see how the 9.1 is bigger than everything else?
Yeah, so that's how it is on the Tasty FX platform. That just shows you, the actual pips. So, there are 5 numbers here. It's hard to know which ones are actually important. This is just telling you that it's 1 pip apart. The spread is the bid and ask right now. And that's kind of your unit of movement. So
you're
not
gold
going
star
crazy.
For that, because that's actually good that you highlighted and made bold for the visually impaired people. The
but
important,
perhaps a little trippy as well. So yeah, I mean, I called this one out yesterday, running to new highs, but today maybe you have a little bit more of a confirmation with it turning around a little bit on some euro weakness as a result of, at least relative to this pair. It's still holding in against the US dollar after the meeting, but.
All right, let's ship this and get a closing order in for it. So
0.04 is $230 in margin. Are you okay with that?
I am. Hit it.
All right, place trade.
And then we'll take
confirmed.
And then take less of a pip down for our take profits. Do you know what I mean? It doesn't need to go all the way to our other one.
So where is it? Wouldn't it appear?
So zoom in, scroll in a little bit on this chart. So one thing you could, one thing in terms of trade management, one way you could think about this is right now your break even is not quite in, a 1, 2, or even 3-day historic price move. This pair, aside from a couple days recently, does not tend to move, isn't as volatile just because these are such correlated currencies. And so if you're trying to think of what a take profit would be or a stop loss, I think stop loss is easier to determine. You're calling the top on new highs, and so maybe you're wrong if that goes through those new highs.
We're not putting stop losses in anymore.
All right.
No, we don't do stop losses.
But my main point is in terms of take profits, I don't think it's as pertinent for how you guys have been using it to kind of capture wins in the overnight markets. So when you're not monitoring. Here, I think you have a couple more opportunities to look back on this before you'd be profitable. The only reason you'd want to get out of this, before is if it goes against you, or now you're using a more significant portion of your margin. And so maybe this comes back, you accept it as a loser because you want to redeploy that capital. And so I don't think setting a take profit right now is as advantageous to you.
We're just gonna leave it. We're gonna not take profits. I like it.
So, but we're okay. So we can do that. We can wait. We can leave it, and we'll keep an eye on it. And we'll pop in every day and keep an eye on it. And it doesn't. We don't have to become like net profitable in the euro pound in order to take off the new one. If we see the new one made some money, we might take that off, and if it reverses, we can get back in.
Exactly, because you put them in at distinct sizes. So if you would have put this next one in at another 0.03 microlots, then you would be required to close that first one out first. But since you have the unique sizing, now you have that trade management flexibility.
See, that is what I learned from today. So thank you very much, Glenn.
Yeah, that's nice to know. Put them in at different sizes so you can manage them at different times.
Exactly.
Yeah.
And this one
Glenn, we've taken up enough of your time, so thank you very much for today's segment. You did a great job.
Thank you, guys.
Glenn, nice to see you. We will be seeing you. We'll be traveling together, everyone going to Austin together next week.
All right.
Oh, yeah.
That's exciting.
That's true. I forgot. We get to see Glenn.
Oh, fantastic.
Glenn, We're gonna
So
see.
but you're off the show. You're off the show on Thursday. We will be doing the show live from our hotel room.
I mean, we'll be. Yeah, we're not like live from an Austin studio. We're gonna be in Austin Thursday doing our show from our hotel room.
That's what I said. Live from our own hotel rooms. So yes, but you're traveling, so we will not see you. We will see you in 2 weeks, Glenn.
All right. Thanks for having me.
All right, thanks.
Well, yeah. Well, see you in Austin. Bye, Glenn. Have a good weekend. That's gonna be fun. That's gonna be fun. Traveling, going for the last show, the last big, not the last show, not the last Tasty show of the year, but Tom and Tony's last show of the year.
Do you have that up? Could you go in and show the art card for that?
I do not have it up.
Okay, that's okay.
But I'm sure John could show the art card.
No, and we can show it tomorrow. We've got so much stuff to do, Jenny. I'm not going to put them under that because we're already.
There it is. Antone's nightclub.
Is that a nightclub in Austin, Texas?
Maybe we'll have a surprise visit from the old Antone.
I can't believe it's a nightclub. That's amazing. So okay.
Friday morning, everyone will be at work by 11. So
those were my favorite shows. Is when we'd be going to these Live Nation venues, and the workers would be like, "I'm still up from last night," because we're like AM.
I know.
AM show.
Yeah. So super excited for it. Liz has got her cowboy boots ready for Austin.
Oh yeah, cowboy boots, cowboy hat. I love it. It's socially acceptable. Yeah. Okay. Thank you very much, John. We appreciate that. Jenny, let's jump in the platform. We got a lot to manage.
Oh, we do. Okay. So earnings trades. We've got a lot of earnings trades today. We did a couple earnings trades yesterday. So I'll just kind of start at the top. CRM was not an earnings trade. That was a what's your assumption. Someone said CRM was going to 265 and it's almost there. It's halfway there.
It was Jerome from Miami.
And yeah, Jerome from Miami.
So we're giving Jerome a shout out. We'll take our 188 and say thank you very much.
Yes. So we just bought a $5 right call spread for $2. I don't think this is trading. Here's the look, $5 right call spread, which this could be worth $5 at the end of the week if it stays above 257.
Honestly, I'll take my 188 and say thank you, Jerome.
All right, thanks, Jerome. We'll take the 188.
Thank you, Jerome. We appreciate your patriotism is duly noted because this is amazing. Okay.
Amen.
We'll take that. We're going to close that.
So we're closing CRM. I've got that order working, and I pennied it down by a few pennies. So the markets are a little wide in there. Okay. Next up was Google. We did this on last call. We did a crab.
Yes, we did a crab. And this one worked out okay. Let's talk. Can we go into the trade page and just kind of talk through this?
Yeah, I mean, it's the perfect scenario. It went right to the short. Perfect scenario at the short is on expiration because that short still has, 286 twice left in it. So that's a lot. That's $600 left in the short.
So with the crab, what you want to happen is you want it to go to it, not through it, right? Like if it blows through it, you'll still make a little bit of money, but you want it to it, not through it. There's still a lot of extrinsic value there.
So this thing is worth 286, 480. This ratio spread is still worth 480. So if this were expiration Friday, we'd get another 480 out of this trade. But I hate to just let this $537 sit at risk.
I don't. I think we take our 540 and call it a day.
Yes, I think so. I just want to see one thing, Liz. Just bear with me for a minute. Bear with me. So if we closed that ratio spread, that's 454 for the 290, 297, 450, 458 or whatever, 290, 297, 290, 297. I just want to see what we'd collect if we rolled it. Okay, so I just wanted to see it. I'm not saying we do this. I'm just wanting to look. We would take in $8. And I'm not going to do it. We're going to take our $500. But I wanted to see
only $750 wide. I get what you're saying. I understand the concept that you're looking at here because your top spread is $7.50 wide. You're taking in $8.
You take in $8 for this one. You pay for something for the other one. So you're locking in a credit, but you're only locking in a credit. The credit's still less than close to what we paid for it, but still less. And then you'd have the
I understand trying to get fancy, but I don't think we need to.
No, because you've got potential for more money. You have potential for more money, but you need it to stay at least here, if not above, and stay here, keep going up, whatever.
Agreed.
I'll just take the $500.
Me too. I'll take $500, Bob. Who was that?
And I closed mine earlier. I only made $400 because when I closed mine, Google was only up $6.
Great, that's okay. You still made money, right?
Yeah, right. And so it's like if Google is by the end of the day only up $6, this 500 could be 400.
And you never know where it's going to be. I don't want to play with that. That's why I don't want to get all fancy with it. The other things that we wanted to take a look at. So we didn't close CRM yet.
CRM is really, the markets are wide, and I'm keep giving up a lot to try to get out of this.
Oh, they are wide. Okay.
So so you pushed out the Google trade.
Yeah, Google's in the clearinghouse already.
Starbucks. I know Starbucks was an earnings diagonal, and this came from What's Your Assumption? Someone wanted an earnings diagonal in Starbucks.
Oh, this worked out good. No. I'm sorry. I was looking at, I thought we were up $90. We're down 12. So I was going to say, this didn't move at all. So we're long the 84 and short the 91. Let's take that 91 off and roll it out in time. We've got week.
Right. So we're going to, and so just keep this in mind. Our original spread was 84.91. So the profit potential there is what? $6-7. We paid $3 for it. Now we're going to close that, go out in time. I knew we wouldn't be able to sell the 91 again because earnings are.
You don't need to sell. You don't need to sell the 91 again. You still have the at the monies in 23 days. So you just need to sell something.
So then if we have the 84.88, it's $4 wide. And then we'll have paid like $2.40 or something for a $4 wide. So it's just,
this is keeping the dream alive. If it goes up, great. If not, you can take your $11 loss. I have no problem with that. I consider an $11 loss on an earnings trade a scratch, especially with a diagonal. You're playing for it to go up. It didn't move.
I know. So I'm torn between like rolling this and keeping it going for not a lot of profit potential.
Just close it. Honestly, close it.
Versus for me, I'd rather have, and for me in Starbucks, I'd rather have a short put with 23 rank.
I would close this thing because there isn't that much profit potential. We had just talked about, that's why we went out to the 23-day because we can sell weekly against it. There was something I wanted to not talk out of both sides of our mouth because that's what we said we would look at today.
I know, but it's like, it didn't even, I don't know. I don't like there's not a lot of profit potential. We're paying like more than half the width of the diagonal. Yeah. We don't like to have more than half the width of the diagonal, like in a debit.
Yeah. And like I said, yesterday, that's what we said we were going to do. And today it didn't look good. So just know that that's what happens. Markets move. It was funny. I was texting my son that the other day. He's like, so my pledge brother wants to know what happened why this stock opened here and now it's here. I go, the only thing I responded was markets move.
Markets move. That's
markets
funny. move. That's funny. I would rather in Starbucks do a Jade Lizard where we have the 78 put and then you've got a call spread. You're getting $1. I know it's $1,000, but we have the buying power.
Yeah. I mean, sure.
Then it's just a higher probability trade.
Yeah. It can stay here. It can go down. Chip it.
I'll bring it up $1.15.
Ship it.
And I thought the Starbucks news on the earnings call was good.
Yeah, but it doesn't matter. Jenny, it doesn't matter what the news is. It matters what the market does to it. Do you know what I mean?
And look at the move Starbucks had. It was as low as 81 today.
Yeah, well, so we got out of it.
So, and there was more. It's only a 22-day.
There was other things that we wanted to manage. I can't remember what they were. Oh, we have a lot of earnings on deck today. I think that's what it is.
Yeah, a lot of earnings on deck. And we can't get out of CRM, but I'm not going to. Oh
my gosh! If you take a look at it, open up the CRM markets. Where is CRM? I don't see it anymore. Okay, there you go. The mid is 317, and we're trying to get 370 credit.
When we put it in, the mid was 390, or 385. 390. I pennied it down to 385. I'm not going to chase this.
I wouldn't chase that at all.
I've been penning it down, like
because to your point, by tomorrow, if it's above here, we're going to get more money anyway.
$500.
Yeah.
Okay. So I'm gonna pop into Twitter. Scott Somer, happy birthday to you.
His birthday is November 1st. Happy birthday, Scott! Our international man of mystery. We're birthday buddies. I like it. His is Saturday minus Sunday. So happy birthday, Scott.
And then Bob comes in. Bob on fire. And he's got, today, Amazon, Apple, Coin, Reddit. It's crazy that with the amount of earnings we have today, big ones.
Yeah, yesterday I feel like was bigger than today.
Microsoft, Meta, Google. Yeah.
Yeah. So, I mean, we've got the Apple, Amazon, Coin. I don't know what Coin's so expensive. Reddit's so expensive. WDC, MSTR, Riot, Net. Is that SNet or Net? It's just Net?
It's just Net.
What is Net?
Cloudflare.
I'm asking because that's one of the stocks that JD's one of the people in his finance in his econ class told him to buy and hold for life.
I wonder, did you talk about that on the show?
I did.
Yeah, because I'm just looking to see. I thought we bought it just because JD said to buy it.
So I have it. I bought it because he said to buy it. I mean, he didn't say to buy it. A kid in his class said to buy it, but yes.
Okay, so what did we have? Amazon, Apple, Coin. Amazon at 227. I'm just going to price out these diagonals. I'm going to compare the price of a diagonal to the price of a crab.
Okay.
If the diagonal go in the 1 day, sell the expected move, and then buy the at the money, 620, and it's 27.37, $15 wide.
That's really good.
A third. Yeah, it's a third of the width of the spread.
Yeah, that's not bad.
But it's $6. If Amazon goes down, you're out $6.
Yeah, I get it.
Yeah.
What the heck was that?
Sounded like our train conductor's coming into your studio.
He can break through. I'm just kidding. That's his ringtone. How fun would that be? I wish I did that.
if that was his ringtone.
Yes.
Okay, and versus the crab where you buy that at the money and in the 1 day sell the ratio spread, 627, 640. So that's 1250 wide. 1250 wide. And this is like 750 wide. 417. It is cheaper. It is cheaper.
Ship it. I mean, I don't mind spending $4. All I know is Amazon's at my house every single day. I got to support the cause. So.
Amazon is at my house every day. I don't know how to stop it. I don't know.
I can't stop it either. I can't stop it.
Okay, so I'm just going to do the quick math to see what we would make if it goes up. If our long's the 227 and we sold the 240, so that's 1250 wide, but we're paying $4 for it, so that would make 750. And then the difference between the other spread is 750. So if it blows through, it wouldn't make anything. This was Liz's point yesterday of make this narrower and pay a little more, so you're guaranteed some money if it blows.
And that's what we did. That's what we did in Google. In Google, but it didn't matter because it stayed underneath. Yeah.
Yeah. So right. So if it stays underneath, you'll make more money if you had made this wider. If it blows through it, you'll make more money if you make it narrower.
Yeah. It doesn't matter. Just split the difference. Let's just ship this.
Yeah, 417 is not bad.
No, it's not bad. Ship it.
And honestly, I had one of these on in Microsoft, and Microsoft was down on the open maybe $10, $11 or so. At the time I took mine off, Microsoft was down, I think, $11. And I paid $7 for it. I got $5 back. So I took a $200 loss. I was wrong. Microsoft was down $10 and I took a $200 loss. So I didn't take a full loss. So if Amazon's down, but not down crazy, it won't be a full loss.
Yeah. I mean, if it's down crazy, it'll be a full loss, but otherwise your 8 day or your whatever day should maintain some value. Do you know what I mean?
Yeah.
And Jenny, I just we would be remiss if we didn't talk about this. SPOOs are down 32. What's the lowest you've seen them today? Down 40?
Down 50. 45? No, I saw them down 50.
You saw them down 50. I missed it because I was actually driving, but you saw them down 50, right? So
where were you going?
I got my hair done.
Oh, looks beautiful. I forgot about that.
Thank you.
You're all ready for your big birthday weekend.
But yes, that's where I was, and I missed the open, and it was down 50 when I came in. And I was like, "What just happened?" Jenny's like, suppose you're only down, whatever." Okay, so I just want to talk about. Can you go to Twitter and go to what we posted yesterday? I think this is kind of important.
Yes. Yeah. Excellent. Excellent segue. So yesterday, Jacob's study, which we asked him, we asked Jacob to do a study, Impatient Bulls Part 2, selling put spreads, but then managing a loser, putting in your GTCs, but then putting in the like management of a loser to close it at noon. If you didn't see it, watch it. I think it was great.
Honestly, Jenny, I'm looking at this like a game changer. I really, truly am. I said it yesterday. I'll say it again today, because what we're saying here and what I'm hanging my hat on now and what happened yesterday and today, and we are both down days in the market, is fascinating to me, because yesterday we put it in at the right time, right around 9:00, and we both closed it at noon on the train. So I lost $50, and it was a down day. We ended the market down, 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 down.
Yeah, I closed mine at noon too. It wasn't that bad of a loss. At the end of the day, it would have been full loss. Okay, so a lot of people have been saying this only works in a bull market. This only works in a bull market. Now today we're down. Would
you argue we're up or down right now today?
We're down 33 right now. We were down 50. We're down 33 at 9 a.m. 9 a.m. we were down about 20. We're down about, or 9 a.m. maybe we're down about 17, 901, 902, 903. We're down 20. And I put this on. I put it on. It was like,
no, you did what you're doing, and I'm doing what I do. You did the $10 wide, 30 delta.
Yes, I got $2. You started at the 30 delta short, did a $10 wide, got $2 on a $10 wide, getting $2, you're risking 800.
And we're both doing it so that we're testing these waters. I did the 50 delta, $10 wide, and I got $4.
Right. That makes sense. So, my trade has a higher probability, but it has more risk. That's how options work. The more risk you take, the higher probability you have.
Correct. And so we both got out wrapped around the same time while we were talking, only maybe 30 minutes after we put it on. So I just want to be clear about this. We're not saying that this trade, you're putting this on and leaving it. We're saying put this trade on. If you get the pop, which Jajun was our researcher a long time ago that said, whether it's a bear market or a bull market, you get a pop between the 9 and noon. There's more 5-minute up bars than there are 5-minute down bars. That's really all we're playing for with this type of a trade, is the 5-minute up bars. So both of us got out, and then we both watched, because our GTCs were in, we watched the market fall out of bed again. What are you looking at?
I'm trying to see what time I got out. So I put it on at 9:02 and I got out at 9:44. So I was just trying to see. And I thought about with the market down, and it was down 50 and now it's only down 20. Maybe I shouldn't put it on. And Liz said, I'm putting it on every day. And I was like, okay, we're putting it on every day.
No, here's a shame on me, because I was late. I put mine on at 9:20 and I got out at 9:46.
So again, this doesn't matter if it's a down day. It doesn't matter if this market turns to a bear market. You're not playing. This isn't a long-term trade. This isn't a 90-day trade. This is a 0 DTE, and you need just a pop to get out. So I don't think people who are saying it worked in a bull market. We're doing it every day. We're testing it. Or if we end up in a bear market, we'll see how it goes. We'll let you know.
But so this is a down day, and it works. You're just looking for that little pop. And I think the game changer for me in yesterday's episode, and I think this was what I really liked about this, is I'm looking at this from a perspective of even from my kids' perspective. If closing it at noon, your drawdown is a lot. Closing it at noon, meaning yesterday, we wound up being way down on the day from where it was that I put it on, but I only lost $50 on that trade. So when you're going to net out your profits and losses, if it doesn't work by noon, get out is not a bad way to do it. It limits your drawdowns.
If anyone missed this, talks about the different profit targets and then how these perform versus closing a loser at noon versus letting it go till the end of the day. And as far as profit targets go, I put in the 35%. Yesterday we talked about 35% is kind of where we have been hanging our hats, and that's what I did. Sold my put spread, put in a 35% profit target, and just called it a day.
Now, I went with 50. I was 50 delta, 50%, and I was out in 24 minutes.
Okay. And again, they all had great results. So we'll see. We're going to keep doing these every day. Liz wants to create one account that is only used for SPX just to have an easier tracking of it, because sometimes we do.
When I say just SPX, I'm not even going to veer from it. I'm going to pick one of these things and stick to it. So it's so mechanical that I don't even think about it. It's not like, ooh, we're up today, we're down today, I'm going to take 35% or 50%. I'm going to pick one and stick with it. Do you know what I mean?
So it's funny because last night I was talking to the teacher. We had the golf banquet, and the teacher who runs the stock market club was there, and she was asking me again to come. And I said, I will come to the stock market club, but I'm not going to play that silly game where they buy stocks. Like, they can keep their computer. We're not playing that. I need a marker and a white dry, a dry erase board, and I'll teach them. And I can't decide, Liz. Can I just jump in and teach them this SPX 0DTE without starting with the, what's it called? What's a put?
Oh my God. I don't know, because that's not teaching anybody. I know my son doesn't even know what he's doing. He knows to open it up and go with the bar. I was like, sell the bar, count 1, 2, buy, 1, 2, buy. He has no idea what he's doing.
That's what I mean. That's what I mean.
That's not really teaching. He'll eventually, I was hoping he would backwards into the learning it. So I don't think you can start. I really don't think you can start there.
I'm either gonna go into my first stock market club and teach this 0DTE $2 wide put spread, or I'm gonna teach
selling puts and low price products.
Yeah, selling puts and a $10 product. I got one or the other for the stock market club. I don't know which one.
I think that you got to go with selling puts in it, because they would have no idea what you're talking about if you started talking about 0DTE, SPX, put spreads closing at noon.
I mean, listen, kids, who here has heard of 0DTE, SPX? How many hands are going to go up?
That's awesome. I hope a lot of hands go up.
Oh, man.
Okay, so I just wanted to get to that. Let's get to some other tweets, too, and then maybe we'll go back to some other...
Okay. All right. So Frank posted this. This came in from YouTube. So if you're on YouTube and you have a question, Frank will share it with us. This came from Jared Kramer. Anyone else like a calendar call spread here on Meta?
We can take a look at that. Let's take a look at that. I also want to go to Blue Wackadoo real quick, just because I know we don't have that much time. Go back to Twitter.
We don't have a lot of time.
We only have 10 minutes. What? Look at this. We were worried about if everybody would be out. So this is what he's doing. He... the first one is 15.5 delta. I put in 2 6-lot iron condors.
I'm zooming in.
Doing both sides in the iron condors. And I'm just reading it down there. And then he's done for the day. Thank you, Mr. Market, is what he said.
Well, and you know what? I mean, both sides made sense today because vol was high, and you could get far with your calls too. Yeah. So I did look. I was like, maybe I do both sides, and I even thought, even kind of skewed, like $10 wide put spread, $5 wide call spread, because you were getting far today. The vol was up. I don't know. So it is kind of nice to go and look through what he did. Good. Nice.
Yeah, those were good. Like I said, we were worried. Just on the heels of finishing up that SPX, these are all a menu. I wish I could separate it into so many different accounts where I could be like, and just this one, and just this one, and just this one. So they're all separated. Maybe I will. I got a lot of time on my hands. Okay, so let's go back to the calendar and Meta.
Yeah, the calendar and Meta. Let's take a look at that. And then Scott did ask, Cannon Bridge House 20. He's given an address. He's giving. Get me Glenn Freiberger, G Money's mailing address, and I can set him up with a red shirt. Oh my gosh. 20.
That's hilarious. I love it.
Okay, so Mikey, email me, Jenny at tastylive.com, JNNY. And
Mikey can just text you.
But here, I'll let you in on a secret. Glenn goes into the office every day, so you can mail it to the office.
Oh, yeah. Can we give the office address? We can, can't we?
Yeah, anyone could look it up. Anyone could look it up. So, yeah, so Glenn goes into the office every day.
It's so
funny. And Ajit, welcome back, Ajit. He's looking at a short strangle in Target.
Ooh, we haven't seen Ajit in a long time. I'm so glad to see him.
I know. Happy to see him again. We've met Ajit. He's wonderful. All right, so we got to... and does anyone dare sell DCMG post-earnings put? Scott, I'm tempted.
I was tempted this morning, too, with it down. Okay, so we're going to look at a Meta calendar. We're going to look at a Target strangle, and we're going to look at CMG puts.
Yeah, I know. We've got a lot. There's so many tweets we didn't get to. I'm sorry.
I know. That's why I was like, we don't have a lot of time.
Oh man, I don't know if we'll get to them all, but a meta calendar is going to be expensive. I know that. You know that. Let's do pool medic style to make it cheaper. So 8-day expected move. He said call calendar. So let's just go.
Did they say call calendar? I'm going to double check just to make sure.
Oh, I don't know.
I just thought they said calendar, but I could be totally wrong. Maybe. Give me a second. I'll address the name.
Even pool medic style 10-day, 30-day calendar is still $1,000.
It says calendar call spread here on Meta. So yes.
Yeah. So like $1,000 calendar is just a bit
outside of our range.
Just a little bit high. But what might be better for us with CMG down 15%, and I think it was down more. It had a little bit of a rally here. Yeah, because it got down to 31. Check out these puts in CMG, and I'm still sticking with Nove. Oh, I don't know. No, maybe you got to
go to D's. I think you got to go to D's with this. And yeah, the 32.5. It's trading 33.5, by the way. So you get the 32.5 for $5. That's not bad.
I don't think it's great, though. I don't think it's great. With a 15% down move, I want more room than that. I don't want to go 50 days out, get $1.19, one strike away, $1 away.
But it's only it's only a $30 stock.
I don't like it.
It's only a $30 stock. I don't mind.
If I'm going 50 days out, I want to be more than $1 away.
Go to the 22-day. I think it's deceiving because this has 250 white strikes. That's what I was going to show you. Look at this. So you'd sell the 32.5. You're only 80 cents. Like you're 50 cents away here.
It was the same strike. It was the same strike. It was the 32.5. It was the same strike.
Yeah, then do the 23-day.
I just don't. I don't think you're getting enough room. I don't think on a heels of a 15. Liz, how many times have you seen down, down, down?
Oh, I have a 3-day rule, but this is so cheap it doesn't even matter to me. Like Chipotle Mexican Grill at $33. Is this thing going out of business? I don't think so. It's jam packed every time I go in there.
I can't pull the trigger.
Okay, that's okay. Then go to Target Strangle because I want to make sure we get some other trades in.
Do we have Target? No,
it doesn't look like it.
Okay, I have puts in Target. I have puts in Target, but it has had a little rally. They do have earnings in November. I don't mind puts. I mean, they're pretty. You can get a lot. Like, look at this. You can sell the 20 Delta puts for $1.55 and use only $850, and you're $10 away.
Sure. That sounds good. Can we look at what Ajit had and then go back? I don't mind this, but
he had the 105 call and the 85 put. So I'm at the. Oh, I'll move it up. I was almost
okay. I think you're filled, aren't you?
No, I didn't push it out yet.
Okay. I just wanted to look at what he had because he's the one who brought the idea to us.
I don't like the naked call with. I mean, look at Target this year. Since January, this year, it dropped from like 150 to 94.
And I swear I've been single-handedly keeping Target in business these last couple of weeks. I don't know what's been going on, but my Target bill is through the roof.
So I say let's just do...
Puts are neutral too. That's the one thing. Puts are neutral too. That's a great line. I love it. I'm giving credit where credit is due. That's TP.
So I just sold those puts. Puts are neutral too.
Puts are neutral too. Puts are neutral too.
Okay, so... That's out. I'm going to see if I get filled on the Starbucks Jade Lizard. I'm kind of surprised that we're not getting filled on the Starbucks Jade Lizard.
I am too, but I wouldn't, you don't need to necessarily chase it.
And we never got out of CRM.
No, we never got out of CRM. No, because that one wasn't a real win if it looks that big.
Let's see. If they didn't split 16 months ago, it would be down more than, it's talking about.
Yeah, that's true about that.
Wasn't that long ago? ADV was around 50 million. I see 100 million plus a day when the PDT's restructuring goes through.
Yeah. When is the pattern day trading rule restructuring going through?
Is it going to be like January? Is it going to be end of year? I'm not 100% sure, but I don't know.
I don't know either. Can you, okay. Never mind. I'll look at it real quick.
Here, this comes from Steve. I believe Tasty Sports multiple margin accounts for the same client will allow you to separate SPX trades. Yeah, Steve. Liz has like 5.
Steve, I already manage 5 accounts. I'm looking to put 5 more in there so that I can. I'm looking to have 5 more in there so I can keep everything compartmentalized.
Oh my gosh, I can't. And she has all these accounts linked, like her son's account linked to her account, linked to our show account, linked to all these accounts. And then I don't know how many times I'll hear you say like, "Oh, damn it, I just put that in the wrong account."
Well, the only thing I can't do is to the show's account because they linked it to me read only. So no matter what I do, no matter how bad I get, or even if I'm closing one eye trying to put a trade in, it cannot go into our show account. So I'd just like that to be stated for the record. But I can't tell you how many times I put something ridiculously expensive into my son's account.
It is kind of funny when that happens. And I love this. This comes from Blue Collar Options. These ladies are the reason my wife trades.
I love it. Thank you very much, Frank, for sharing it. Thank you, Blue Collar Options, for having your wife trade because women make great traders.
All right. So as far as what we did today, and we had so many earnings we didn't. Let's get one more earnings trade in.
I know. What did we? The only thing we put in was Amazon.
How about?
Do you want to look at Apple?
Yeah. Yeah. Let's look at Apple. 271. What do you want me to look at?
So Apple, this is, in an ironic turn of events, this is the only one of the Mag 7 that I don't have a position in. It truly is. Like, I had Apple, I had Google, I had Meta, I had Microsoft, I have Amazon, I have NVIDIA, I have everything. So I don't have anything in Apple. This is the one I don't like. Apple used to have, it didn't have my number. This was my Jade Lizard candidate of the best year of my Jade Lizard life, but not at these levels.
I know. It's hard at this level for me to get into Apple. It's hard. And what was where did Bob's list go? We've got.
Oh, it's pretty far down because we had a lot of tweets.
Amazon, Apple, Coin, Reddit. I do like all of those.
I don't have Coin or Reddit right now. I know you sometimes do.
No, I usually do, and I don't right now.
Let's take a look at Coin. Yeah.
Because, okay, so Reddit at 198, that's not terrible.
Reddit's had a pullback. That actually is intriguing to me.
Yeah, let's see. Let's see how much would since we've been like crab.
Yeah, but you know what's you do that. I'm just gonna pull up something else. I just want to see how much it is. Just because we're running out of time.
225, 240, 25, 35, 40. That's $15 wide. $15 wide. And then this would be $25 wide. So you've got 200 to 225, $25 wide, paying $7.80. So you can make like $17.50 there. And then the next spread.
It's expensive though. But you only have one by one. Oh, you have two a lot in there. Never mind.
It's expensive because Reddit's a big, look at the expected move in Reddit, $31.
You can make a lot of money if you're willing to put up a lot of money.
Yeah. Or, again, we don't have a lot of money in this account to just blow on an earnings trade because
boy, do I wish we did, but no, we don't.
maybe we just sell a put spread.
All right, do it.
I don't know. I'm going to do something in Reddit.
Well, we can do it after earnings too, right?
And what do you get for like a ratio spread here? 239. That's not bad. Get your break even to 167.
Sure. I don't mind doing something. Hit it.
$5,700.
Oh, I didn't see that. I was pushing out trades. Somebody's got to keep an eye on you. If I would have seen that, I would have said no.
Yeah, I don't know. We'd have to buy.
If we can't risk $700 on a diagonal, I don't want $5,000.
Here, $800. I bought something.
Okay, fine.
So 180, 175 downside ratio spread, and then I bought something. So
I do like downside ratio spreads on a Thursday because no matter what happens, this is done tomorrow.
Yeah.
Okay, hit it.
If we lose 800 in Reddit, I'm to blame. I'll take the blame.
We never take the blame. Love means never having to say you're sorry, Jenny.
All right, that's it. We're out of time.
We are out of time for the day. Everything is pushed out. Okay. Good luck with your earnings trades. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
See you tomorrow, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Hello, everyone. Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal. And, of course, Katie McGarrigle.
The lovely.
Lovely Katie McGarrigle.
Oh, thank you.
Yes.
I just looked over at our in-studio monitor, though, and the paleness is really... I've got Victorian child stuff going on right now.
As somebody has told me before, usually you're the only one who notices something that you think is wrong, okay? Don't worry about it. You look awesome.
Thanks.
What's going on, guys? How you doing? What's going on?
Happy Football Thursday. I almost said PGA Thursday.
You know what's funny about that? There is no PGA event this week. For whatever reason, they gave the players Halloween off.
Weird.
Wow, that's good.
Yeah. Yeah.
Are you all dressing up? Well, you're flying.
I'm flying.
Flying
to San Diego tomorrow.
That's right.
It's going to be good.
Yeah.
If you want to join us, you've got a couple days left to sign up. tastylive.com/events. We will be there at the Music Box Sunday evening. But yeah.
I haven't been there in forever, man, San Diego. The first time I went was for a conference in oh God, a long time ago. It was like 2004 maybe. I know, right? Why you got to give me the Kevin Hart treatment? Damn.
Well, because when you said that, I was thinking of myself in my backpack walking through high school. That's where I was.
Yeah, it was a long time ago. I used to have a buddy that lived out there, and we went to college together, and we used to go hang out and stuff. Yeah, it was cool. It's been a long time, but I love San Diego. It's been way too long. And then we went a couple of times. We went to a wedding in La Jolla. That was awesome. It was beautiful.
Very posh.
Yeah, it was. It really was, actually. Yeah, good memories of San Fran. Went to that. There used to be an aircraft carrier out there. I don't know. I assume it's still there. I don't remember what the name is, but it was the coolest thing. If you could check that out, that would be cool.
Yeah, because isn't Camp Pendleton right there?
Yes, there is a base. Yeah, there's a base. Yeah, for sure. There's a lot of military. Thank you for your service, all of you. Yeah, it's awesome out there.
Yeah,
Love it.
Should be a good time.
Yeah, should be.
Be a grand old time.
Yeah. Speaking of fun times too, while we're just at shameless plugs outside of tastylive.com/events, Tasty Trade, for those of you in New York City, hosting a pub quiz in a couple weeks. Co-sponsored with the Financial Times. I'm going to drop the link in the chat. But yeah, fun little Financial Times Alphaville pub quiz. There's going to be some giveaways. Should be fun. So if you're in New York, go hang out. It's all like financially related questions too. So you're going to be with your people, is what I'm trying to say.
Yeah.
Where? Like in the Village or something?
So it is at Houston Hall, 222 West Houston Street.
Oh, Soho.
Nearest subway stop is Houston Street Station on the 1 line.
Soho area, sounds like.
Tuesday, November 11th. Quiz starts at 6:30.
Love to see it.
Yeah,
be there or be square.
That's sweet.
Yeah, should be fun. I don't know if any of the Tasty Nation is going to be able to get out there. We'll have to see what the budget allows for.
Oh, that's near NYU, right? Washington Square Park. Isn't that? Yeah, that's like NYU area. Nice, that's cool.
Pub quiz.
Pub quiz.
I mean, look at that. They even said lots of tasty food served on platters.
Indeed.
Tasty.
Tasty trivia, tasty food.
Yeah, that'll be fun.
Yeah.
Grand old time.
Yeah, for sure.
What was I going to say? Oh, I've got the Money Match promo pinned at the top of the YouTube chat as well.
Money Match.
Shout out.
30 days commission-free trading, 1% cash match on any deposit in that 30-day window as well. Sign up today if you don't have a Tasty account. It's a great way to check it out. You can scan that QR code. I'm just like, I'll never forget that commercial, the survival food kit, and half the commercial is explaining how to use a QR code. You see that little box there? Take your smartphone out, put the camera on it. You'll see a little link. Click that link. You'll get this amazing deal.
Doesn't work with your Nokia brick.
I'm almost surprised that they actually said QR code and not the whole word.
Yeah.
For that situation.
I already forgot what you guys told me it was.
I actually kind of forgot too.
Quick response.
Quick response. That's so funny. I was literally thinking.
Quick response.
Mikos, thanks, man. Appreciate it, man. Thank you.
Yeah. Not thank you to Mike. calling out my rough hair day that I'm having. I see you. I'm sorry. I don't roll out of bed, and we're not all perfect when we get out of bed in the morning.
Judy Jetson's hair was great. What are you talking about?
I don't
I used to
know.
love the Jetsons. Jetsons was probably my top 3 shows that I would watch all the time.
It was good. It was good.
Jetsons. What was the other one? Something
Flintstones?
After Dark. The talk show After Dark with the.
Oh,
Afraid of
with
the
the
dark?
Ghostface? The ghost,
Yeah,
the Space Ghost?
Yeah.
Oh, Space Ghost.
Yeah.
Coast to Coast?
Space Ghost.
Yeah,
Coast to
yeah,
Coast.
yeah, that. You watched that?
Dexter's Lab.
Oh my gosh. Good stuff.
You know.
My brother loved Space Ghost, Coast to Coast, actually.
I was a Scooby-Doo head.
Scooby-Doo's
Like,
good too.
like that late night Cartoon Network.
Yeah.
And then it would turn into like Speed Racer at
Exactly.
some point.
Speed Racer, Smash.
My favorite is Tom and Jerry, like hands down. You
Really?
put Tom and Jerry, yeah, and I.
Damn.
Tom and Jerry.
Tom and Jerry.
It's my favorite, man.
I like
It's timeless, man.
Yeah.
It's timeless.
Do kids even have Saturday
Hell with you,
morning
Mike.
anymore?
What?
Like, do kids even have Saturday morning cartoons anymore? Because
No,
they just have everything on demand.
They watch everything on YouTube.
Yeah, everything's
I got it,
YouTube. Everything's,
Mike-
what is it, Bluey. You got
Miss Rachel.
My 13-year-old, honestly, the last time he watched like regular TV a lot was like when he was watching the few cartoons he did. It was like Blaze and the Monster Machines. I don't know if you guys ever heard of it or saw it. It was basically a ripoff of Cars. It was just monster trucks in a way. But yeah, I mean, everything is YouTube. Like they all watch YouTube. That's it. They don't really watch TV. They ain't got time to wait on a time for a show. No. They watch TV when they want to watch it, not when TV wants them to watch it.
Yeah, that's crazy.
Yeah.
Because like Saturday morning peak cartoon was like the thing.
What was
You're
the
like-
best?
Get your
What do you
bowl
want
of corn pops ready.
I wasn't a cereal girl, but
Oh, I was an absolute cereal person.
Yeah. Oh,
Corn
yeah.
Pops, Cinnamon Toast Crunch. Those are my top 2.
Cinnamon Toast Crunch is a good one for sure. Yeah.
But yeah, we've had a kind of a wild market here. You had a mixed bag of earnings yesterday. You had Meta tank. It's catching a bid today though. It's actually above the opening print. It opened at 668, dropped as low as 650, and now we are rallying up to 675, but still down 10%, 78 points, huge gap down. They missed earnings per share by like 80%. They were expected to post like $7 or $8. They posted $1.
Damn.
Yeah. Google, on the other hand, gapped higher, which leads me to my trade idea of the day, which we'll keep secret for now. But Google gapped higher, selling off a little bit, but still nice to see that you can get a nice rally in a tech stock. Microsoft was another kind of mixed bag. It gapped lower and then caught a bid in after hours, down 14 points. This was within the expected move. Meta was just outside of the expected move, and then Google was, I believe, at when it was up at like 15 points. I think that was the expected move around there. So inside, except for Meta, just slightly outside. So today, you have Amazon after the close, 14-point expected move on a $225 product. Pretty decent implied move there. And then you've got Apple, 8-point expected move on a $270 product. This is a really low implied move for a product like Apple. So I'm not touching this from a short premium standpoint. If you want to be directional, fine, but I would rather be bullish than bearish in something like this, but we're at highs. So I don't think I'm going to trade Apple at all, honestly.
I felt the same way about Google, and I didn't trade it, and look what happened, you know?
Yeah, your call calendar spread would have been printing.
Yeah, I don't know. I definitely felt the same way about Google. I was just like, this one is just a little elevated. There's no way. And then sure enough, it took off. So I don't know. Maybe I'll play Apple. I haven't decided yet.
Yeah, I mean, we've seen some cloudiness in the earnings reports.
I see what you did there. Cloud. Yeah, I see.
Well, that leads me to my next statement about Amazon. But yeah, real quick market update. Nothing's moving. The end.
Ta-da.
From a futures standpoint, we've got copper down 3%. You've got Ethereum
And MXPX.
Yeah, MXPX down bad 5%. Ethereum, Bitcoin down 2.5%, 3%. Wheat down 1%. We don't talk about anything within 1%. To the upside though, Natty Gas catching a bid up 3%. Silver leading the charge from the precious metals, up 1.25%. Gold up slightly, but yeah.
Back above 4K.
Yeah. It is interesting to see the divergence here. Soybeans ripping and wheat selling off.
Yeah.
So 2 ags moving in opposite directions in a pretty substantial way.
Well, it's the whole China story, right? With soybeans, like supposedly they're supposed to buy. I just wonder if all of this news that is coming out here, when does it unravel? You know what I mean? Like, this is kind of like a lot of what we've seen throughout the year. Oh, we got a great trade. It's gonna be okay. Oh, they're reneging on the trade. And so, I don't know. It does make you wonder if you want to do a little call spread in soybeans or something.
Yeah.
It's been ripping.
Right. Well, and is this technically old crop or new crop? I don't know.
Couldn't tell you.
I don't know.
I gotta go back and rewatch my old segments with Pete.
Gotta just ping.
You sounded so much like Pete right there. You
ping
said that,
ping FX Westwater on Twitter.
Yes.
Give us the deets.
Yeah, Thomas is like actually like an agricultural farmer as well. Bringing jalapenos from his.
Those are his, right?
Homestead.
Okay, because everybody's been asking me about him at the big boy table. I assume they're his.
Yeah.
Tony got all granular on me. Tony saw him. He goes and smelled them, and he's like, "I think they are." And I don't even know what word he said, but there is a different type of jalapeno that are a little fatter and spicier. I don't even know. I'm sure chat might know. It's more than I forgot. Literally, he's like, "These are silencios," and I was like, "Damn, Tony, that's really granular. Like, I'd never even heard that before."
Jalafuego.
I thought they were just jalapenos. Like,
Right? Jalapeno Traveler, Senorita, Haloro. All types.
Considering Thomas planted those himself, I think he would know.
He would.
You can ask him. But yeah, join us on the YouTube channel. We're streaming live there. Just head over to Tasty Live. You can throw in your trade ideas, questions along the right-hand side chat. Click on that Money Match promo at the top of the chat if you don't have a Tasty account. Nice little promo there. And then if you would like to get your news and insights written content for some earnings coming out, I'll pop a link in there. Plenty of earnings content for your vision digestion, eye digestion. I don't know. I gotta get out of here.
We'll workshop it.
Yeah. Okay. Should we pop over to the slides? Get through these trade ideas. You added a spooky 4th trade idea.
I did.
What?
Yeah.
Yes.
Love to see it.
Oh, trade ideas.
Yeah.
Nice.
Yep.
Nice.
All right. Let's dive in here. So Amazon is my trade idea today. They have earnings after the close. It's down in sympathy, I would assume, with some of these other tech stocks that are down. But when you think about Amazon's revenue makeup and how they make money, a lot of it is very similar to Google. So if you think of Google as Google Cloud revenue, you've got advertising revenue. Amazon is similar in AWS, and I think when you think of the consideration that Amazon, from a business standpoint, is very similar to Google, which has ripped after the close due to their earnings report, I'm more inclined to place a bullish trade in Amazon than I am Apple for today. So with that said, still a very small trade, keeping it within the kind of context that we're seeing in the market. So going to the 250 call in December, I bought that for $6 and I sold the 250 call for tomorrow for $1.40. So reducing cost basis on that long option by 20%. The risk graph that you see represents pushing the expiration to tomorrow. So the risk graph assumes that we get all that premium from the short option, and I crushed implied volatility in December by 5 percentage points, I believe. So I brought it to around 35%, which is where the other ones are right now that are further dated. So if we get a rally in Amazon, even if it's an inside up move, it'll still be a couple $100 winner. If we go straight to 250 or even above 250 a little bit, we can double our money here. And yeah, I was filled at 462, so well within my trade size. But I like this trade because even if Amazon doesn't move or if it sells off, that 1-day option is going to be worthless. I can roll it into November, which will have 21 days to go. I could roll it to a calendar spread, or I might even go to like a 5-point wide diagonal spread. Since my basis is already under $5, I have that flexibility of going to a 5-point wide diagonal spread. And even if I collect like $1 or something around there, it still sets me up for a nice bullish reversal over the next couple of months. So best case scenario, you get a rip to 250, which would be outside of the expected move. Expected move to the upper side with a 14-point range would be 240. So 10 points higher than the expected move to the upside. But yeah, if it doesn't happen, we can manage it, reduce basis further. Still a small trade, nonetheless.
Well, according to the Oculus, Amazon is supposed to moon.
Oh, yes.
So
does the Oculus rhyme with
Brick?
Blick?
Batista?
Yeah.
Yes.
Yeah. I mean, I think it makes sense. Yeah, if you just look at Google and Amazon's similarities and Google rallying after their earnings report, I think it's, even though Amazon is down today, I think it's an interesting play.
Yeah, I mean, if the stock runs, I think this is a home run for you because I love the idea of it obviously going to 250, but I feel like that would be the upper bound. Like, I don't know if I see this going like 50, 60 bucks. I don't see that type of move on earnings. So it's a nice one. And even still, I mean, that really works for you because you're going dece, right? Yeah. You got some volatility value there. So that would definitely, those would, if it went, first of all, if it jumped $60, $70, that dece is going to explode vol-wise.
I'll bite. I just got filled at 424.
I got the same thing. I just did Nove, but I actually like yours better, honestly.
Yeah. I mean, when you look at the cost difference between Nove, so for Nove, you pay $3. For December, you pay $5. And you're getting almost 3 times the amount of time, and you're getting way less of a vol collapse. In Nove, you got 48% IV. In Dece, you got 41%. So you'll be able to sustain a lot more of that extrinsic value, regardless of the move in December versus Nove.
It says to me that upside is kind of cheap in Amazon. Honestly, is what it says to me.
Yeah. But that's that on that.
All right.
What do you got for us, Jamal?
Oh, pretty simple, straightforward. Fiserv, we saw it get wrecked on earnings yesterday. Big move. Stock hasn't really been looking good anyway, honestly, over the last, this past year, as you can see. Usually kind of scary to sell a put after it gets wrecked like this. It's been getting wrecked overall, and then to see it move on earnings. But it's just playing it for a little bounce back. Look, the vol is high in here after this big move. And I think the one thing that makes me feel okay to do this is that this is a name that's in the S&P 500. It's not some random name. So that's one of the reasons why I feel okay selling a put here out in December. It's got some time. Yeah, I mean, it's pretty straightforward, you know. I sold it for $260. You could probably get it for maybe a little bit better. Stock was 67 when I did it. It's about 40 cents less right now. Of course, doing something like this gives you a pretty high pop. But yeah, that's what we're doing here, selling puts and names that are getting wrecked. But it's S&P, like, again, it's an S&P 500 name. At least it still is right now. It might not be next year. But yeah, this stock has had a rough go of it, just betting on a bounce back.
And it's FI, right?
Yes.
Okay. Updating.
Yes, actually, it's funny. Somebody said that. Yeah, apparently it did announce. Not that we usually pay attention to this stuff, right? But it did announce a bunch of stuff yesterday. They're, I think, a new CFO, and they're changing management and stuff like that. And you see what happened here, and it was funny. I think I saw somebody say yesterday, I know one way you can fix the company: change your ticker back to FISV from just FI. It's kind of funny. Yeah, but that's what we're doing, selling puts.
Yeah, this break even brings you back to 2017 levels. Craziness.
How about it?
But yeah, I like it.
Fiserv form.
Yeah, if you're cool, yes, Fiserv form, exactly.
So they're gonna, they might end up losing Giannis, and then this is another reason why it's not gonna look good.
Oh yeah,
it'll be good for the Bulls though.
If they lose Giannis, this thing's going to zero. No, they've got. I actually do love the Fiserv area, like outside of the stadium.
Yeah.
Sick. They have
Deer District,
live music, the whole 9 yards.
Yeah, we went to that deer district. My wife is from Wisconsin.
Lamentingly. Didn't you guys meet at school?
We did, yeah. No, I love Wisconsin. I went to. Shout out to John McGloin, Badgers in the house. Yeah, we met there, and so I say that because when the Bucks were like on their run, we went, checked out, and we were in that deer district. Is dope.
Yeah,
and that's what every other team is trying to do now.
Yep.
Oh yeah.
Yeah, Gallagher Way up by the Cubs and eventually by the United Center. Seems like that's going to be the play.
I'm very excited for the United Center.
Oh yeah.
I mean, it's right down the street from this office, so
Should be good. Yeah.
Lovely.
All right. Well, I've got one debit trade for y'all, and then I've got one credit trade. I'm just doing a little bit of like a post-Boeing earnings bounce play, if you will, in a defined risk way. Obviously, post-earnings, you see that volatility crush and that premium kind of come out. So I thought I would just take kind of a 50-50 shot on seeing if we'd get back above 210 over the next 50-odd days or so. So giving myself a little bit more time on this one, but the shorter end in November just felt like not worth it, frankly. So I am long the 200 call, short the 210 in December. I paid $474, so obviously being a 10-point wide spread, my max profit there is $526. Nothing really crazy here. I'd be happy to squeeze out $150, $200 from this thing, depending on how long it ultimately takes if we do see a bounce in Boeing. So yeah, that's my explanation there. That's my story. I'm sticking to it. And then, I had to come with a futures or a futures options trade for you all. So I'm kind of doing what I'm calling a synthetic jade lizard, if you will, in crude oil. So that means that, I've got that smaller call spread where with my wider put spread, I have collected a credit more than the width of that narrow call spread so that I have no upside risk. You can see by my chart here, I guess, or graph, that I'm trying to encapsulate a lot of what the expected move is for crude oil over the next 47 days. But where that ultimately put my strikes was the 56-54 put spread, the 64.5, 65, so very, very narrow call spread, and I picked up 51 cents, so $510 in credit. So if we blow, bless you, past 65.50 or so, I won't really make anything to the upside, but I was comfortable with that, just trying to, encapsulate if we kind of see a bid get caught in crude.
I like it.
Yeah. like them both. Matter of fact, I'm going to try and get a diagonal off in here. You're right. The upside, no, there's really not much there. I might sell upside weekly, but God, these are a little wide. I'm not sure. I want to do something in there. And we did say bless you, so that means you can't hurt us.
Yeah.
All right.
Also,
I eat dogma. Okay.
Last thing from a defensive perspective here, because I'm sure people are asking, what happens if you're tested to the downside? What I would probably do, depending on the time left in the trade, is take that short 64.5 call and roll that down to pick up more credit. Not roll the whole very narrow spread down. It wouldn't really be worth it.
Yeah, makes sense. I am long the micro crude contract already, so I'm in with your bullish stance here.
Same.
Okay. So 4 trade ideas.
Mm-hmm.
One spooky futures one, if you will.
Spooky.
And 3 regulars.
Love to see it. All right. Popping over to the YouTube chat now. 2026 event dates. Tasty, question mark. So yeah, this is our last one for the whiteboard tour. And then just immediate. I love it.
Hello, they're on it.
But we do have not 1, not 2, but 2 remaining.
Not 2, but 2.
Yeah. So we've got Austin at Work by 11 with Tom and Bat, Friday, November 7th, 9 a.m. Central. And then the last one, Dr. Jim in Tampa, Florida, December 7th, 6 p.m. Eastern. So
He's
2 more.
Really far for that one.
Yeah. 2 more,
walks
excluding
across
ours
the
coming up. Yeah, literally. But yeah, we will huddle up, see what what works for next year. And of course, we will post it to the events tab on tastylive.com. But it's been fun.
Yeah.
It has been fun.
For sure. And speaking of that, if you have suggestions, we would love to hear them. So support at tastylive.com or drop them in the chat. Like, what have you liked at other events you've been to? What would you change? Did you like the live trading thing at Tom's event versus our like late evening shows? Do you want us to keep the open bar? Tell us all the things.
Yes.
And we will try to take that into account as we plan for next year.
Indeed.
We could combine them both, live trading and mimosas.
Ooh. What could go wrong?
What could go wrong?
getting blitzed before noon, just ripping
I like
futures.
it.
Yeah.
We got to come up with a catchy thing.
Like a signature drink?
Definitely. Yeah, definitely.
Yeah, but you mean a name.
Yeah. What drink am I thinking of right now that has a cherry? Is there any drink that has a cherry?
Tom Collins?
Thank you. Todd Collins. I am thinking about that. You said that kind of fast.
Like sometimes I've seen Manhattans have cherries.
You said that kind of fast.
I was gonna say kitty cocktail.
Shirley Temple, yeah.
But we got to find something. That would be interesting.
That'd be fun. Yeah.
Nice.
Yeah, well, we could do something like that. That'd be fun. Yeah. All right. Wingstop. Down bad.
Wingstop.
Down 17 points.
Going there.
Yeah. What do you all wingmen and wingwomen think about wing short strangle at the 16 delta for 1121? So I assume you're going to November.
I haven't even looked at these options, but I feel like they're wide. I haven't even looked at them.
Right? Do we have like an eagle
And I'm
sound
right.
effect for wings?
Yeah, that would be great.
That's close enough. we'll go with it. There you go.
There we go. That one needs to be used way more often.
That's the best one.
Yeah.
Oh, we got some. What are those called? Crickets. I live in the city now, so I don't even know what these things are anymore.
You don't see them. You know what though? There's a crap ton of grasshoppers, and actually maybe there are some crickets like in that little grass patch like near our booths.
Oh, really?
Interesting.
Yeah, I think they all come up here to like die. I don't know.
Oh, perfect.
Like they're
How do
everywhere.
they get up here?
Go take a look.
How do they get up here?
I don't know. I think they're like the flying ones.
Oh.
Don't like those.
Yeah.
No.
It's gonna become a grasshopper graveyard soon enough.
So
Anyhow,
sad.
all right,
I don't love the options in this.
I love Debbie Downer.
As I say, I really don't love the options in these with this
No.
Wingstop. It's kind of wide, man. That's one thing.
Decent premium.
These things trade by appointment. It looks like it'll be hard to get out.
Yeah, these are just way too wide. Even regardless of whether you're November or December, I don't like products that don't have weekly options. You're running into a 3-point wide bid-ask spread on the downside, 3-point wide bid-ask spread on the upside. So if you want to do it, I mean, you can, but I think you're going to have trouble getting in and out, which just eats away at your potential P&L.
Yeah.
But yeah.
I'm a little scarred because I just had to get out of a Caterpillar trade today. I don't remember it being that wide when I got in, but it was not easy to get out. And that's Caterpillar. So, you always want liquid stuff.
Louie and Peppa the Pig are the real G's. Yeah, sounds about right.
Those were also just like after my childhood time.
Obviously, it was way after mine, Mike.
Because I'm such a dinosaur.
I mean, it was true, though. My kids were watching those. For sure. My youngest was.
Love it.
Double calendar earnings for Amazon or Apple, or is there better neutral trade? So neither of these really set up well. So with double calendars, what you really want to see is a huge implied volatility in the weekly and a lower implied volatility in the back month. The problem here, I guess you could do November, but if you're trying to do like long December, short the 1 day, you're not going to reduce cost basis nearly enough. But if you're trying to do like a 265, 280, just going to the expected move in the 1 day, so you're selling those options, and then you go to November and you buy the 265 and you buy the 280, this isn't that bad, but it still doesn't really do it for me. I mean, the 280 call, you're collecting $1.60 and you're paying $4. You're paying too much for this double calendar because one of these is going to be a loser.
Yep.
You really want this to move to the upside for your max profit potential because a higher stock price is going to yield a higher profit potential. And you can see this here in the risk graph. If we push this to tomorrow and we crush IV a little bit, you're always going to see this kind of upside boost here. So it can be a nice trade if you get the crush and you get an inside move or a move towards one of these strikes, but it would set up much better if you were only paying like $3 for this. And you'll see this get much wider. If you had a better cost basis reduction with more premium in the short options, you have a much wider range of probability to have a successful trade here. So Apple, I'm not too sure. I mean, it's a 50-50 for me. Amazon is a little bit better if you do like the 1 day, 22 day, but still this is going to be a tough one. If we go to like 210, 240, you can see there's plenty of upside skew here. And then you do the 210, 240. It's a little bit better. So this one for the 210, you're paying $4, you're collecting almost $2, so that's about 50%. And then on the 240 call, you're paying $5.40, you're collecting $3. So this one is a little bit better from a cost basis standpoint, and you can see this here. If I get rid of my trade, you have more width in terms of break evens. If we're just looking at the same thing, evaluating at Friday and crushing IV by 4 or 5%, you've got a better range because your cost basis is better. So could work. But I'm just sticking with my upside trade and then seeing what happens.
Alrighty.
Yeah. Deep in the money November covered call on Apple. Have no idea how to manage it or squeeze out a bit more premium. Give us the strikes and we can look at it. But if the short call is deep in the money, it's basically a short put. You have the 100 shares, your short put's in the money. You can only make the extrinsic value related to the short put. So it will be a similar risk profile to an out-of-the-money short put with the same strike. So if you've got 100 shares of Apple and you have the 260 short call, it's the same risk profile as the short put here. So just look at how much extrinsic value you have in your total trade. That's what you can make going forward. But the trade's pretty much done, especially if you have like down here like a 230, 235, 240. I mean, there's nothing left there. WDC is interesting since STX did so well.
Yeah, earnings.
Seagate Tech.
Yeah, Sticks had earnings.
The old Sticks.
WDC, I mean, they have the exact same chart, basically.
Western Digital after the close today. Yeah, I mean, you can reduce basis pretty nicely here. 11 points of a projected move on a $137 stock. That's close to 10%, which you like to see from a cost basis reduction standpoint. But yeah, I don't think I've ever traded this. But if you're trying to mimic STX, like we're trying to do with Google and Amazon, yeah, you could place an upside trade, like an upside calendar, December.
Yeah, this is one where actually you can use the front two if you want, the front 2 months, or you could just do a December, November for not too bad neither. I mean, it depends on where you're going. I'm just looking at the 150 strike, but you can actually do a D Snove. I don't mind paying 380 for D Snove if you're being long Ds. That's not bad.
Yeah, this is your setup that you normally do, right? You buy the next week and you sell this week.
Mm-hmm.
So you're buying it for $4. You're selling the short option for $2 and change. Total cost is $1.70. All you need to happen is for this long option tomorrow to have more than $1.75 of extrinsic value, and it'll be a profitable trade. So that's why you have this really wide range to be profitable. And this is evaluating tomorrow. Only thing here is because you're long this 8-day option, you're going to want to crush volatility here. So we're going to crush this, let's say 30%, bring it down to 70%. A lot of these other ones are 80, 70%. So this is a more realistic outcome here, all things considered. But yeah, cheap way to play for an upside or downside move. And yeah.
I just did the D-Snove, actually, 150 calendar.
D-Snove. Why not? Yeah. Keeping it small.
Again, because one of the reasons I did D-Snove is because this stock is already, it's kind of near, it's at highs, right? I don't remember if this is like all-time highs. You'd have to pull up the stock, because this stock used to trade heavy. This is a very long, older name, obviously. So I don't know if it's like at all-time highs or just recent all-time highs. So I don't necessarily love doing calendars like that, but my whole idea of going D-Snove is that if it falls, at least you have some time to recoup with the D's long.
Love it.
Okay.
Let's see. Ranch, 9-day short put in RGTI.
What is that? Rigatoni?
Rigatoni.
Rigetti.
Somebody laughed at me when I said that like 3 months ago, and now I feel like a lot of people are saying it.
Well, I always used to joke with Mike and Nick that AVGO made me think of avgolamono, like that Greek soup.
I've never heard of it.
Very good.
Yeah, sounds
I always
good.
think of.
So yeah, short put, I assume you probably have like something like this. This is coming $1 today, the 40 strike. Brain says close. Greedy Brain says stay in.
Brain.
But yeah, if you put this on like this week, you're getting 30% of your premium, it's a smash. I mean, that you'll see us do this all the time where our target is 50% profit, but if we get to 20, 30% in the same week we put it on, we're just closing it because you're well ahead of your profit curve. And a lot of times that can be more important than getting to that 50%, especially in turbulent times like we're seeing.
Turbulent.
Yeah, nice trade. No. What do we got here?
No.
A lot of people just got popping off about ghost peppers, jalapenos.
I'm not eating ghost pepper on this show. I'm just saying it right now before anybody.
No,
I'm not doing it. Okay.
No.
No.
Unless Sean What's-His-Face wants us to go on Hot Ones. That's it.
There was a sushi place that used to do wasabi rolls, and it was like it was a regular rice with the seaweed on the outside.
Yeah.
And then it was wasabi on the inside only, just wasabi.
Just like pure paste.
Pure paste.
Was
and
it
then
Japanese?
the wasabi eggs too. It was like infused eggs on top.
Those like pearls.
Yeah.
Ooh.
So it was like we did it, like my brothers did it, and my older brother did
That's
it,
sick.
and he was like. He was trying to play it off like it wasn't affecting him. And then all of a sudden, both of his eyes start tearing. I'm like, yeah, I bet you're fine.
Oh my gosh.
I bet you're fine.
Could not be me.
Oh, man.
Yeah. Short strangle on IWM. December 19th. 20 delta, 490 credit. What do you think? Also comment on trading RTY as an alternative.
Oh, that's what I'm glad you brought it up. I was today years old, bro. Left yesterday. Somebody tweeted this and I saw it. Do you know some of the holdings in IWM?
Oh gosh. In the Russell?
Yeah. It's a lot of, I think.
No, I don't.
I couldn't believe when I saw it. I was like, wait, what? So BE, Bloom Energy, is the top holding right now.
Bloom Energy, like the drink, or like the energy
BE,
company?
the stock we've been trading a lot.
Meme stock.
Yeah, that one. BE is the top holding. Oklo is number 5. IonQ is number 3.
That's crazy.
I didn't know that. Rigatoni's in there. It's number 8. I was like, wait,
Why?
what?
Yeah, all just memes.
Yeah. Yeah.
Yeah, that's troubling.
Yeah, I didn't know this.
Markets in the RTY futures options aren't as illiquid as I anticipated them to be. You could do something in there. I mean, just be thoughtful about, as you add more legs, what that means for slippage and all that good stuff. But if you wanted to scale it back down to the ETF, that's cool too.
Yeah, so RTY, $4,600 in buying power, $2,400 max profit. You can see here that the credit doesn't reflect the actual number. So for these futures products, for all futures products, you can always bring it back to your actual monetary value if you just look at this max profit, max loss here.
Yeah.
Strong return on capital there for sure. IWM, a little bit less so, but more of a universal product where you can roll this. You could roll this from December to January, et cetera, et cetera. Where RTY, if you're in the 49-day, you're going to go to a different product entirely, going from the Z contract to the H. So just another layer of complexity there. A lot more leverage in RTY. But yeah, I don't mind it. But that is a little troubling that the top 10 holdings are all stocks that have been memey recently.
Yeah, I think for Russell, it's 10-cent ticks that are worth $5 tick value?
I think so.
Yeah.
Let's see. For Amazon earnings, what do you think about a 230, 240 diagonal for $6 instead of the 250 calendar? If Amazon pulls back, seems it stands a better chance of break-even recovery. Yeah, I mean, we can look at it here, but 230, 240, Dees Nove, cookie cutter setup, $6, 10-point wide diagonal. So similar thing here. So if we just go to the theoretical P&L and let's do the same exercise. Let's evaluate at the 31st tomorrow, and then we're going to have to crush implied volatility here. So let's bring December down from 41 to 35, and let's bring November down from 48 to 35. So this is what you'll typically see after earnings. You'll see this kind of flat line implied volatility. They should be a similar number. So this is your evaluation here. If you get a flat move in Amazon or down a couple points, you can break even. So yeah, you have a slightly better break even. You definitely have more of a max loss to the downside because this is already in November. My calendar spread, I can roll into November and collect a little bit more premium. It might not be that much premium, but still. And then yeah, to the upside, you have no risk to the upside since you have a 10-point wide diagonal with intrinsic value potential, where the calendar is a pure extrinsic value trade. So just slight differences there. But yeah, I don't mind this. It's a standard setup for diagonal. Did we cover delta spreads on zebra trades? Synthetic stock is trash. I mean, there's
a question mark.
Yeah, I don't think there's
I like
ever
statement.
so it's kind of an interesting thing. So like synthetics. So let's go to GLD 25 IV. Actually, let's go to SLV because I don't have a position in here. So SLV, traditional synthetic stock is buying a call, selling a put.
Yeah.
So if you look at the analysis, it has your 45-degree angle, 90-degree angle, 90-degree angle.
That's not a 90-degree angle.
45-degree angle.
Let's take it back to geometry.
Like I said, yeah. The geometric mean here. So yeah, this is synthetic stock. Buying a call, which is 100% upside prop potential, or 100 deltas to the upside. Short put, 100 deltas of risk to the downside. So you have a straight up synthetic stock trade here. Buying power is going to be better than if you owned the shares. So that's an interesting tidbit. If you use options to get synthetic stock, you'll have leverage efficiency. However, is there a reason to take downside risk, 100% downside risk in SLV that has pretty low IV? I don't think so. So you could do a similar setup where the zebra gets rid of all the extrinsic value or almost all extrinsic value. If you really wanted to get rid of all extrinsic value, you'd be looking at something like this, like a 42, 44, buying 2 in the money, selling 1 at the money to reduce extrinsic value. To the upside, you will see the same 45-degree angle. You've got that 100 share, 100 delta exposure. Even though the delta is not there now, it will be if you get closer to expiration here. But you've got this stop loss here. So it's very similar to buying 100 shares in SLV and buying a 42 put here. But since you have all extrinsic value in this trade, when you look at the theoretical risk graph, this orange line, this is where the zebra comes into play to where you can offset a lot of your loss. So let's say your goal is to, of course, have this onto the upside. If it rips, you're doing good. But if it sells off, you want to get out if it goes below 42, closer to 41. The P&L Theo at this point in time, or just like right now, is only $200 of loss, where your max loss is $400.
Right.
So that's where the Zebra can be better if your plan is to exit prior to expiration. But still, even if you get a huge gap down, you can just hold this trade, buy back the 44 call if it gets close to zero, and that would actually double your delta potential if you get a reverse to the upside. So I like Zebras a lot in low IV products specifically because it's cheap to put them on. So yeah.
Well said. Now we need like the World Star air horns.
Yeah. Yeah.
Dropping knowledge.
All the above.
All the above.
50 strike put in NVO in Nove, 22 days. Should I roll to December or maybe roll to a Jade Lizard, 45 put, 60-70 call in Dece? All right, let's take a look. So the 50 put in Nove, earnings are coming out in a week. 5th before the close is Wednesday. Before the open, I should say. So if you roll from Nove to December, you're rolling out of the big IV crush. Mm-hmm. So I would actually stay in Nove. You can see this here. Nove, 6-point expected move. December, 660. So like you're basically you're trading in your implied volatility crush potential for time value decay, like a slower decay. So. And that's why I'm willing to bet that this credit roll from November to December is not going to be much at all. And there you have it. So yeah, rolling from November 22 days to December 50 days is less than $1 or basically $1 premium. I would expect to have this be much more of a credit in a non-earnings environment. So I would stay with Nove if you're willing to hold this thing through earnings. But if you're trying to reduce basis a little bit or turn this into something else, like a 60-70 call spread or a Jade Lizard, like you said, it's not totally a Jade Lizard because you have upside risk here because your credit received is only 270 if you look at your initial premium. So there's no way, unless you have over $1,000 of premium collected here, if you've been rolling this, I don't really like this adjustment. I would rather just stick with the 50 in November. And then after earnings, if it sells off, you can still roll to December and capture all this IV crush that's going to happen in November. But that's just me.
Yeah, I agree with you on that. I mean, yeah, at this point, you're kind of in. I mean, if you're really that nervous, again, you can always close if you're just that nervous. But otherwise, you might as well just stay in Nove.
Mm-hmm. On a Zebra, when is it too wide to not be helpful in terms of cost basis reduction? So for me, it's like, well, really the objective answer is when you're going out really far out in time, that's when your cost becomes very similar to the trade itself. So like going back to SLV, the November trade was $400. If I do that same setup for like January of 2026, now it's going to cost me a lot more to reduce extrinsic value. It's going to be $600 for 78 days. And if we go even further, it's going to be more expensive. So the further out in time you go, and this is not even reducing extrinsic, there you go, $1,200. The further out in time you go, the more expensive it's going to be, and the more you might as well just have stock. If you're looking for a long-term exposure. But in SLV, like even still, this 400 days out for $1,200, it's still less risk than buying the shares. So I think if you have a higher IV product, like 50, 60, 70% IV, that's where it becomes a lot harder to get a lower cost and get that leverage to the upside.
Mm-hmm.
Any other questions here? Scanning. Couple minutes left here. Yeah. Diagonal on CIFR.
That's another one of those stocks that has been moving kind of crazy.
Like a rare earth situation?
Safer money.
I think it might be. I can't remember. It might be.
Bitcoin mining and
that's what I was
HPC
saying.
infrastructure.
Stock doesn't look like it's a rare earth. Rare earths are down in the dumps currently.
Down in the dumps.
What was the trade setup? Diagonal?
Yeah, it's a short-term one. 22 call for the 8-day and the 24 short for tomorrow. Roll the long up. I mean, this trade, if this is a losing trade, which I'm not sure that it would be into this rally, but either way, $150 right now, your short option's worthless. So if you're rolling the long call out in time, you would be adding another $100 of risk. But I mean, if you're trying to just like hold this through earnings, like you've already reduced basis with the short option that's going to zero. If you're trying to take a shot, holding this through earnings could do that for you. I mean, November 3rd is Monday before the open, right?
Yeah.
Yeah. So even if you get a non-move, this option's still going to have some value because you'll have that week. But if it rallies on Monday, you'll be golden because this short option will no longer exist. So it just depends on what kind of risk you're trying to take. But I would just close this thing altogether into this rally today and set up something new if you want to give yourself exposure through earnings.
100%. That's what I would do.
Yeah. Like get out of this one and go to like long November, short the 8-day, or long December, short the 8-day.
Sometimes when you just close a trade, you're able to look at it with fresh eyes and just rethink the whole thing.
Yep.
What about my Microsoft trade? Oh yeah, we forgot to talk about trades we closed. So real quick, from today, got the Amazon on. I closed the Nike put diagonal I had on for a $105 winner, and I closed Google for a $105 winner. Somehow they were both the same winning amount. Google was a 290 short-term calendar. I bought the 8-day, sold the 1-day. Microsoft is down 15. This trade's down $100. So the 8-day is holding on to some value. I think the only thing you can do here is, if you want to, is roll the 550 into the 8-day and turn it into a diagonal spread. So if you go to 550, 560, vertical spread. If you go 550, 560, you can reduce basis a little bit, but I would rather just let this short go, because if you get a 10-point rally in Microsoft, this dollar turns into $3, and it'll be a net profitable trade. And you won't have that short option increasing in value against that. So I'm just going to hold on to this long option, see if we get a little reversal next week.
I think there's some good opportunities for like a Microsoft and Meta. I haven't quite done them yet, but
yeah, especially Meta.
Yeah, like D-Snow stuff. I
Yeah.
think there's some good opportunities there.
Yeah, any Mag 7 stock that gets destroyed on earnings, it's certainly an opportunity. And you can see this here. It's already being bid from the low of the day. But that's it. We're out of time.
We are out of time and we are ready for pizza. If you want to see anything in future episodes, just tweet at us. I'm at Trader Katie. Mike is at Trader Mikey B. Jamal is at Jamal Chandler. Good luck, good trading. Like I said, let's go eat some pizza.
Yeah.
Peace.
Do it.
Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events. Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
What is going on, everybody, and welcome back to another Risk and Reward. Today's Thursday, post FOMC. We're seeing the market digest the quarter interest rate cut from last night. So it's kind of nice to see that. Before we get into everything today, my brother Gus, how we doing today?
Doing good. This mic does not look as comically high on the camera as it feels in real life. I have a new microphone going here, everybody, and it's really throwing off my whole situation. It feels like this thing is right in my face. But feeling good. Doing good. Got long some Meta off the dip this morning. That's kind of been a mixed bag, but that's sort of been my big trade for the day. Market's down, I'm down is the way it usually goes, but I'm not feeling too particularly concerned. I don't know that we're going to get 7,000 by the end of the week anymore. That was what I thought. But
that would have been exciting. We were talking at the end of the week, and last night I was thinking, we might get 7,000 by the end of the trading day, the way the market was trading. We sold off FOMC, and then near the close, I think we ripped back towards the highs. So what's going on, Big Deal? Jong, everybody else, how are we doing today? Let us know what you're trading. Let us know what you're looking at. We have a few positions on in the portfolio that has taken some pretty big swings since the FOMC announcement last night, and one in particular is Oracle. We're going to get into the news, if any news was dropped there on Oracle, but that position has pretty much taken a almost like a 100% swing in terms of P&L in less than 24 hours. So that's been on my radar. Gold is another one that's been on my radar with some of the metals. That's another position that's been playing out very slowly. It's been a little bit more exciting to get on more NASDAQ positions. In some other areas, we were able to get on some more shorts for this morning to the downside, and we weren't able to do any of that earlier this week. It was no NASDAQ trades until post-FOMC, so that's what's been the story so far. But circling back to Oracle, you got any thoughts on Oracle so far?
Yeah, Oracle, this is becoming an interesting spot for me. I think that this like 240, 245 range is kind of where Oracle becomes a buy to me. I mean, that's where the gap fill is. There seems to be good resistance there dating back to the middle of the summer. I am bullish on this company holistically. I just haven't wanted to buy it off the highs because I expected exactly what we've gotten, which is this little gradual pullback, trying to fill back to the lows and kind of wait for more information to come in. But yeah, should Oracle reach the, I would say, 240 for sure, but maybe 245 is where this would kind of turn into a long-term buy spot for me.
It's starting to get into the, man, I want to get long here now territory. So I know we sold an out of the money put spread because we're bullish on Oracle overall with the news with TikTok and them gaining a little bit more control. So long term, a little bit more bullish. But again, we're getting down to that point where it's like, oh, I want to get long now. I don't want to be long from last week. So we'll adjust the positions. Maybe we roll. We still got a little bit of time on that. But with that being said, we got a few positions on in the portfolio. I know you had brought up, we were talking about some China exposure today, if I'm not mistaken. What were you referencing earlier today?
Oh, earlier
again, what
today,
was that?
That was a weird thing to greet you with first thing in the morning. I was actually joking about the fact that we lowered fentanyl tariffs on China. That was what I mentioned.
That's what it was.
We cut tariffs on fent from 20% to 10%. Chinese fentanyl.
Okay.
Obviously, fentanyl does have legit medical applications. This is not lost on me. It was just a strange headline to read that we cut down the fentanyl tariff and therefore lowered the overall tariff burden on China. But yeah, it seems like the meeting with Trump and Xi went fairly well.
Went pretty well.
Yeah. I mean, both parties seem to have had positive comments afterward. So yeah, we might be moving towards a resolution in that.
Well, I as well have some positive comments afterwards because that put the Baidu position in the green. So I don't know if you guys have some exposure to some of these Chinese names, but they're down on the day. Got an out of the money call spread that we sold on that one. We're going to manage that one by maybe tomorrow because we're 22 days left to expiration. Got one more day before we make some decisions in there. As for Beyond Meat Meat's been a little bit more slower. It's been a little bit quieter. I feel like I missed most of the fireworks because my position is pretty boring so far, right? We sold an out of the money call spread. I'm sorry. This was a zebra that we actually ended up doing in Beyond. So where you can see the P&Ls at, you can tell we haven't really gone anywhere. Beyond's been a little bit quiet since the whole fiasco from last week, I think it was.
Yeah, I think I was just a little bit too excited to jump into this. I mean, the whole thesis with getting involved with Beyond in the first place was just that at a point this has to shift over and become a buy. I should have just been a little more patient. I was kind of trying to extrapolate the possibility that like in the coming days, Wall Street Bets gets a hold of this again and can send it on another run, and I would be able to get a quick exit, and I would hate to be on the sidelines for that and then have to wait for it to come back down again before I feel like I can legitimately, get some.
Yeah.
So yeah, just a bit too aggressive, a bit too early to the punch on the Beyond here. But yeah, I have 150 shares. That position is down $54 total. So I mean, and that's the beauty of shares, and that was literally my thesis going in. Is I was like, it can't go down much more. You know, I mean,
100%. And I mean, with having such directional exposure, it is also a testament to show how much of a nothing burger this has kind of been since we even had the position on. Because I have a zebra position on that's a very aggressive directional position, and I mean we're barely down like $40 on the position, right? So it kind of lets us know we haven't gone anywhere. It'll be nice to get that popped up.
And it was the reason I wanted no time horizon as well, is because I don't really know what this even looks like. My thesis pretty much, and I think that this is honestly a fair thesis to apply to any stock in the 50 cent to $2 range, is I don't think they're going to go bankrupt. So, there's only so much more downside. Should we move back down to, the 50 cent level that we were at before all this madness started? Maybe I would be looking to get out then. I think sub $1, I'll be looking to get out of this thing. But it's just a fun little penny stock position. I don't see any reason to, be racing out of it right now when it's down marginally.
Yeah, I believe in Beyond Meat, right? They got the best burgers, guys. Best meat, best burgers, lab grown. That's how you know it's good. No. Definitely
They're
not.
Plant-based,
I'm good.
Not lab.
I'm sorry, plant-based.
Lab grown is something else.
Yeah.
What's going on? Jared, Dan, big deal. Good to see all of you. Mercury Fixer. Oh yeah, you're in Meta. We're all in Meta. It sounds like from giving this a quick once over here. Okay. I'm still rocking my 445-day leap and beyond. I'm down a whole 20 cents. I believe it.
And now I'm looking at Meta over here. We got that very large gap down. We hit some lows.
Yeah, we can dive into your platform here.
We can jump into the platform. My bad.
Yeah, no worries. Let's have a look at Meta. We're catching a nice bounce here off the bottom with Meta. I was fortunate enough to get in right at the bottom, but I sold put aside premium essentially. That premium has not exactly started to diminish yet, so it's actually hilarious looking at these positions. I totally forgot about this giant leap I put on in Meta when I first got the Meta Quest. I have a 778 DTE leap.
Okay.
Anyway, but yeah.
You're bullish.
Today I just put on some June 18th of next year short put verticals. I am $20 in the green on those, although both contracts in isolation have moved north of $1,200, now north of $1,300 since I put the position on. I'm up $30.
No, I mean, I do hope that Meta position turns around for you, Stefan. You know, we don't want you putting the fries in the bag, by next week.
Wendy's application is ready.
No, we'll see how Meta responds here. We got about a 25 IV rank, 65 million shares traded on the day, so it's very liquid.
I'd like a Dave's double
and a lot of uncertainty. A Dave's double.
I'd like the combo Dave's double, add bacon.
A Dave's double, is that another chain I'm not aware about?
No, that's just the Wendy's. That's like their burgers. Like, like Dave's single, Dave's double.
Okay. I love the meme where they're like, sir or ma'am, this is a Wendy's. When it's like somebody's doing the most and it's like, sir, this is a Wendy's.
Yeah.
Calm down.
Cheeseburger. Is Wendy's public? Are you being for real right now?
The Wendy's, I'm right here. I know we can trade some McDonald's too. They've been getting absolutely slammed. Let's compare them to McDonald's. Maybe you can get a little bit of a, maybe you can trade them against each other a little bit here.
Yeah, how have I never, I'm amazed. I'm just making this discovery right now. How about this?
So McDonald's looks like, at least over the last 2 years, they love to trade within a range, somewhere between 320 and 283. It's looking like. Wendy's is getting slammed. They're a little bit more directional to the downside. But Wendy's is looking a little attractive here.
I'm inclined to agree. I must say it's been pretty much straight downhill.
We hit the lows today.
This is December of 2022. It's pretty much been straight downhill since then.
Ever since they changed their fries, it's been downhill.
Yeah. So not been a good stretch for Wendy's. But is Wendy's going to go bankrupt? Is Wendy's closing locations?
Nah. Wendy's is another Old Faithful. McDonald's, Wednesday, they're like the Mount Rushmore of fast food chains. McDonald's, Burger King, Wendy's.
Take your time.
Thinking of Winn-Dixie at the same time. I'm going to have those as like some of the top three, maybe top 3, top 5, but maybe that's based off of where I grew up at the same time.
Wendy's has 5,972 locations in the United States as of September 23rd, 2025.
The pairs trade, that's what it was. Yeah.
Just under... Oh, yeah. So they're just closing fast. We currently have just under 6K Wendy's, and November 2nd, 2023, there was 7,166 Wendy's.
Yeah.
So we're down net 1,200 Wendy's locations since November of 2023. That's actually pretty crazy. That's making me see why this company looks like this.
Yeah, 100%. And I'm still going to stick to my claim. I think it's the fries. I think Mike might agree. Wendy's fries kind of sucks now. But I will say there is worse, right? We got In-N-Out fries. I feel like Wendy's fries does get the bad end of the stick, but we do have worse fries out there.
Wendy's, man, I used to do Wendy's a lot in high school when they had the 4 for $4, but I don't think they run the 4 for $4 anymore.
You just brought me that brought back so much nostalgia to college. Me and my boys just 4 for 4. Like it turned into a joke.
Yeah.
We would look at each other like, hey, yo, 4 for 4?
Yeah,
let's get a 4 for 4. That was an
we used to
era.
do that a lot. Then their like inflation hedge on that was they turned that into the $5 biggie bag, which also was actually a pretty good deal. That biggie wasn't too crazy.
And they stole that from somewhere. I feel like that $5 bucket or bag is
the exact same thing as a 4 for $4, but you got like a larger burger, I guess. Was kind of like you got, because I think the 4 for $4s you could only do the junior burgers. Okay. But then
yes, you're correct. 100%.
Yeah, but then with the
it was like a chicken nugget junior burger,
a proper burger.
What was it, like a chicken nugget, junior burger, fries, and then like a drink or a shake?
Yeah, it was a junior burger, 4 nuggets, fries, drink.
Yeah, 100%.
Shake, upcharge.
Miss me with that biggie bag.
Chase and I one time when we were in high school we tried to eat 4 for $4s. That was our challenge.
Was that a YouTube video?
We went to it was like, I don't know if it was a trend or if we just came up with it, but yeah, we went to a Wendy's.
I was just hungry.
After baseball practice one time, and we were like, all right, we're going to try to eat 4 for $4s. We got pretty close. If anybody's going to try the 4-4-for-4 challenge, the 4x4x4, if you will, I highly recommend not getting buns on the burgers. That's what gets you, is the carbs from the bun. The buns really fill you up. Had there been no buns, that would have been a doable challenge at the time. I can't eat like that anymore, I don't think.
Jared has a very strict posture on this topic. Worst fast food fries are Burger King. And I will not be taking arguments on this. He's not open to debate. That's case closed. Burger King did my man wrong.
Burger King does not have great fries. I definitely think that you're right about that. In-N-Out fries, everybody's right here. So in response to Night Moves, they are the most legit fries. You watch them cut them right there, never frozen. They throw them together. They make them right there. That's awesome. That's fresh. I love the freshness. In-N-Out is my favorite part of going there. That said, the fries aren't good. I can appreciate how fresh and nice that they are, but when I'm going out for fast food, I kind of understand that my health is not the number one priority with that meal, and I just give me my partially hydrogenated oil McDonald's fries.
You know why I'm here.
In-N-Out doesn't have Monopoly.
You know exactly why I'm here.
That was my son's lunch when he was at K-State, the 4-for-4. Yeah, the 4-for-4s, that was legit. $5 biggie bag, getting some love as well.
You see, I can do the 4-for-4, right? It's almost like the dollar menu, but you get 4 items. Like I can rock with the 4-for-4. The 4-for-4.
Five Guys fries, good point, Mike. Five Guys fries suck.
Do they suck?
Yes, they suck. They give you a lot of them, which kind of offsets it. They do the whole thing where you ever see
the fresh potatoes.
They give you a giant, more fries than you can eat in the cup, and then they just straight up take a scoop of fries and chuck
just
it into your
dump it
bag.
in there.
Yeah, I appreciate the quantity. I don't care for the Five Guys fries one bit, though.
I don't think the people that work there care for them either. Yeah, I don't think nobody cares.
I don't think so.
It's a nice little marketing, kind of shtick thing. Got a lot of fries. Anyways, looking at the volatility index here, we're trading at around 16.5. So I was watching another segment earlier. I think Liz and Jenny were mentioning the other day how, we're so spoiled because we talk about a 16 VIX. And I think they were saying about, 10 years ago, like a 16 VIX was something that they were hoping that, volatility would get up to. So I think we are a little spoiled because this pop in VIX where we touched about 28, almost 29, we were pretty spoiled in that sense. And it still felt like the vol wasn't really giving us as much and contracted immediately.
It's really funny talking to people and I don't even mean people who were, the Toms and Tonys of the world that were straight up in the pits in the 80s. I just mean anybody who was a full-time dedicated trader between 2010 and 2019.
Right.
It's so funny to me because it is a world that I just can't imagine. My trading world started in the middle of COVID at peak volatility. 16 to 20 has been a pretty normal place for volatility to chill the entire time I've ever been a trader. Imagining a world where volatility sits at 8 and we're hoping we can get it to 12. I can't fathom it. I literally can't fathom it. But and again, I don't mean I actually can't fathom it. This is the exact same equivalency as when I said I don't know how you would get around America without GPS and the days before GPS. I understand how it worked. I just can't imagine being in that environment given, the experience that I have. Noggles had good fries. I've never heard of this place.
Noggles.
Noggles. They seem to still be in business. Yeah. Oh, Noggles went away in 1995, actually became Del Taco.
No way.
They merged with Del Taco, became Del Taco, and then in 2015, Christian Zybarth, entrepreneur Christian, it's one of those two. I'm confident one of those two things I just said is correct, brought them back. So they're around.
That's hilarious because I was I've never once heard of Noggles, but it's funny. It seems like they got rebranded a little bit.
It's a fire name that works.
Noggles, yeah.
Yeah, that's
it's better than Del Taco. Del Taco gets overlooked all the time.
Yeah, it's got the kind of like Wawa, Nando's.
Oh, I hear you.
Yeah,
I like the Nando's.
Yeah.
And Nando's chicken's pretty fire.
Yeah, Nando's is good.
It's pretty good. Good stuff. Pretty good. With that being said, Chipotle is absolutely beat down so far. We've tried to recover a little bit on the day. About a 31.5 IV rank, 74 million shares traded on the day. Now that earnings is out the way, honestly, I'm a little bit more bullish on Chipotle. I know it's getting absolutely whacked right now, but a longer-term position where we can let that premium cook, I'm not opposed.
Yeah, Chipotle,
You're a Kava guy, though, bro.
I'm not a Kava guy. Errol keeps trying to gaslight me into being a Kava guy.
I thought you were a Kava guy.
No,
Are you the Chipotle guy?
I'm not either. Okay, all right. I'm not big on either.
It's no, I'm Gus.
This isn't like a genre of food I go get very often. Errol posed the question to me earlier today, Chipotle or Kava? And I said, well, I think I would have to pick Chipotle. But then he reframed that question and said, what if it was you had to eat it every day for the rest of your life. And I said, in that case, I would pick Kava.
I was like, you own this franchise. You got to eat it once a day. It's in your contract.
Yeah, I'm kind of split on them holistically, but if it was like a day-to-day thing, I would choose Kava simply for the variety. In terms of Chipotle market action right now, I don't know. It makes me like a little bit bullish. Like this is the typical situation, like what I've done with Meta, where this would trigger a buy for me when we get a big gap down off earnings like this. But if you, zoom out on this chart a little bit, just in July, we saw them take another big gap down that has yet to be filled.
They're getting thrashed.
They are just getting thrashed. And the reason that they're down so much today is because they basically said in fancy corporate speak, we think we're going to shrink next year. That was more or less what happened. It wasn't revenue growth is going to slow. It was we are going to see a decline in revenue, which are two very different terms. So I don't know. That notion scares me a little bit from getting long anything long term here. It would have been quite sharp to do something at the very bottom here off open and just catch this little bit of a pullback move, because that's typically the way things tend to go. But yeah, I don't know if this is one that I'm racing to get involved with after the comments from corporate today.
Yeah, no, I'm not gonna be too too trigger happy on Chipotle over here. But I mean, $33 a share. Come on, guys. Chipotle, Old Faithful.
All eateries are down except Shake Shack.
When is that one?
I'm being told SHAK.
SHAK.
Shack. Missed opportunity to be SHAK.
I haven't been back to Shake Shack. I've only had food poisoning one time in my life. One time, Gus. Shake Shack was one of my favorite burgers to eat. I fly over here to Chicago. This is maybe a year and a half maybe ago, maybe two now, maybe a year and a half. Come to the studio. So this was an evening. I was gonna go in the morning. So that night, I'm like, oh, Shake Shack's right around the corner. I love these burgers. Go get the Shake Shack. Come back. I feel fine that night. In the middle of the night, I squirming a little bit. I wake up in the morning. I feel terrible. I feel terrible. I kind of have a headache. My stomach hurts. I don't even know how to feel. I've never had food poisoning before, and I was like, I don't think I'm sick, but I don't know what's going on. So, anyways, had to go to the bathroom. Had to go to the bathroom a couple times. And I was like, I just look in the mirror, literally like one of those times I'm looking in the mirror, like it's like you're in college, like at a party on a weekend, you drank too much, you're looking in the mirror like, bro, lock in right now, lock in. That's exactly how I'm feeling. So this is in the morning. I go downstairs and I call the Uber, waiting for the Uber, and they're about just a few minutes away, and my mouth starts to water. You know exactly what I'm talking about. So I just look left, right, and then I find the closest establishment, run in there, do what I got to do, and then I catch the Uber, clean myself up, and just kill the day. Even though I was in there, a shell of myself. Nobody knew, but on the inside, I was like, I'm never eating Shake Shack again. And if you guys are wondering why Shake Shack is at $92 a share, I made a couple phone calls. We took care of it. But I felt terrible. It was the only time I got food poisoning. I felt terrible.
It's interesting. I've had food poisoning a few times. My Shake Shack experiences have all been pretty universal.
I mean, mine was up until that point. I don't know what. So when I was waiting for my burger, I do remember like, yo, is the burger done yet? And I was waiting a minute, I remember. And then I checked on it, wasn't done. And then I checked on, I think the order got confused and it was sitting somewhere for a minute. It was just kind of out in the open under the thing warm. And it was out for a while. Because I do remember sitting in there getting sidetracked because I was getting some work done. I was like, I've been waiting a minute on this burger. I'm not at a restaurant right now, so maybe that had a little bit to do with it, but I'll never forget it. I'll never forget it.
Well, yeah, that's quite the story. You guys heard it here first. Shake Shack, food poisoning. Heart attack grill in Vegas. That's true. Sick from your diet, brother. What else we got going on here? What about a put calendar on CMG?
Put calendar on CMG. I'm not going to take anything in.
Yeah, I mean, I don't know. Like, I see the idea. Fundamentally, I don't hate it. Like, if you showed me this chart and you just said, this is a strong company that's not going to go bankrupt, and I couldn't see prices or anything, and you were like, which direction do you think this will go? I would be obligated to say, I think it will return to the upside. But like, man, that was really, really bearish commentary that they gave today. It's really scary. This just feels like a spot where there's just enough other assets in the market that I don't feel the need to force anything on this. I mean, because you're getting basically the exact same price action today on Meta. And Meta, while the premiums are going to be obviously a bit more juiced, is just a more attractive company to me in the short and long term. I mean, I don't think their growth prospects are going anywhere. They're obviously still very stable. You got Instagram, you got WhatsApp. They're breaking into technology, good AI sector. So yeah, I feel like if you're looking to kind of take that angle, why not just choose Meta, which has the exact same price action and way better fundamentals?
Yeah, and Mark Zuckerberg, right? He rebranded himself. He's cool now. You know,
I saw somebody in chat yesterday say he's still a dweeb. He's just a dweeb with a perm.
Perms are. There was an era where perms were so popular.
I need the Zuckerberg Elon jiu-jitsu match, man. Where we were supposed to get that.
That was a marketing scheme, huh?
Well, they said that they were going to do it, and then Zuckerberg tore his ACL. I think was the deal, and then they called it off. But they were gonna they were trying to.
Were they really about it?
Well, yeah, they were trying to land a contract for the Roman Coliseum.
Oh my gosh!
That was the original push, but I doubt that would have actually come to fruition itself. But yeah, I want to see it.
They're like, we both conquered capitalism in the world. Like, what are we? They're bored with their lives.
They are.
Like,
yes.
we might as well fight like the old days.
Yeah.
The old rich people of the rich back in the day. They're like, oh, let's just watch people go ham on each other.
Yeah, let's have the billionaires fight. It doesn't even have to just be them two. Who else? What other billionaires want to fight?
I know. There's people that want to watch.
Yeah,
that.
give me the billionaire fight league. I'll pay the pay-per-view. I don't care.
No, but with that being said, we're on the weekly chart. The last 10 years weekly chart on Chipotle, and yeah, not looking too hot so far after this last earnings call. Now going into Unity Software, this is another position we sold an out of the money put spread. Got just a little bit of long delta on in there. Not too much has happened. We're going to manage this one again by tomorrow, and because we're sitting at around break even, I'm going to make the decision just to take that one off and then redeploy the capital elsewhere. And I mean, we could even consider taking this one off now, unless we think Unity could somehow do something. Unless I guess you want to help us catch a bid in there or something. But I might take that one off now. Redeploy the capital elsewhere. I'll just put in a working order. Won't chase this one. This one was a little anticlimactic. I mean, I don't hate the position either, and it's pretty solid positioning. I mean, we could roll for a credit. We could roll out for a credit a little bit. I mean, we could go out to. We could go out to the December cycle, give it a little bit more time. We can collect an extra 19 cents. It is a put spread, so we can, lower that overall risk on the position a little bit. Increase the reward just by a little bit. I mean, rolling for this credit isn't that attractive, but I don't mind keeping the same average entry kind of where I'm at right now and still letting the same trade thesis or trade bias play out. So I think I'll do that one for now, actually. Let me roll first before I take off the position.
Yeah, you got to be careful with your order.
Yeah, we'll take 18. There we go. We'll let that one work. We'll try to snag the extra 18 in credit. And then UNH pulling back a little bit more aggressively today. Overall position is doing pretty well. I know you're kind of like over that one a little bit. It's been a little indecisive, right?
I know it. Yeah, I'm still not concerned about UNH, and I think my thesis still holds up in the long term. But yeah, this has been quite the underwhelming situation. Got the nice bump up over 380 after earnings, and I was like, this is it. Like, we're gonna go right back to 400, and then that'll hold, and just hasn't come to fruition at all. Quite a shame. CVS was asked about. I saw. Thoughts on CVS. This is actually pretty attractive. I hadn't read into the details of this earnings call until right now, but I mean, they set company record revenue. Go away, jeez. Ad. They set company record revenue. They did $102.9 billion, which is up 8% year over year. Beat expectations there. Beat EPS expectations. The only reason they seem to be coming down is because of this $5.7 billion goodwill impairment charge. But I don't really know that concerns me too much, especially when we're talking about revenue in the hundreds of billions. So. CVS. I think that this could be an attractive buy spot. It's not quite as attractive as say a Meta. I don't know. Let me think before I say this. 85. Yeah, you know what? I mean, the only difference is that the all-time highs just happened. I mean, just before this earnings call. So we are still obviously a little bit more up holistically with CVS. Like, this price that it's at right now would have been all-time high if it happened on September 17th. So from that angle, I don't know how much upside room that you have, but I don't think that this is a particularly bearish earnings report to me. Everything that I'm reading here, apart from the one giant $5.7 billion hit, all sounds really good. I'm reading that there's 8 analysts have 18 buy ratings and 1 hold rating. So the analysts clearly agree with this thesis. Yeah, I think that I'm kind of I can see where you're coming from on CVS. I think this should return to 80 fairly quickly.
BTU, trade idea. So we got BTU looking like over there. 3.5 million shares traded, 45.5 IV rank. This one's been pulling back off the top a little bit.
BTU.
It's an earnings trade. Dan is trying to get us into the earnings. This one's reporting after the bell today. So we should see a little bit of an IV
This
crush
is
in
another one
there.
of these energy sector companies that was flying alongside Quadruple U and MP, and well, MP isn't even an energy company. I'm getting all these bubble companies mixed up in my head. To the point about BTU though, I don't know that I dislike this too much. I mean, this is we're way down off the highs, and we're actually at levels that this stock has seen before now. I mean, the previous all-time high before this, recent last 2-month run was $30. So
yeah.
We're well within that range. That feels like that there's a little meat on the bone to the upside to me. And with it getting beaten down, I'm looking at the daily chart. This is 3, 6, 8. 8 of the last 10 days have been red on this. So we've basically just been moving straight to the downside. So if anything, I would think that lends itself to moving up after earnings. But I don't know. That's the other thing, too, is it's set expectations to uphold now. Because, I mean, while it's been at these levels before, just 2 months ago, you're talking about this being a $16 stock, and now we're at 26. Do they have the revenue to back that up? Does it matter? I'm not entirely sure.
No, yeah, I mean, the volatility is there. This thing's prepped and ready to go for earnings today. So regardless, it looks like we might get something out of it. We also got ABBV earnings.
AbbVie?
I was looking at the IV rank on AbbVie. It's a little lackluster, I'm not going to lie, especially heading into, or does this one have earnings? Yeah, especially heading into earnings. It's a little lackluster in my opinion. It's definitely there.
Yeah, I don't know. Kind of bull flagging on the 1-day chart.
Oh, it is. Let's see what we can get for some of these contracts. Let's say if we went to 22 days. Shall we do an iron con, or let's just say we set up something along those lines. Because maybe we do something in ABBV or even BTU, if it's defined risk at least. 235.
What about cooling companies that cool data centers? That's actually an
Cooling
interesting
companies.
angle. I know none of those companies off the top of my head. If you have one though, I'd be interested to look at that. That does feel like a sector that's going to see greatly increasing demand in the coming weeks.
Engineers for the data centers, though?
Months and years.
Yeah. Engineers for the data centers, probably going to expand, huh? Probably going to need a lot of engineers for a lot of these data centers. We're going to have to,
Yeah, certainly.
Also, that'll be another interesting
they got
area.
This whole AI arms race going. They're throwing hundreds of millions of dollars around to land these engineers.
Right. We're over here throwing out athlete contracts.
What do you think on BTU here?
I was looking at BTU.
I was going to say, I mean, BTU, I think that BTU lends itself to just a non-neutral strategy, like a this thing moves type strategy, because
yeah, it's very directional.
Yeah, I don't know.
I mean,
it's really tough to determine what direction I think that this is going to come in. There's a lot of nuance to that, but I'm reasonably certain that this thing will move after earnings. Whether it goes outside the expected move or not, I don't know, but I think that there's angles there. And I mean, honestly, well, what is the expected move?
The expected move is $4.50.
Yeah.
It's $4.50.
$4.50? That's like 15%.
And I was looking at some of these strikes here because this stock is a very directional stock, to your point. We don't really consolidate much. When we're going up, we're going up. When we're going down, we're going down. That's what's making BTU a little bit more difficult to put something on. But I mean, the IV's there, no doubt.
Yeah, straddle. Could put a straddle on.
Could put a straddle on. That's not, essentially betting on some type of movement, some type of directional move.
I don't want to take credit for that. I did not just come up with that.
No, I hear you. We're a group here.
SEE is a cooling company. I'm looking into this.
Check out SEE.
Oh, yeah, I didn't mean to sidetrack you there.
Oh, good. Check that out as well. 35 IV rank.
Sealed air.
A little bit of illiquid. 400,000 shares traded on the day, not even 1 million. But is it a sleeper? It's trading just as much as Chipotle, though. Do you want cooling air at $33, or do you want Chipotle at $33? Take your pick.
Do I want AI or burritos?
You want AI or burritos? Or what if
that's what you're asking me?
Well, Chipotle might be including AI somehow. And now you got both.
That's true.
Now you got both.
This is weird. Why is this so down? I mean, all-time high is 70 and some change in March of 2022.
March of 2022.
And then we basically moved down through all of 2023 and then have ran sideways since the start of 2024. This is really interesting to me. Why? This feels like it should be the best time that this company has ever seen. I'm confused.
No, with that being said, we'll swing back around to the Tasty portfolio. You looking at debating on SEE a little bit there?
I am. I mean, there's one side of my brain that's saying, why has this ran sideways for so long? It's got to pop sometime. And then there's the other side of my brain saying, if it's ran sideways for this long, there's got to be a reason.
So we got a $2 expected move. A zebra during earnings just is so aggressive.
Do they have earnings soon?
Yeah, they have earnings before the bell November 4th. Before the bell November 4th.
Yes, that's next week.
Yeah, about a week ago. Yeah, next week.
This is sus. Why isn't this? I mean, yeah. Why doesn't this chart look like TSM? Is this not like super essential? I guess maybe there's just a lot of competition, or they're not playing their cards right. Feels like that this should be in crazy high demand right now. Maybe somebody, if anybody knows, I'd be interested to hear it.
It's a sleeper build. That's what it is. That's what it is. With that being said, NASDAQ really didn't offer us too much this week, especially heading into FOMC on Wednesday. But we got the announcement. It was very anticlimactic. I don't think many people were expecting too much. I mean, we got what everybody was expecting. There was like a 99% chance that we were going to cut 1/4%.
Well, the part that everybody was not expecting is that Powell did say a rate cut in December is, to quote him, not a foregone conclusion. So he's saying that there is a chance that they don't cut again.
So now why is he offering a gray area is now my question. I wonder why.
I think just so that,
because I know he's very particular on every word he says and how he says it.
Of course, I think it's wise for efficient markets to price that in when you know that the entire world is saying there is a 99% chance you cut now and then again in December. I think that that's just a smart move to make people privy to the fact that that might not happen, so that it doesn't get to be December and we still think there's a 99% chance, and then they don't cut and things go parabolic. I think it's good to disseminate that information.
But things have already been going parabolic.
I mean to the downside. It would create a ton of volatility and shop and everything.
No, 100%. I'm just waiting for some downside. So it's looking like we might get our first signs of some downside. We're getting a little bit of a pullback. But will this hold? We're not too far away from the all-time highs, sitting at 26,394. But we don't really care about these price points. We just kind of care about where value is sitting whenever we're looking at these futures contracts at the same time. So let's see where some of this trading opportunity can come in this week. I had posted some of the entries on the other NASDAQ position on Twitter if you want to check that out at Errol Coleman and explain the thought process a little bit more there. But I think we should get our levels down just in case we potentially get a little bit more downside.
Premium decay, this JCI, this looks the way that I expected these charts to look for these cooling companies. Just floating that.
JCI, which one is JCI again?
I don't know. It's someone, he just dropped a few
another cooling company
for me, and that's what I was looking around. Yeah, this is Johnson Controls International, but I don't mean to just sidetrack from you. I just wanted to.
Oh no, you're good.
That's how I expected
I'm
these to look.
Really interested into seeing what some of these other.
BTU straddle. See you in December. Winky face. Godspeed, brother. I think that's a fine call.
No, yeah, just curious to see what these other companies related to that space would be doing too. So it's cool to see C in those other names.
And then in response to the Moderna thing, you said that's my idea anyway. I was going to say, if you're already in that, good trade. That looks like it's going well. But Moderna, really beaten down. Getting long is the only logical option at this juncture to me. That seems to have found good support at this 23, 28 range. Just bounced straight from 25 up to 28 this morning. It's up 13.3% today.
What's Moderna been up to? There been any news in there?
I'm not entirely sure. Actually. Let me see.
They've been active though. They've been moving.
Yeah, things are moving. But to your question though, call spread with 8 DTE earnings in 7. So you're saying like the call spread would expire the day after earnings. I think that totally works if you are bullish Moderna earnings. I will be fully transparent and say that I have done zero research on Moderna's upcoming earnings calls. I don't know the expectations or anything, but if you have reason to believe that Moderna is going to beat expectations and have a good earnings call, I think that's a totally viable option, and it's good to be defined risk in earnings.
Moderna. I kind of miss the Moderna, Pfizer. I kind of miss those days. I miss those tickers. I don't miss those days, but I miss those trading days. I miss the trading days.
That's a crazy time to say that you missed.
That was some of the most volatile price action. During the COVID times, just hearing Pfizer, Johnson & Johnson, all of these headlines left and right. Good Lord, it was you're having a field day.
It was, yeah. That was
so much uncertainty. Like this got approved, this one's flying.
Yeah, and things.
It's just like crazy. It was a wild west.
Outside of pharmaceuticals, it was just everything was ripping every which way every day. Yeah, crazy town.
No, it was. Okay, changing the color of this point of control. We're gonna keep the point of control white. But this first level up here at 26,258 just happens to be the price level where there was the most traded activity at this level as we've been at the highs. Again, is the top in? I have absolutely no clue. I'm not going to be the one to guess. But that is going to be an important reference point in terms of if you believe we might make a new high. Because if we start trading above that point of control again at 26,258, you have a more of an indication that we're going to be a little bit more likely to take out that all-time highs because that's the price level that most traders are getting involved in via the volume. It's like receipts, bro, volume. Volume is the receipts always, always. Roblox. Let's check that out real quick. We'll always swing back to NASDAQ. But Roblox, or is that Roblox? RKLB?
Oh, Rocket Lab is.
Oh, that's Rocket Lab.
Yeah.
I was going to mention Roblox again and just how excited I am for them to continue to expand on what they're doing. I'm not a big like Roblox stan myself. I don't use them, but
well, yeah, it's
bullish on the tech.
We're moving progressively more and more into a world where people would just rather play UGC games and indie games than AAA games. Really,
that's a great point.
And kind of what it comes to. And I mean, I'm doing it myself.
I mean, I don't know if you would consider this, but I was telling Paris the other day. I was like, we should eventually get a what's the Wii, the handheld,
the Switch.
The Switch. I was like, the Switch is so fire. Like even if it's just us or you have some friends, like that's such a little fun game to just play, little knick-knack games, kind of whatever. And bullish on that as well. I had a great time with it.
Yeah, the Switch. Yeah, it's fun, and yeah, they got all kinds of stuff too. Nintendo. I mean, their licensing is just so robust. Like you give me Mario Kart, I'll be happy for a little while. Honestly,
I miss Mario Kart. I could go ham on some
the
Mario.
Switch. That's what I'm saying.
Bro, all I'm saying is we better not get a Mario Kart tasty tournament started because feelings will be hurt. And mine might be one of them.
That would be great. Everybody start emailing and saying that we need a Mario Kart tasty tournament.
That'd be so fun.
We could televise it.
With that being said, we got most of the trading activity up here. So we're going to block this off using our handy dandy tools. If we can find this zone. There we go. We're going to block this off over here.
Zelda, yes. Zelda's a good one.
Zelda. What's Zelda again?
Zelda? Legend of Zelda? Really?
I don't think I've ever played it. Is that more of like a...
I've never played it. It's just like such a cultural phenomenon.
Oh, yeah. I mean, when I hear it, my mind rang immediately.
Yeah, I mean, it's a whole series of games. They're all fairly long to completion, single-player games. Legend of Zelda, you play... Somebody correct me if I'm wrong, because I'm about to start getting outside my depth here, but you play as Link, who is the protagonist and hero, and you move through a fantasy world to try to save the Princess Zelda, I think.
Oh, yes.
Yeah.
If that's what... I think I know what you're talking about.
But not... yes.
I got to just put the image to that real quick. So.
Yeah, no worries.
Literally popped in my... Yep, that's exactly what you're talking about. When you said princess, it hit my brain immediately. My brain immediately.
Link's Awakening on the Game Boy was life-changing. I never had a Game Boy. I was like just... Did you people had Game Boys?
Yeah, I remember my oldest brother. My oldest brother is 13 years older than me, and I remember he briefly had one.
It was like when I was young, and like the first kids that started getting little game systems like that had Game Boys, but then by the time I got one, everybody had moved on to the DS, and I had a DS.
Okay. I thought the DS was pretty fire too. I was more of a PSP stan. I never had my own PSP, but that's what really intrigued me. I thought the PSP was so sick.
The PSP, yeah. Just before its time, because that's what the Switch is. That's what the Switch is.
Oh, right.
Yeah.
You're right. That's exactly what it was.
Yeah, and the Switch kills, but the PSP just...
I think you're right. I think it was before its time and I feel like that's the perfect way to describe it because that's when handheld consoles were more popular. Like that version or style of gaming was more popular. And that was before we really, I feel like, mastered consoles.
Yeah.
So it's like we got the handheld PSP coming out before we even mastered this category yet. And I think we have console fatigue a little bit. Maybe some people do, so that's why they maybe gravitate towards the Switch. And the Switch is popping off now.
Oh yeah, and phone games were kind of just starting to emerge right around that time as well. Like, yeah, that was, because that was what happened. Like the reason I kind of transitioned from the DS into like mobile games, like Clash of Clans. I was playing the heck out of Clash of Clans when I was young.
I saved up all my gems on Clash of Clans. I wasn't spending any. I would just save them because I knew one day I could buy whatever I want, and then I stopped playing the game.
I actually had the exact same experience. I probably have like 7K.
Yeah, I was like, that's literally like stashing up all your wealth in your entire life, and then you're like 60, and then you pass away, and you never even spent a dime. That's literally how it felt.
For real. I maxed Town Hall 10 on Clash of Clans, and then that was like when I first started playing the game. Max Town Hall 10 was as high as you could get, and then they added the DLCs like before I could get there. Right. That was all I ever wanted was Max Town Hall 10. So as soon as I did that, I was just like, I've played this game to completion as far as I'm.
As far as I'm concerned. Just annotating this chart a little bit because we're going to use this as a reference point when we swing back around tomorrow.
I still use my PSP, says Premium Decay. Holy cow, that's good on you.
Honestly, I would get one. I think I want a PSP. Honestly, I have a feeling I'm going to start collecting a lot of the old tech. Like I know cameras is one that I already see me gravitating towards. I bet, I think collecting all the old iPods is fire too.
Sure, yeah.
I think that's
a
pretty
fun
dope.
one.
Looking at some of these price levels down here, because we had a lot of trading activity up here using the volume profile at these highs, and the bottom of that trading activity is at about, the round number, 26,000 on the dot. Coincidence? I don't know. But if we continue to trade beneath this level and we continue to pick up some more volume, I'm going to be more inclined to maybe take some short positions to the downside, and potentially maybe if we could test the gap that we got over the weekend on Friday, which also left a single print, which was just another area of some very low volume. Pretty much the market moved so quickly through those areas, the market didn't have any time to transact any orders in that area. So maybe we target those levels if we get more price acceptance beneath 26,000. That's going to be my personal bias if we, end up getting that throughout today or tomorrow or heading into next week. But we'll come back and restructure if anything.
Seems very plausible to me. I mean, especially headed into the end of the week. Although I will say, I think I've predicted red Fridays like the last 4 Fridays, and I don't know that we've gotten one. So I'm gonna still issue that prediction. I think it'll be a down day tomorrow, guys.
Man, I'm hoping, but I mean, we're still barely off of all-time highs. It's such a difficult market to trade, at least for an intraday trade. It's such a difficult market to trade when you're at all-time highs, and you want to get a little bit more directional, other than long.
That's a good question for you in chat there.
Oh, there we go. Question for Arrow: when you put the volume profile up there, will it update live, or do you have to re-add it every time you want an update? So
is that where you get into fixed range versus dynamic?
Yeah, 100%, pretty much. So like over here, this range up top, I labeled it all-time highs, this week's developing value. So the static levels that I'll use, I personally like to use, you can track your own data if you want to, but what I have found to work very well is using last week's, where most of the trading activity occurred last week, and you could use that as a reference point heading into the next week, and then using the current week's developing value, because as you know, it's dynamic, it's shifting, and it's changing as we trade at different price levels. You use that in reference to your previous week levels of value or your previous month levels of value. So you can use like a higher time frame level of value, and then as the new week starts, there's going to be a new week's developing value. And you could just set that whenever the week starts, and then you're gonna have to update your volume profile, and then you're gonna recognize those volume nodes do change.
Makes sense. It's 30-minute candles, right? That's what
right now we're on 30-minute. Honestly, I would have done an hour too. The reason why I've been using 30-minute as a default, because I don't know if anybody has gotten into the TPO before. It's under market profile, and the TPO is called the time price opportunity, very similar to a volume profile. A volume profile tracks the traded activity at each price level, so it's just a distribution of volume. A TPO is time price opportunity, and that will show you where the market spent most of its time. So it's another distribution, but it's a visual distribution of time now, which is pretty cool. Very, very similar thing to volume profile. They just track 2 different things. One tracks trading activity, and then the other one tracks how much time was spent at a level. And they're tracked in like these boxes or these squares. If anybody has Google, you can pull up Google just to see what a TPO looks like. But there's like these boxes, and another box develops every 30-minute period. And once I learned that, I started using my higher time frame on a 30-minute candle, because I recognized market profile and things like TPO were calculated and are structured by default in 30-minute periods. So that's really the reason why I defaulted to 30-minute. I don't really think it matters, because even if you're on the hourly or the 30-minute, if you use the fixed range volume profile, it's going to plot the same exact levels where most of the trading activity was, right? Sure. Switching the time frame isn't going to change up if there was more activity at this level. But that's what can be really confusing about using a volume profile. When you first plot it on some softwares that you use, you don't know where it's taking that data from. So you're kind of confused. You're like, is this the volume profile from today? Is it taking the data all of last week? Is this updating in real time? So I found the fixed range volume profile really answered a lot of those questions.
For sure.
For you a little bit.
All kinds of good questions running in.
Yeah.
It's TradingView, these charts, a pay per month service. They have a premium service, but you're on the free one right now, right?
I am on the free one. We have the paid one too. Which I got to log into that password, but we got the free one.
The free one is mightily sufficient. You can use like up to 3 indicators, and it's pretty good. I've used TradingView a whole lot, and I've never needed the paid version. But if you want multiple charts or more than 3 indicators on your charts, things like that, it is a monthly. And then that last question for you, that's really interesting.
Arrow, have you explored ICT? What is your opinion on price action is controlled by an algorithm? Gregor, do not put me on my soapbox right now. I got a lot of opinions on that, which I think that is the most BS thing you can say, is that the market is controlled by a single algorithm. Right? It's one of those things where you're like, Is there multiple algorithms running in the market at all times? Yes, of course. We got high frequency trading. We have hundreds of thousands of algorithms in the market. But at the end of the day, those algorithms still have to buy and sell, and it comes up and is shown as volume in the market. So personally, I don't believe there's a single algorithm that moves the market. It's a very hot topic. If you're curious, on the Tasty Live YouTube channel, I made a video about that a couple weeks ago titled How and Why the Market Moves. AMT, auction market theory, explained, and I kind of explained the logic behind why something like that just wouldn't make sense logically. But those ideas came from somebody else in the industry, which we won't get into right now, but that's my thoughts. I believe the market moves through auction market theory that explains that the market is constantly seeking fair value to meet, right, efficiency in the market at all times. So with that being said, it just wouldn't make sense that and I think an algorithm helps fill orders, but I think the market's purpose is to always seek fair value, and I think that can debunk that a little bit.
Sure.
Weekly VWAP and past weeks VWAP with standard deviations is amazing for your value areas. Yeah, I've actually come across some traders that use the VWAP, and I know sometimes when you throw on the VWAP, it'll have that middle band, and then it'll have that upper band, and then the lower band. I know that those upper bands and lower bands will, serve as standard deviations to visualize as well. I don't use VWAP too much. Whenever I use VWAP, I only use the middle band. I usually take off the top and the bottom band. Again, I don't use VWAP as much, but if I were to use another indicator outside of volume profile, I'd 100% use VWAP. Anything that is any indicator that is a volume-based indicator, I'm a big fan of. Big fan.
Yeah, I really like VWAP as well. I do use it with all three bands in the shaded area. It's just a really good at-a-glance metric to kind of figure out whether we might be overvalued or undervalued in this moment. But the thing that I've come to realize about VWAP is the first word is volume, and you need volume for it to really function. If you're talking about something that's a little lower liquidity, a little lower float, even as something as simple as like probably like a Kava, the VWAP can sometimes just be too narrow because there's just not enough data for it to properly plot those points. But holistically, and the middle line will always be correct, but it's just the outer bands can sometimes get a little confusing, but I'm a big fan of VWAP.
Agreed.
I really like, I'm not a huge technical guy anymore. I once was, but I really like technicals that can kind of show me things at a quick glance that I don't have to read too far into. So Ichimoku Cloud and VWAP are kind of my two biggest favorites.
Yeah, I mean, being able to, I think, especially with trading, it's so helpful, especially if you're a shorter time frame trader, being able to. That's why I love order flow and using other order flow tools, because it's a visual component to it, and I think you can digest information quicker visually. And I think it's just when we see something, our brain processes it quicker than we can say what we understand.
Well, it's the way you process things too, because with a lot of SMAs and EMAs, or actually MACD and RSI are fantastic examples. It's really easy to say, you're just looking for a cross. How is it any harder to look at these two lines and see where they cross than it is to look at a cloud and see where you're at in relation to the cloud? And my answer is it just is. And it doesn't have to be for everybody. Not all of these are all-encompassing recommendations, obviously, but I prefer to have clouds overlaid on my chart rather than MACD lines on the bottom, and I can kind of watch where they cross, and it's all just personal preference. Whatever works for you and lets you get the best vision at a glance is what 100%. You should be doing.
We had volume profile looking at Jim Dalton. I actually had looked into the Jim Dalton before. I had came across one of his pieces. What was it called? I think this was actually recommended to me a year or two ago by a Tasty member, if I'm not mistaken, actually. And it was, maybe it was called Markets and Profile. I forget what it was called. But I believe it really went into detail about TPO, if I'm not mistaken. It's been a little while now. Or should be looking into the VWAP. I'll add VWAP a little bit more. I think that would be very helpful for when the market is in imbalance and we're a little bit more directional. I think that could honestly help a lot with maybe adding to your positions, putting that into perspective a little bit more. When I think of when we're in an imbalanced market, maybe you could use the VWAP a little bit more for those fake outs. If we start trading back beneath the VWAP and I'm looking for that mean reversion move, that could give me the confidence maybe that we're shifting. I don't know, Dan. Maybe we'll throw up VWAP a little bit more often, and we'll break that down in a little bit more detail. I just haven't included it in my system. You know what I'm saying? But by all means, 100%. I just like a clean chart. That's all.
Yeah. In response to the bookmap question, I think. I don't know. Bookmap is too much for me. I don't need that many technicals. Most of what I'm doing is not technically focused. Whenever I see people post screenshots of their bookmap on Reddit, I'm like, what am I even looking at right now? So it's a bit much for me. But if you want, that high level of technical information and you don't mind that much noise on your charts, then yeah, sure. I don't see why not.
Yeah, Bookmap.
There's nothing wrong with that.
Yeah.
I said that like that was derogatory. It's not. Trade how you want to trade and however you found success doing it. That's amazing. It's just not for me.
Yeah, no, I know Bookmap was another pretty popular tool that's been getting out there a little bit more. Bookmap, I don't think Bookmap is necessary. Bookmap is something more like your DOM. So think about your depth of market, how the DOM only shows the passive orders in the market. Bookmap just puts that in a visual manner for you. But it's mostly level 2. I think Bookmap shows some of the aggressive orders via the bubbles that you see on the chart. It looks like you're trading planets, literally. But those bubbles are all the aggressive orders in the market. I think if you remove those bubbles, it'll be a little bit more clear in terms of what orders you're looking at. You can really visualize the resting orders. You can see the same information in the DOM. And on the tastytrade platform, right, if we jump over here and we go into the book, let me go to trade, let me go to active trader 2. Active version 2. So over here, when we look at this active trader, this is the book, this is the DOM, this is a depth of market. Now, whenever you hear someone talk about a book map, it's just putting this, what you see here, in a visual manner for you on a chart. So it's just gonna show you all the limit orders again. So is one better than the other? It depends on how you can process information and pick up on it really again.
Yeah, exactly.
But is it necessary? I wouldn't say so. No.
Yeah, I'd be inclined to agree. I think there's a lot of services that do the same thing. If you think that that's the one that makes it look the prettiest and is the easiest for you to follow, then absolutely go for it. I mean, it's all personal preference at the end of the day.
And I just have, and also I have a little bit of a bias. I think that reading aggressive orders in the market is more useful than seeing the passive orders in the market. I mean, there's so much spoofing on the DOM. There's so much spoofing in a book map where they will, someone will enter a large amount of orders to make market participants believe that there's gonna be a huge wall here and then they can pull that last second and the market can do whatever it wants. So spoofing isn't even legal, but there's a lot of spoofing on level 2. But that's why, in my personal opinion, something like footprint charts or being able to read a time in sales is more useful because that shows like the receipts of the market. Because you will never have to get confused if there's spoofing. And time in sales is pretty much that time window that shows you every single order that went through to the market, at what price, how much was bought, how much was sold. It's very difficult to read in my opinion, but a footprint chart kind of puts it into a little bit more of a visual component. And then there's no spoofed orders on there. So if you combine both of those limit orders, the passive orders, resting orders, and then something with the aggressive orders, I think can be a little bit useful, but I don't think Bookmap is a little bit overhyped, in my personal opinion, right now within the community, because I hear that question a lot.
I think so too.
Personal opinion.
And if it's helpful, I would never fault anybody for using it. But yes, I agree. I think that it's just a little bit overhyped, and I think that, and especially in the case of, and I don't really think that this applies to anybody here because we're all very active traders, but especially in the case of like more passive traders, I'll see people post on Reddit like their just main long-term portfolio and they're using Bookmap for their charts, and it's like, why? Like, you're not even planning on selling any of these things. You don't even need all this information. It's just extra fluff. But yeah, if you think it has utility, then you should absolutely go for it.
Yeah, 100%. And I think somebody had made a comment the other day on one of the videos. They were just talking about how you perceive the market is how you perceive the market too. So however you grasp the information the best. But I think what's important is just whenever we're using some type of tool, we should at least try our best to understand exactly what it is and how it works.
I don't think spoofing happens too much, and it's more orders placed for immediate large liquidity that then changes rapidly and dynamically. I think the big thing are icebergs.
I think icebergs are really interesting. Personally, I do think spoofing happens a little bit frequently in terms of large orders popping up on the bid and never getting filled or ever reaching there, or large orders popping up on the ask, never reaching there or never getting filled. But still agree with you in that sense. And then also in the sense of the iceberg orders, I think iceberg orders is just a way more strategic strategy for big banks and institutions and big money to get filled into their orders. And if you're not familiar with an iceberg order, pretty much what an iceberg order is, so with the DOM in the book, you can see the resting orders. And sometimes at a specific price level, maybe it'll say there's 10 orders. So you're thinking, okay, there's only 10 orders at said price level. But what sometimes big money will do so that they don't scare the market is once their 10 orders get filled, they refresh it with another 10 orders. And then once that gets filled, they refresh it with another 10 orders. So you don't actually realize there's a massive iceberg behind this price level. They're only showing the tip.
Yeah, you can only see.
And then they're just gonna refresh and refresh and refresh and refresh and refresh it. And then you start to recognize, oh snap, I think there's some absorption going on, maybe some iceberg orders. But I think that way helps you visualize it a little bit better. But I know we're running out of time here.
Yeah. I know. I think that was incredibly well put.
Thank you.
Yeah, I agree.
Love you, German. Greg, never know when the iceberg is going to end. Yeah, you never know when the iceberg, you never know when Greg's pockets is going to start running thin. Right? You never know.
Yeah, that's true. There will be signs. Greg going to start putting up the icebergs.
Yeah. No, I know we're running out of time here, though. Anything else before we wrap, Gus?
No, I got nothing else.
Cool. German, Dan, Greg, Grumpy Mike, big deal. Everybody else, thanks for taking the time to hang out with us today. We will be back tomorrow for some more post-FOMC action. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Thursday Aftermath edition of what it is that we were trying to do. Man, we did the FOMC yesterday, and boy, that was fun, man. Like, we were moving, we were shaking, we were getting things done. And now today is kind of like, I don't know, it's a little bit of a lull in the action. I know the market's down, things are moving around a little bit. Chipotle is getting absolutely steamrolled, but it's just not the same, man. Yesterday, once you get a little taste of that action, man, a regular old Thursday, I don't know what we're going to do, but hopefully we can figure it out here together. But thank you guys for being a part of what it is that we are doing, because it's only because of you guys that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live network, that would actually bounce on over to YouTube, because if you're on YouTube, you can communicate in real time with your brethren who are also watching the program. You control all of my trades, especially the Chipotle one, and it is indeed a good time had by most. But John, bring us into the market. Man, let's see. What are we doing? Man, what are we doing? Let's see. Let's go. You mean S&Ps down 29. You got the NASDAQ index, the risk-free instrument, also an extremely high-risk product. It's kind of both of those things all at once. Down 205. Got the boomers up 130. And then you've got the Russell 2000 futures index down $2 on the day. Got the bonds are down 20 ticks. You got the notes are down 7 ticks. You got the oil is up 13 cents. You got the UB40 down 29. You got the Shifties kind of staging a little bit of a comeback here, up 15. You got the Hunt Brothers up 67 cents. Silver now creeping up to 49 again. You've got a market that is so weak. Guys, this market is so weak today. Even volatility was down earlier. Yeah, look at this. Volatility futures down 30 cents. Right, you can see that right there. I'm not making it up. It's not my opinion. There is an objective fact. Volatility futures down 30 cents. VIX, spot volatility, it was also down earlier. Down 60 cents today. Man, you don't see this too often. It's actually quite rare that you have a market where the market is down and volatility is down. Like normally, market prices and market volatility follow an inverse relationship where one goes up, the other one goes down. That's going to happen, I'm going to say 90 to 95% of the time. If that relationship is broken, it's oftentimes broken on the other side where you're actually seeing the market go up, but you're also seeing volatility go up. Again, not a super common occurrence, but if it's going to be broken, it's going to be broken in that direction most of the time. It's actually quite rare that you would see a market. I mean, it's down. I mean, 30 points on the S&Ps is 0.5%. 200 points on the NASDAQ is almost a 1%, right? And so you've got a decently weak market, and yet volatility itself is also down. And so it's just a reminder that while we have these relationships that are inherently reliable, at least if history is any guide, they're still independent things. They're living and breathing things that are going to act kind of on their own merits, if you will, at the end of the day. And so while it might be reliably inverse, market volatility, market prices, that doesn't guarantee it's going to happen. And it doesn't guarantee that it is indeed going to follow that pathway forward through the forest every single day. And so we're seeing that here today, which is quite interesting. But all right, guys, so we got to go ahead and we got to do it, man. So many things to talk about today. So many things to talk about. So obviously, the first thing I need to do, I got to tip my cap. I got to tip my cap. They got to take a bow. They got to do all the things. The P&L Open Bros got me. They got me. And if you look at Chipotle, you know exactly what I'm talking about. So I don't know what Chipotle said yesterday. I think they just said, like, we're just not a good company. Like, I think they just came out and said, nobody's really coming to our stores. We understand why. We're just not very good at what we do. And so as a result, the stock is down, 1 million points today, with Chipotle now down to 33. 33. That's crazy, man. This thing was over 50 just a few months ago. That's a pretty wild drop on a stock that is well established. Like, we're not talking about, Open. We're not talking about, what are the other IPOs these days? I can't think of the last one. I don't know, but we're not talking about some, small biotech company coming out of Silicon Valley that still needs to figure it out. We're talking about Chipotle. Like, they've got the well-worn path. They've got the stale chip-ridden path that they've been running for years, for decades at this point, and yet the stock is down 40% in the last, 5 or 6 months. And so, I mean, if we look at the P&L Open, there it is, man. Look at that thing. Look at that thing. It is brutal. That is brutal, brutal, brutal. Even the P&L day, like, I can't even hide. Like, it's so bad today. It's so bad today. I can't even hide. You know what's funny about today? Oh, let me share a little something with you guys. So I have 3 children. I have Penelope, Eli, and Amelia. And so my youngest is Amelia. She's the intern for the show. She's the trading assistant. She does all of my trades, like all those things, right? Well, she has a small fever tonight, or she had a small fever last night. And so Autumn said, hey, like, because my wife's got a lot of things going on today. So she's like, hey, I might need you to call in sick tomorrow to take care of Amelia. And I told her, I said, I can't call in sick tomorrow. Like, if I call in sick tomorrow, the P&L Open Bros will have won. They will have won the war. Like, yes, they're going to win the battle. But if I'm hiding behind a rock and I'm calling in sick just mysteriously on a day when my youngest daughter is sick, but Chipotle is also down, 17,000%, it's like, yeah, that looks a little bit fishy there, Dr. Jim. I think you finally gave in to the P&L Open Bros. And again, I'm tipping my cap. They can take a bow. They won this battle, but they will not win the war. And so I actually told my wife, I'm like, listen, any other day, happy to do it. Of course, I will step in when I need to. I said, this is the worst possible day. And I tried to explain it to her. And I was talking about P&L Open Bros. I was talking about this and that. She's like, all right, you don't have to tell me all the ins and outs. I'll figure it out. And so big kudos to my wife figuring it out right now with like sick kids and doctor's appointments and all kinds of stuff. But I'm here with you guys. I'm taking my lumps. Like, sure, we're going to obviously, transition into some victory laps here in Google and Microsoft here in just a second. But I wanted to open it up with some lumps in Chipotle because it's not good, man. It's just, it's not good. And I actually think, and we've got Apple and Amazon tonight, of course, too. I think the time has come. I think I'm done with this crap stock. I think I'm done. This is probably the time when you should obviously rally the troops and you should stay the course. And it's like you were buying low, we're selling high. It's like whatever. It's like, no, not my game plan. We like to buy high and sell low. Like that's what we do. And so I am going to go ahead and exit the Chipotle position completely. And I'm not trading it again. Like it's done. It's on my list now. 86 Chipotle. It's over. It's done with. And we tip our cap to the P&L Open Bros. So let me go ahead and if we open up Chipotle, we look at this guy. It's just so brutal, man. It's so brutal. I don't want to deal with this thing anymore, man. I really don't. Like, I don't know what they said, but I think they said something about, all kidding aside, I think they said something about like they don't appeal to the young generation. I think they said something to like, we can't get I don't know what age ranges or what demographic they were pulling from, but they basically said we got the boomers on lock. We got the Gen Xers on lock. We got the millennials on lock, but the Gen Zers and below, they're just not interested in what we're trying to sell. And it's like, man, it's like, yeah, that makes sense. I think the Gen Zers are like, why are all the old people still eating stale chips? And it's like old habits die hard. It's like for me, for you, I mean, I'm 44. If you're my age or older, like you've been doing those stale chips and you don't ask any questions. Like there's not a peep coming out of your mouth. You're like, this is actually pretty good when you get used to it after a little while. And so the Gen Zers are just like, yeah, this is not enough. And I don't blame them. I don't blame them at all. But let's go ahead and let's do it. So we're going to be done with Chipotle. And, it is funny, though. One more quick comment. You see all these boxes up on the top here? I was looking at these before. I opened the show, and I don't use these boxes too often because I normally just have I have them all like checked, the ones that I want to show. But it's like, like right now I have stocks checked. If I like uncheck that, like all my stock positions would disappear. Like you see my 100 share position it's just gone, right? And if I bring it back, then it's back. Like if I uncheck options, it looks like I don't have anything on in my portfolio, but then it comes back, futures, and then futures options and whatever, and then fixed income, whatever. If only we could fashion together a button up here that said CMG. Like if only I could toggle CMG on and off. Like I want to show it to you guys today. I don't want to show it to you guys today. Like I think that could potentially be a workable solution, something a wee little bit tenable for us to hold this position into the future. But given the fact that we don't have that button, and I know that the developers over at tastytrade have many other things to work on, I don't see one coming on down the chutes anytime soon. I think it's time to just be done with the Chipotle position. So, all right. So let's close out of our shares first. What a craptacular stock, man. Really. It's really, really something. So we'll be done with Chipotle. There you go. There's the 100 shares. Pour one out for a Chipotle. It could be a Natty Light Ice. It could be a banana daiquiri. It could be a little Hennessy. It could be whatever whatever your drink of choice is. Just pour out a quick little, a couple drops or two. Let's get rid of the option too. Not even going to battle it. Don't even care. And so in fact, I'm going to lift the offer. I care so little right now. I'm lifting offers. There it is. Give me the offer. Don't care. Done. Chipotle, never to be spoken of again. Look at that. Ah, man. The relief. Do you feel relief? Like I feel super relieved right now. Like I'm looking at my portfolio and it's gone. Like it's absolutely gone. It's amazing. It's incredible. And so Chipotle, let me get this thing on. I don't even want to see it on the top. Let me click on a bunch of stuff so it goes away. Silver, SPY, Apple, UB40. I don't even care. 6B, little British pound action. There you go. Now it's gone. It's like it doesn't even exist. It's beautiful. It's a beautiful thing. All right. So now we transition to, and look at this. Like, if the Pinot Open Bro slept in today, right? And they're just tuning in now, they're like, wow, he's doing pretty good. They're like, look at this guy. He's really turning a tide. Maybe I'll tune in now. Maybe I'll actually listen to what he has to say. And it's like, yeah, that's the beauty of just kind of being done with it and moving on. So, all right. So the other earnings trades we did last night, obviously Meta, you can pour one out for Meta too if you'd like to. But again, if we're talking banana daiquiris, I wouldn't pour too much out. Like you got to leave a little bit for yourself there. But Meta, that's not doing too well. Down $82 today, which is, that's pretty crazy. But Google, Microsoft, and even Starbucks all kind of came to play. Google and Microsoft more than Starbucks, obviously. Starbucks, we're basically going to break even on this call spread, it looks like. In fact, let me look at this. I think it's going to be about a scratch. Yeah, we're going to make about 20 cents on the trade. I think we bought it for $2 or maybe $2.05. So I'm just going to close this down because it expires tomorrow, and we could hold it and take the directional shot going into tomorrow. But I'm kind of like, nah, I don't really want to do that. I've already got the 100 shares in Starbucks, and we've got 2 freshly minted stacks of cash that we are going to be setting ablaze in Apple and Amazon here in a couple of minutes. And so for right now, I think we're just going to be done. It's going to be over with when it comes to this Starbucks long call spread. And hey, I mean, we scratched the trade, made a little bit of money out of it, and it could have been a lot worse. Especially since I think Starbucks last night, there you go, we got filled on the long call spread. Starbucks last night, I think it was originally down. Was it not down on the number? Let me go to a chart really quick. Let's do I don't want to do a day. Let's do a 2-minute. Let's get my man Errol Coleman a few royalties here. And let's see what we can do for him to kind of help the cause. And so last night, it was up on the number. Okay, so the number came out right after 4. Starbucks rallies on the number, and then it sells off. and then it just meanders, into the wee hours of the night of the morning, and then it just kind of it collapsed early in the morning, and then there was a rally back. So I'll take it, man. Honestly, wow, look at the market. Market's all of a sudden down 42, Nasdaq down 260. Man, what's going on out there? I don't know, but Starbucks over and done with. Hey, look at PayPal, by the way. Look at this guy kind of, resurrecting itself from the dead, which is surprising because that's only happened one time before, about 2,000 years ago. But here you go. You got PayPal, and we're up about 50 cents on the trade. So it's not too bad. I mean, it could be worse, of course, especially when we were laughed at and mocked and jeered when we first put that trade on. But the great thing about being in December is we can just chill. We can just chill. We got plenty of time, and that's going to be that. So PayPal, we sit tight. We do nothing. But Google and Microsoft, this is what you guys are tuning in for, of course. The patented, the tried and true, the Betty Crocker, Dr. Jim victory lap, which of course comes after, absorbing 3 to 5 losers. Then we find the one winner on the board and we spend at least 11 minutes talking about that winner. But Google, you can see really nice action. Google was actually up higher this morning, I think. If I'm not mistaken, if I click on Google, let's see. If I go to a chart of Google, yeah, look at this. Google was up significantly higher. This morning. Wow, look at that. In the pre-market, Google was crushing it, and that circle doesn't really. It's not really relevant anymore. But in the pre-market, Google was crushing it up to almost 300, and then it's kind of been weak ever since the open. And so, I mean, there's been a couple of rallies in there, but I'm pretty happy with being able to. Looks like I'm going to be able to get about $4.50. In terms of a winner on this long call spread. That's a pretty good trade, especially amidst, your Chipotle's and your other things going on. Palo Alto has even given us some fits here this morning. And so, I'll take it. The Google trade ended up working out pretty well. And so we also were able to kind of, cheat the system here, and we're going to end up with a really nice winner on Microsoft as well, which is super nice. So let's go ahead. Let's close out of Google. That's a pretty quick victory lap, rather efficient if I don't say so myself. But let's go ahead and let's try 885. We'll see if we can get filled. Okay, so we got filled at 885. Beautiful. Okay, so we're out of Google, over and doubled. Let's now go to, let's see. Let's go to, what was it? Microsoft. That's what I want to do. So Microsoft, very weak pretty much ever since the number. A couple of signs of life this morning. But if you go back to the number last night, let's see, where's the number? So that's 4:30 a.m. Yeah, okay, so there's so look at that. Wow, that's look at that candle, man. Hold on. Look at this candle. The number comes out and it looks like 402. Number comes out. Microsoft opens at 544 and it hits a low of 518. That's a pretty big drop for a $500 stock. That's a 5% mover in 2 minutes. That's a pretty big mover indeed. So Microsoft got taken out behind the woodshed last night, which was obviously good for us because we were playing it to the downside. And then it's pretty much just meandered back and forth. You've got some crazy candles in there, kind of after the, those are obviously just stop hunts, obviously. But then you've just got back and forth action and, another stop hunt right there. And then you've got Microsoft. Stop hunts are funny, man, because, if you really want to, if you really want to ruffle some feathers, and if you really want to get engaged in a really heated discussion, ask somebody what they think about stop hunts. Man, do you think the markets are manipulated? Do you think the market makers are going after stops and this and that and the other thing? And it's man, I don't know. It's blah, 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 blah. And people get really, really fired up about that. If you want to know my personal thoughts, I absolutely think it happens 1,000,000%. And so, but anyway, you can even see it on the charts right there. But if you look at Microsoft, it's down $17 today. That's pretty good. That's pretty good for us. So let's go ahead. I want to take this off because I want to get into App One. I want to get into Amazon because, man, I got some doozies for you guys. Man, I can't even wait. I'm so excited. I can't even contain myself. And so let's go ahead and let's try to get out of this Microsoft trade. And then, of course, I want to get to you guys. Man, I see you guys in the chat. Man, hold on. I see you guys already. You guys are bringing, it looks like some B trolls today, maybe even a B+. You guys will settle back down to some B- trolls. I know that you will. And so you'll have kind of some trolling mean reversion there. But all right, so we got out of Microsoft. So, when everything's settled, I think the earnings cost us some money, of course, because Chipotle was so bad. If you leave out the 100-share position before going into Chipotle and leave it out for Starbucks too. But if you just look at the earnings trades themselves, I don't know. Maybe, we probably ended up losing a little bit because we lost about $4 on Meta. We lost about $4.50 on Chipotle. But then we made about $4 on Microsoft. We made about $4.50 on Google. And we made a little bit on Starbucks. We might have actually scratched all the earnings. Maybe we made a little bit, actually, surprisingly, which is really, really surprising because it really doesn't kind of feel that way. It doesn't really feel that way at all. And so, but I see you guys in the chat, man. Look at you guys. See Arn, 9749 in the house. Man, Rancid Viper's in the house, man. Look at this. Got Rancid Viper in the house. Man, you guys are awesome. I even forgot to hop into the chat to kind of demarcate the end of Gus and Errol and the beginning of myself. But I see Greg Lutton's in the house, man. John Covington's in the house. Soul Train's here. Man, I Sell Puts is here. Man, look at this. Ash Finn is in the house. Man, look at you guys, man. I appreciate it. Theta Trader's in the house. Man, it's awesome. Theta Trader, Dr. Jim cannot stop himself. He can only hope to contain himself. Yeah, it's something like that, maybe. Maybe it's something like that. All right, let's go to Apple and Amazon. Okay. So listen, guys, I really think if you try to overthink this, you're going to do yourself a disservice. If you try to go too far down the rabbit hole, I think you're going to end up going backwards in the end. When we think about yesterday and we think about FOMC, I saw the presser after the show yesterday. Man, that tie, it couldn't have been more purple. It couldn't. Like a lot of times, it's sneaky. Like, again, it's a purple maroonish. It's a purple, like, kind of grayish. It's like a purple, like super light purple. Like, is that baby blue? Like, you can't really tell when he's really far back. But, man, yesterday was just a statement play. Yesterday was highlighter purple. Like, you could see that thing from 300 yards away. You're like, he's doing purple again. I can't believe it. That's 47 times in a row. Like, that's really, really impressive, to be honest with you. Not even the streak itself. But now he's just making statements. Like, now he's establishing his power. Like, he is claiming his spot in the world with the purpleness of the ties that he's choosing. And so it's really, really rather impressive. But after yesterday, FOMC's, December's not a sure thing and blah, 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 blah. And then you just think about Apple and you even think about Amazon. Don't even think about them as companies. Just think about them as thought experiments. Just think about them as like ways of life and philosophies. I don't know how you could possibly not be super, mega, ultra bearish on both. I just don't know how you can't be bearish on both, because if you can beat them, you should never join them. If you can beat them, don't join them. Why would I join them if I can beat them? Right? And so today we're doing Apple, we're doing Amazon to the downside. Man, let's go. I'm ready. So let's go in here. We're going to do the same type of trade for both. So each trade is going to have two packages. So why light one stack of cash on fire when you can easily light two for each? So let's go into Apple. We're going to go into the 1 day cycle. So obviously we're going to go with the tried and true, the patented, the Betty Crocker expected move butterfly. And that didn't work out for Meta, but we never even had a chance. And so obviously Google and Microsoft worked out pretty well because they were simple trades and they were just vertical spreads. And so there's a time and a place for that. But man, you guys know I love Thursday and Friday butterflies, because if you happen to get the move you're looking for, you can get paid really nicely on that butterfly. Just know though, that, if these do work out in the morning, I am most likely going to be managing them before the show, because I've had a couple slip away from me that have cost me, winners turning into losers a couple of times. Like with gold, I think it happened maybe a month ago or 6 weeks ago. I don't really want that to happen again. If the trade's in a good spot and I feel good about it, I may leave it on for the show. I certainly may do that as well. But if I happen to get a winning trade and I feel like it's going to slip away from me, not like I know if it's going to or it's not going to, but if I have a feeling about it slipping away from me, I may go ahead and kind of snag it while I can. So let's go ahead and let's do a downside butterfly in Apple. So this one's going to be very, very simple. These are not Amelia's trades because, again, she's sick. She's under the weather. She almost forced me to call in today, but I didn't do it. I'm here with you guys taking my lumps in Chipotle. Wait, Chipotle? What? Who? I don't even know what you're talking about. So 270. 260, 250 is going to be the butterfly in Apple. This is it. It's a $10 wide butterfly, which is fairly narrow, but if you look at the expected move, you can see it on the screen here. The expected move for Apple goes from where the stock is now, 271 and some change, all the way down to about 263. So the expected move, or 262, the expected move is only about $8, which you can see right here in the upper right-hand corner of the option chain there. And so it's only a $10 wide butterfly, which feels kind of narrow, but it's all you have to, push these things through the appropriate, context filter. And so right here you have, the IV rank is actually not that high for Apple. It's only 19.5. And so, it's only going to be a $2 butterfly, which is super nice. And so it's a fairly cheap butterfly. It's not as wide as we would do otherwise. I could go ahead and widen this guy out if I wanted to, but I actually kind of like where this one sits. I think if we do get some downside movement in Apple, we will have an opportunity to manage this guy for some type of winner. Now, this isn't the $20 butterflies and the $30 and the $40 and the $50 like we've been doing in, SPXs and GCs and whatever. So you have to be mindful of the fact that we're not hitting a home run here. Like we're looking for maybe a single up the middle, maybe a ground ball the second to move the runner over. That's all we're really trying to do with this position. So 270, 260, 250. For Apple. This is part 1 of trade 1. So let's go ahead and let's push this guy out because I want to do this fast because I want to get to you guys. I see you guys, man. Wow. Hold on. Because I got to do the other piece to this. I'm going to go 225. So not only am I going to do, all right, so the butterfly got filled in the 1-day cycle. And again, guys. You need to be on the opposite of all this because not only am I going to play the downside 1 time, I'm going to play the downside 2 times. So let's close up the 1-day cycle. Let's go into December with 50 days to go. And I am going to sell a $10 wide call spread to finance that butterfly. And I'm going to do the same type of setup with Amazon here in a second. We've done this before in the past. It's actually worked out pretty well. You have to understand that you are essentially taking 2 shots in the same direction. So there's no hedging mechanism. There's no offsetting features. I mean, they're different strategies. So it's possible that, you win on one and not on the other. I mean, it's possible that we would win on the short call spread and not the butterfly because of the timing differences and the strategic differences. But you have to understand, like if Apple, just has a face ripper tonight, we're going to get our faces ripped off. Like that's just the way that it goes. You have to know, again, here it is for the 111th show in a row. What are you signing up for? Do you know what you're signing up for? That is indeed what we are signing up for here. We're signing up for, playing this thing to the downside 2 times. So I'm going to sell a 275. I'm going to buy a 285 call spread. I'm going to pick up about 380 for it. I've got about $6 of risk for about $4 of profit on this trade. And this is going to be the second piece to the Apple earnings package. There you go. We got filled on that. Let me go to Amazon. I'm going to do it really fast because it's basically going to be the same setup. And I want to spend some time with you guys here in the chat because I see you guys, man. Look at you guys in the chat. I appreciate you guys. I see you guys always make me laugh, man. I see small trades often caught my eye. Small trades often says, whoo, man, it's time to go long on both Apple and Amazon. Thanks, Dr. Jim. You are welcome, small trades often. You are 100% welcome. And you've got the right idea. Unless I go on a heater. It's got to happen at some point. Like just statistically. Forget the fact that my skills and abilities are on the lower end of the spectrum. I'm aware of that. You're aware of that. Like, that is no secret at this point. But just by random happenstance, like, we've got to rattle off like 13 in a row. Like, it's got to happen. Like, at some point, if you just flip coins, you're going to rattle off 13 heads in a row. It's going to happen. Now, the problem is that's a 50-50 proposition. Any earnings trade that I do directionally, it's like a 20-80 proposition. So we have the odds stacked against us when it comes to rattling off, those 13 or 14 in a row. But still, I would think, given enough opportunities, we should be able to do it. But let's go into Amazon. We're going to do, what do I have written down here? I have 220, 205, 190. So again, not the widest butterfly in the world, but cost-wise, it's going to be kind of nice because it's only $3.47. And also, if we do get the move in our direction, like we're going to be able to make money on this trade. Now, we got to be careful we don't overshoot it, obviously. If both of these companies just, fall through the floor tonight or in the morning or whatever, then that's going to be a problem too. Like we've got to get the magnitude and the direction correct. So for Amazon, we're going to do 347. I'm sorry, we're going to do the 220, 205, 190 butterfly for about 347. That's what I meant to say. And then we're going to do the short call spread to finance this butterfly. And so let's go into December, similar to Apple. And I'm going to sell, what do I have written down here? 235, 245 for $3.20. Beautiful. I mean, this is it. Like we're collecting a little bit less than 1/3 the width of the strikes. It's right around 1/3 the width. But I want to give myself a little bit of room because obviously with the butterfly, you're paying debits. You've really got to get the direction to move right. You don't have a lot of room for error. You have some, depending on the width of the butterfly. Don't get me wrong. But the beautiful thing about short call spreads is giving yourself more room for error. We didn't really give ourselves very much for Apple. And I think that was largely the product of the implied volatility rank being on the lower end of the spectrum. Here for Amazon, the implied volatility rank is much higher at 45. So we're able to give ourselves a little bit of room where you've got the stock at 225 and our short strike is going to be 235. And so I think this is it. I think this is going to be part 2 of trade 2. And there you go. A little $10 wide short call spread in Amazon. Looks like we got to do 317. All right, can't get filled. Let me see if I can just kind of see if I can muster this guy. 315. This should do it, I would think. All right, so we got filled at 315. All right, beautiful. Beautiful, beautiful, beautiful. Okay, here we go. Where are you guys at, man? Let me see if I can surprise and delay somebody in the middle. Here we go. Weiss SGN says, greetings, Dr. Jim. Should I load the boat with Chipotle? I don't know who you're talking about. I can't answer that question because I've never heard of that stock. And so you have to ask somebody else. But thank you for being here. I appreciate you, my friend. And so let's see. Oh, you guys are just making me laugh, man. You guys are making me laugh. John Covington says RIP CMG. Again, I'm not familiar with that ticker. Is that a privately held company? Is that a new IPO? I'm not exactly sure what you're talking about. But let's see. Let's go to and then John Covington goes on to say, or before he says, we should just give it all up and only trade live cattle. That's what I'm saying, man. Some lean hogs. Like, let's do it, man. Let's 100% do it. And so where are we at? Oh, here we go. Here we go. Joel James. Joel James says, Dr. Jim, is IV too low to trade QQQ? What about SMH? I don't know. Let's take a look at it. A little shake in my head. I'll do a little shake in my head. So QQQ, oh no, IV rank is 20. This is, I mean, obviously we want it to be as high as possible, right? IV rank of 50, 60, 70 is better than 20, 30, 40. But it's also not 5 and 9 and 11, right? And so when you have a market that's incredibly strong, like the market that we're in right now for the last couple of years, getting the IV rank to just poke its head up above, the teens basically and get into the 20s, especially for an index where you're not talking about, I'm not talking about earnings. I'm not talking about like individual binary events like with Chipotle or what stock was that? Yeah, is that a publicly traded company? I'm not even sure. But anyway, Apple, Amazon, like whatever, right? Stocks like that, you have these binary events. The implied volatility expands going into those events. The implied volatility ranks often elevate going into those events and things of that nature. So it's not that uncommon for the IVRs to get elevated around those news releases. But with an index, it's a little bit trickier because this is obviously going to be a basket of stocks, a big index like the NASDAQ or whatever. So 20, Joel James, I would say definitely tradable, 100%. And then you also asked about SMH. Oh, 23 and a half. I mean, yeah, that's also fine. This is the semiconductor ETF. Sure. I mean, these are definitely plenty high to do whatever you want to do in them. And so, yeah, market's staying a little weak here. That's really interesting with ES down 38. All right. Very interesting. Very interesting. All right. Let's see. Where are you guys at? I forgot to put my thing in there, so I'm going to have to kind of guess where you guys got started. I see, let's see. Oh, I see Sam L's in the house. What's up, Doc? What's up, Sam L? With all those earnings trades flying around, did we burn through the cash pile all at once? No, there's still more, believe it or not. Or is there still enough left for a small 5-minute victory dance and a scoop of pre-workout? Always enough left for a pre-workout for sure. Like that's its own pile of cash that is not to be touched by anything. Like losing trades, like butterflies, like companies slanging stale chips. It does not get touched by anything else. And so that's always going to be perfectly safe. But other than that, we were able to muster up some victory laps with Google and Microsoft. And now we've got Apple and Amazon on the horizon as well. And so tomorrow should be pretty fun. Let's see. Rancid Vipers in the house. Dr. Jim. It's the Dr. Jim Power 3/4 of an hour. What's going on, my friend? Wow, nice white crisp shirt, my friend. Yeah, I don't wear this shirt that often. It's actually a little bit too big for me. And so I kind of feel like I'm like 9 years old again. And I put on one of my dad's polos. But today it was one, we actually, I don't have too many clean shirts right now, and I only wear like 4 shirts. And so I'm kind of in the hurt locker when it comes to, the wardrobe. So we had to go with the crisp white, just to keep you guys guessing and keep you guys on your toes a little bit. Well, let's see. If I go to Greg Lutton in the house, thanks again for the email reply. I appreciate you, my friend. Thank you for the patience. Sometimes I fall behind. I really work hard not to, but it certainly does happen from time to time. So I appreciate you, my friend. Wolf's in the house. What's up, Dr. J? Let's go, man. Let's go. John Covington in the house. Dr. Jim time. We all survived the FOMC. Yeah, we certainly did. Somehow, some way. I still don't know that we're going to really, truly make it to the other side, but at least we dodged, we dodged something from yesterday. Ash Finn's in the house. What's up, my friend? Sam L says, Doc, some ticker was down to $31. The Open P&L Bros got you again. The triple digits are back. And at this rate, Amelia's getting another 100 shares for her college fund. Yeah, or her next burrito. So first of all, I don't know what stock you're talking about. And second of all, it's over and done with. Whatever you are talking about, it's old news, man. It's old news. That's yesteryear. And that really truly is a little 2000 and late. And so, yeah, that's over and done with. Ashfin says someone needs to throw those chips out the window. I agree. I agree. Dan Ducarn, Dr. Jim, help. Bloom, yeah, BE, down on a sell of a naked call. Roll it or take the loss. I'm still bearish on the stock. Let's take a look at it. Dan, you didn't tell me what the stock was, or what the strike was, which would be very helpful for me to kind of help you address this situation. But Bloom Energy, this is a stock that's given a lot of traders a lot of fits as of late. I mean, you can see that. Well, hold on, that's a 2-minute chart. Let me bring up a daily chart. Yeah, so obviously this has been with the gap up and now the big move higher and whatnot. I mean, the thing about, if you have a short call, as long as your position sizing was in check on entry, now I'm going to deviate. I'm going to differ from my own brethren on the network here when it comes to how to handle this position. And that's, to me, that's not a bad thing. That's a good thing. This is giving you guys different perspectives, different ideas, and then you guys blaze your own trail. If your position sizing was in check and controlled on entry, such that you were small enough to where you get into a trade, an undefined risk trade specifically, which is what you're asking about, and you're like, hey, I don't necessarily have a take loss point here. I'm not looking at 2x. I'm not looking at 3x. I'm small enough on entry to where I can kind of deal with this on a case-by-case basis. I can kind of handle this on a day-by-day basis and kind of put it within the context of my overall portfolio risk. And so that means that, of course, there are going to be some trades that go beyond 3x. They may go to 4x. They may go to 5x. They may go to Oracle X. They could go to a big X, right? That's very possible. But I personally believe that the market is so cyclical that if you stay in a lot of trades for as long as you need to, a good number of them are going to come back to you. Now, let me be very clear. Does that mean you're never going to take a loser? No, it most certainly does not. Does that mean that every single trade is going to come back to you? No, it doesn't mean that either. But it does mean that enough of the time, you're going to get a much more favorable off ramp than one when a given stock that sells stale chips is down 17,000% and you got to cry uncle at the worst possible time. That can happen to you too. It's happened to me before. It's possibly even happened to me today. But if you think about, the bigger picture and what you're trying to accomplish, I really like being in a trade for as long as it takes and just kind of treating it on a day-by-day basis. Now, of course, can a 4X turn into a 10X? It can, and you have to understand that. And so, if you're hearing me say that and that doesn't jive with you, then it may not jive with you, and that's okay. That's why the Tasty research is it's got so many different things in terms of 2X and 3X and whatever that you don't have to necessarily agree with what I'm saying or follow what I'm saying. It's just my view of the markets. Take it or leave it. But if you're kind of like, hey, that's kind of interesting, maybe I'll give that a shot. You're still bearish on the stock. I mean, I don't even know what the strike is, but as long as the overall position isn't so big that you're like, man, my whole portfolio is dependent on this one trade, that's obviously never a good spot to be in for any stock or any position. So if you're not in that position, I mean, most likely my default setting would be to stay in the trade. Most likely my default setting would be to continue to battle the stock, and that's just what I would do. And of course, are those famous last words? Yeah, sometimes they are. But every once in a while, it also works out. And so those are my thoughts there, Dan. Hopefully that helps a little bit. Let's see. John coming to Sam L. Doc, even Google couldn't resist fading you from 300 down to 280. I know, it's crazy. The power of Doc's earnings calls is real. Market makers fear it. The algos can't explain it. No, I mean, the algos can't explain it. The algos can't even get your dishes loaded. Have you guys seen that video that's all over the internet? That's hilarious. Oh my gosh, that's so funny. Like, I feel so much better about my job now. I'm like, are the robots really going to take over this year? No. Are they taking over next year? Absolutely. But do I have the next couple of months? I think so. Like, I think we're good. And so, yeah, but that video of the robot trying to load the dishwasher, man, that's pretty brutal. He's really, really struggling. I'm like, man, somebody get a human to come in and help this guy out. Like, he's having a tough go of it. But let's see, the Sana Kone, sheesh, some stock I've never heard of. Yeah, it sounds brutal. If anyone's traded that stock, man, I really feel for you. Like, that's tough stuff. Let's see, R9749 says MP, 29 days to go. Short put at $70. Do I have any suggestions? Let's take a look. MP. Okay, so the stock is up today. Did you say what you've collected? You did not say what you collected. You've got 29 days to go, so I would imagine you're in the November weekly here. You've got earnings on November 6th. Okay, so that's going to be the stick in the mud, Arn. So here's my thoughts. I don't personally like to take an underwater, undefined risk position into earnings. I feel like you're asking a bad situation to become potentially catastrophic, similar to a stock that we had earlier today that will not be named again. So I would probably be looking to be out of this trade by November 6th, one way or another. And then after earnings, if you want to reestablish, then you can reestablish. Now, you may be thinking, I'm really bullish on the stock. I want to stay in for earnings. That's fine if you want to do that. But you just have to understand what you're up against. Based on what you put in the little comment there, I don't know what you sold it for, but you're probably not down that much. It's only in the money by $5. So if you collected a couple bucks on this, $2, $3, let's say, you're only down a few bucks on the trade. This is not a catastrophic situation. It obviously depends on your account size and stuff, but just generally speaking, this is, $3 loss or a $4 loss for most account sizes, even small ones like 10,000 or whatever. That's not really a big loss, not like a major thing. And so this would be maybe one exception to the rule where it's like, all right, if you want to carry this guy through earnings, probably not the end of the world. You're probably going to be okay, and you may get the move that you want. So I wouldn't necessarily I don't necessarily hate this one. It's the situations where it's like, all right, I'm down $13. I'm looking for the Hail Mary pass on this earnings call, and you may get it, of course. But man, if it falls incomplete, like you may be down $29 or $30, right? Again, you're going from 2X and 3X to like Oracle X. And even Chipotle X, we can use it in that context, I think. And so, yeah, that's pretty bad stuff. But hopefully that helps there, Arn, and gives you a couple of things to think about. Let's see, flower power. Meta is such a big part of the Qs, it's forced the whole index to sell off. I mean, Meta and Microsoft, I mean, both, right? Obviously, Meta being down a lot, Microsoft being down a lot is going to weigh on the NASDAQ significantly. And so, oh, you know what's funny? I have to bring it up again here. Let's look at Chipotle. Are they still in business? They're still there. That's amazing. Oh, I thought they were in the NASDAQ. Did they switch? I thought they were in the NASDAQ. I thought they were one of the odd exceptions where you had three characters in the ticker, and it was actually in the NASDAQ because most NASDAQ stocks have 4 or 5 characters. I thought Chipotle was in the NASDAQ. Or I mean, yeah, the NASDAQ, but it's NYSE. That's really interesting. I wonder if they switched recently. Anyway, that's such a crap stock. We're not going to talk about it anymore. But let's see. Emmett Morrison in the house. Let's see. Hey there, Dr. Jim. Looks like you're going to need to pick up a few extra shifts at Publix after some stock that will not be named again got taken out to the woodshed. Yeah, don't worry. I've already got lots of shifts lined up because I knew it was earnings season. So I got on the schedule early because I knew. I was like, listen, like I did this in like the beginning of October because I knew. I was looking at the schedule. I'm like, all right, we've got Chipotle, we've got Meta, we've got Microsoft, we've got whatever else coming on down the chutes. It's like, okay, I mean, I'm seeing a stack of cash there, ashes. I'm seeing a stack of cash over there, ashes. It's like, I have to be aware of what I'm up against. I got to know what I'm signing up for. I got to do exactly what I'm telling you guys to do. It's like, okay, I'm going to need a couple double shifts in the cheese department here coming up real soon. So I got on the schedule. We're going to be okay. I may need to call in here a couple times, but, you got to do what you got to do. And so let's see. Let's see. The Thracian, I think that's how you say that. The Thracian, or it could be Thracian. It's probably the Thracian. The Thracian says, "Hey, Dr. Jim, Chipotle got us again. They got caught using Beyond Meat in the chimichangas. Now, I think they're just using dirt. I think they're just going out back and just picking up piles of dirt. And they're like, man, you put enough guacamole on that, nobody will even know. And you know the funny thing is, they're right. They're 100% right. I didn't know. Did you know? Nobody knew. But then finally, it all came out, and it's like you can't be pushing the dirt out there that long. Like eventually, you got to say, all right, we've done enough. Let's go back to at least some of the Beyond Meat would even be an uptick over the dirt. But you're right there, the Thracian. They 100% got us. Let's see. Wolf's liking it. Anthony Hoyt is in the house with a Meta call at 670. Whew, that's a risky play for sure. Flower Power says inflation is too high at Chipotle. Vanetta not shopping there every day anymore, and beef prices are still too high. Oh, did they personally mention Vanetta in their conference call? That would not surprise me at all. And man, you guys may think Dr. Jim is like somebody. Man, Vanetta Logan is really, really somebody. And I'm saying that in all seriousness. I'm not being sarcastic at all. And so if they mentioned her in their conference call, I would not be surprised. Let's see. Flower Power. Oh, John Covington. Yeah, we should just trade live cattle. That's right. Flower Power says no jobs going at Sprouts. Look at the stock today. Sprouts. Are they a publicly traded company? I always thought they were private. Sprouts. Oh, no, SFM. Wow, look at that. Okay, all right. So that kind of makes the Chipotle move look a little bit better. I mean, Chipotle's pretty bad. Chipotle's down 17%. But look at Sprouts, man. Even the healthy stuff is going down. Like, even the actual meat is going down. Like, it makes sense that the dirt-covered stuff at Chipotle, it went down in flames. But even the good stuff at Sprouts is going down. Man, I feel even better about our Apple and Amazon positions now. I feel really good about this. I'm about 9 or 10% sure that we're going to hit one out of these two. And so we got a good night in store for us. But guys, I got to go. I'm out of time. Man, I appreciate you guys so much. Appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com. Or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Coming up on Bad Money with Jim Blamer, Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
going on, everybody? I got to tell you that it doesn't seem like the best time to be cutting rates here, but we did it yesterday. We'll talk about why it's not so great. Right now, ECB left things unchanged. You see what I mean? People are doing things a little bit differently when it comes to these central banks. It's been a central bank bonanza this week, along with earnings, but ECB left rates the way that they are. We'll talk about that in a little bit. And finally, we got two more big earnings tonight. That's right. You know them. You love them. Amazon, Apple. You trading them? I'm not sure yet. I'm trading one of them. Maybe you can talk me to the other. So we'll talk about those three things and more. I continue to talk about how incredible this market is, dude. Like, it's just wild. There's so many different things to trade. I have on arguably too many trades, but we'll go through those and look at them. And I want to hear from you guys, too, about the trades that you got on. Welcome to the most dangerous show on the Tasty Live Network, folks. It's Engineering the Trade. I'm your host, Jamal Chandler. I'm worried about my dad because I'm worried about the Dodgers. It's his favorite team, and I don't imagine it doesn't look good. I mean, it doesn't look good. Remember at the beginning of the series, when it seemed like the Dodgers were the odds-on favorite. I mean, they were the odds-on favorite. Excuse me, but they seemed like they were an overwhelming favorite. And I gotta say, after that, yo, you gotta give Toronto props, man. I mean, after losing a, 18-inning game, Dodgers go up 2-1 the series, and they got two more games at home. You figure this thing's over. And Springer basically was out. Looked like he kind of injured his oblique in Game 3. Like, it just didn't seem like it was in the cards for them. And things have changed. Things have really changed. Then they come out last night, like literally the first pitch is a home run. Bro, first pitch, gone. Next pitch, ball. Second pitch, the third pitch, gone. Vladdy, gone. Like, whoa. Those dudes, they got some resolve, some cojones. You know what I mean? Like, that's something else, man. I got to tell you. And now they're going back to Toronto, huh? Who's going to show up? I want to know who is going to show up. All they've been doing is showing the different people in the crowd, you know? Matter of fact, last night my wife had me laughing. She was like, they show all these people, and they show Brad Pitt, and they show Flea, and they show, you know, all these people, and then, like, they show Leo, and, you know, Leo's DiCaprio. I mean, does he just go by one name now? I don't even know. Like, is that, I guess... glasses and like black, and she's like, oh God, why do you always have to do that? You know, like, why do you always have to? And I was like, what? Why does he have to always act like people are looking for him? And why does he have to like try like he's hiding, you know? And it's like, is he doing that really? I mean, he does kind of have to do that. I mean, I'm sure when people see him, people probably go a little nuts. I wouldn't do that. I'm not like that. I'd be like, oh, hey, Leo DiCaprio, what's up, man? Like, that's just that's me. But who's going to show up in Toronto, I wonder? Who is it? Is it Drake? Is that what it is? Is it going to be Drake? Who else? Who's famous from Toronto? That's like a legit question. Who else is famous from Toronto? I don't know. Michael J. Fox, is he from Toronto? No, he's from is he? I can't remember anymore. No, he's from Vancouver, right? Who's the Toronto famous people? Somebody tell me. I want to know. Who are they? Drake seems to be like the one carrying the flag for all of them. But who are the famous Toronto people? The Toronto guy from the Raptors game, the dude with the turban and it's not the turban, I'm sorry, but I don't know. You know what I'm talking about. The guy who owns the Toronto, yeah, them. I don't know. Let's pull up some slides. Let's talk about the day. My wife also asked me the same question. And this is because we were watching the show the other day, but she was like, do you think, we were watching Growing Pains. She's like, do you think that Leo talks to Kirk Cameron and Tracy Gold? I don't know. Keanu Reeves is from Toronto? I guess he is, huh? He has that O. You ever notice like people from Toronto, they got like that Midwestern, like upper Midwestern O? Like they say that O. You know, they got that. Who the hell is Serenity Cox? Seriously. Ryan Gosling's from Toronto? Really? I guess he is. I didn't know that. See, I didn't know that. The Weeknd? Oh, that's a good one. Is he going to show up? That dude doesn't watch no baseball. Does he? I doubt it. I want to know. I want to see him. If you don't show up in the stands, if you're, who you guys are saying, Jim Carrey, Ryan Gosling, Keanu Reeves, if you guys don't show up in the stands, you're not real Torontoians. Whatever the hell you call it. Inflation is at a 16-month high. Fed is cutting into inflation. Do you remember when we were sold a bill of goods 3 years ago that we're raising rates because we're in an inflated environment, and inflation obviously was like 9%, and it kept coming down. And even when it got to 3%, I don't know, a year and change ago, it was like, oh, it's still too high. It's above the Fed's target. Well, now we're cutting, and it's above the Fed's target. I can't believe how much I actually watch these Fed meeting interviews after now. It's a trip to me, but I actually watch them. And yesterday, the one thing I didn't agree with is when they asked them, it was a really good question. Do you think that cutting into this environment is fueling some of these AI names? So there's all these AI investments. Do you think it's fueling them and pushing them a little too far, too fast? He said no, but come on, man. They got there's a lot of cash being thrown around, and the more that you cut rates, you're making cash. You're making cash a little bit more usable. And so it seems kind of weird to me. Meanwhile, ECB, they kept rates the same. Apparently the inflation has come down for them. The economy is doing well. I thought they messed it up because you remember they cut pretty fast. They kept cutting. They're at 2%. Mind you, we're at 4, right? We're at 4. They're at 2. I don't remember where the others are. I think Bank of Canada is at 4. All of them talk. And it's just kind of interesting that ECB was able to go down to 2 and then still keep things normal. Meanwhile, again, you can argue we've had something seismic happen as far as the tariffs. That obviously is inflationary to some degree. So this is, I think, something to keep an eye on for a while. Remember earlier in the year where currencies were really, there was a lot of volatility in currencies because of all these impending rate cuts and things that are about to happen. I think something could happen again when you start getting they're not that coordinated, it would seem. If ECB is at 2%, we're at 4%. Bank of Canada is at 4%. BOE, I can't remember where they are. But I think this is something to keep an eye on. All these currencies and our own currency, the dollar, if you will. I think it's all something to keep an eye on. Did you notice the dollar had a big move yesterday to the upside? That's not really supposed to happen when you cut rates, actually. That's not. It's supposed to be when you raise rates, the dollar's supposed to move up. Big move to the upside in the dollar yesterday and again today. And big is relative, but now it's heading back up again. I'm annoyed because I took my long dollar exposure off, but something to keep an eye on, I think. Finally, we got the last 2 earnings tonight. And I got to tell you, I just want to make sure I'm getting this right on my thesis. When you talk about the Magnificent 7 stocks, we got Apple, we got Amazon. Microsoft down on earnings. Amazon still yet to come. Amazon obviously coming tonight, Apple and Amazon. But Microsoft was down on earnings. Google's alone up. Meta's down. Tesla was down. Wait, that's 3. Yeah, Netflix is not one of them, the Mag 7, but it might as well be. And it had earnings, and they were down on earnings. So far, most of these have been down on earnings. You got to wonder what's going to happen with Amazon and Apple. Is that going to prevent me from doing calendar calls? No. I did it in Amazon. I should have done it in Oracle. I actually thought Google was going to be, if you had asked me yesterday, and I didn't do, the only one I really had the calendar call play in was Meta. But if you had asked me yesterday, out of the 3, which one I thought had the possibility to go up, it wouldn't have been Google. I wouldn't have thought that. And sure enough, that was the one that went up. So that's proof to tell you that when you disperse, right? If I had done calendar calls in all 3, maybe at least 1 out of the 3 works. That's just kind of tells you that earnings is really such a crapshoot. You really have no idea what's going to happen. So I think now in some of these instances, if I can, I'm starting to go out to Dees Nove for some of these calendar call spreads. I think it's a little bit better. I think right now there's really no shot for them to win on earnings. You know what I mean? Sorry, I should say that differently. Not the trade. I'm not talking so much about the trade. I think there's no shot for these big companies to appease anybody on earnings, even if they do well. it doesn't work out well. Of course, if they do bad, like Meta, apparently, I guess, did not say good things. Well, basically, they said they're spending a lot of money on AI. I mean, newsflash, So I think it's better to go a little bit further out if you can, if it's cheap. As a matter of fact, I think I'm going to go out today with Meta being down. I've seen this movie before. Meta was down, I feel like, a couple of years ago in one of the earnings, and it eventually came back to some degree. And I think I'm going to go out to D-Snove and just go ahead and put on a calendar because this is an outsized move, really huge. And I think we're getting to die. No, I'm just kidding. I think we're getting to that point where you just need to go further out on some of these earnings. Not even earnings, just go further out because right now I think it's kind of hard for them to beat expectations by a mile. That's basically what you have to do to win on some of these calendar calls. Leftovers. You'll never guess what tech company generates the highest revenue per employee. Well, it seems like somebody already did. Let's move in the chat. Let's move to the next slide. That's right. You know it. That's right. Why do you think so many people are doing these things, huh? Why do you think so many people are doing them? OnlyFans, $37 million per employee. I mean, they keep costs low. It's lean costs. A lot of these other companies, I mean, they're paying a lot of money right now. It's just kind of what it is. NVIDIA, $3.6 million. Cursor, I've never heard of Cursor. What's Cursor? Cursor. Was Cursor a thing before there was a mouse? Is that a word that was a thing before a mouse? I really don't know. Cursor AI, an AI-powered code edit develop. Man. How long before people get sick of those two letters, AI? I mean, it's coming sooner or later, right? I think so. I think it happens. I think at some point the market sells off a little bit more as a result of AI. Not because it's not producing or yielding results. It just, the market gets tired of things at times, right? And I think that's what happens. And again, you can see that's why Meta's selling off right now. The idea that they're paying so much on AI, I think is sort of, is kind of poo-pooed. It's clearly being poo-pooed. The market is telling you what they feel about their stock right now. But I'm going to play for the bounce back. Like I said, I'm going to do it. Apple, $2.4 million per employee, but they have a lot. I mean, a lot of these companies, of course, have a lot of employees too. That's kind of the thing. I don't know how many employees OnlyFans have. How many employees? I need to, you know what? I'm going to start comparing results between Google and ChatGPT. Mikey and I were talking about this the other day, and it's amazing how many different people are using ChatGPT as their main search engine. Does OnlyFans have? OnlyFans, well, see, that's the thing. Small workforce. That's the other thing. 42. This is kind of misleading to some degree, this chart. Of course, obviously, when you see any chart like this, there's something weird. I mean, one that's really outpacing the others. But they really only have 42, I think, full-time employees. I think everybody else is considered a contractor, I would imagine. But the rest of these have a lot of employees. Apple obviously has a lot of employees. Meta has a lot of employees. Alphabet, a lot of employees. OpenAI, probably a lot of employees. Microsoft, Tesla, Amazon. You know what's going to happen immediately as soon as OpenAI comes to the market, if it does, when it does, who knows. It's probably going to be considered one of the mags. And we're going to have to chart. We're not going to be able to keep a number on these mags after a while. It's not going to be 7. There's going to be plenty more if we keep going at this rate. Let's move to the next slide. So speaking of all these companies, we've had Google, big move on earnings. And it is now, it's a fight between Google and NVIDIA on who has the best return on the year, upwards of 40%. But Google has already gone. NVIDIA, of course, earnings are November 19th, a while from now. I shouldn't say a while from now, folks. Tomorrow's the end of the month. How about it? It's basically November. Man, 2 more months left in the year. Next thing you know, it'll be Thanksgiving. I feel like this is one of the first times. I feel like this is the first time in a long time, no joke, that I'm not seeing a whole. You can correct me if I'm wrong. I haven't seen a lot of Christmas commercials yet. I actually feel like people are monetizing Halloween this year. I've been a couple of places. I feel like people are really trying to monetize Halloween this year in particular. I'm not sure what changed, what it is, but you go to any store, I mean, more than before. Usually Halloween is just skipped straight over and they're already kind of loosely talking about Thanksgiving, already talking about Christmas. I feel like Halloween has been monetized greatly this year, respectfully. Microsoft, Soy Sauce Sports, that guy cracks me up, man. Respectfully. Microsoft already obviously had earnings. Tesla had earnings a week ago. Meta earnings. So we got 3 more, and 2, of course, tonight. And it just so happens that those 2 are the ones that they're the lowest return compared to the rest. How about that? Yeah, I bet you didn't know that, did you? Makes for a case for a calendar call. Let's move to the next slide. I put on the I literally just got out of Nat Gas yesterday. It was, holy cow, speaking of, I'm losing on that position already. I literally just got out of Nat Gas yesterday. This has been it was a really good trade for me. So much so that I decided to put it on again. And now I am in the, I need to change my delta maybe in here though. I might need to go further up. I'm not sure. How much does it cost if I pay that? I might need to go further up in this trade, but I'll talk about that in a second. I sold another strangle. I know, it's crazy. I mean, I can't believe it. 2 strangles in a short amount of time, but it was an elevated IVR this morning. It was above 60. I sold the 330 510 strangle. I don't advise it now. Okay. I mean, I'm not again, don't follow me in every single trade. This is a scary trade. Nat gas can be a little bit nerve wracking at times, but it seems like a high IVR. And I just wanted to see what the curve was looking like. Again, when you look at the spread between, it was traditionally the spread between, when you look at the spread between any of these months, when you look at the spread between any of these months, you just want to make sure like it's nothing crazy that you're seeing between any of them. Looking at the Widowmaker traditionally, which is March and April, let's see, these Jan, Feb, March, April. There's really not that much of a spread. There's a big spread between Feb and March. I wonder if the whole Widowmaker spread is just moving more nowadays or changing months. Not really sure, but kind of strange. But right now in front months contango, I have the Dees expiration. I kind of like that. That means it's not crazy. Anytime you see backwardation, that means a lot more volatility. We don't see that as much in the Dees expiration. I'm sorry, I'm not in the Dees. I am in the Dees 26 options, but that's actually January. And January is, that is actual backwardation between January and February. I'm just hoping that at some point that does kind of calm down and goes a little bit lower than 420. And hopefully the Jan ends up being lower than the Feb. We'll see, but the vol is kind of elevated. So I sold another strangle. Let's move to the next slide. This is one of the things that you typically see when markets are near highs. XLP below XLY, this ratio being kind of elevated. You can see it. The last time it was down was the April sell-off, essentially, right? The only thing is that, and I'll talk about this when we get to the last slide. The only thing is that there's not really good breadth in the market right now. Very weak breadth, as you probably have heard. It hasn't been real. A lot of this week in general hasn't really been a lot of volume. There was probably a little bit more yesterday because of the Fed day, but for the most part, there's been kind of low volume and weak breadth, which kind of lets you know that it's a setup for markets to sort of maybe pull back. It's hard to say in this type of market, but you wonder if we're going to have this ratio fall. Usually when this ratio is near highs, markets are on all-time highs, and you have a lot more names that are near their 52-week highs. Right now, not many. In fact, let's move to the last slide here. Just direct your attention to the bottom of the screen. This is something I always talk about, right? The number of S&P 500 stocks above the 50-day moving average is 221. The amount of stocks in the S&P 500 that are near all-time highs, let's look at that are actual at 52-week highs, is not as high as you would think. Technical. Where's my 52-week high? There we go. New highs. There's really not many names that are above the 52-week high. It's not many at all. I'm only seeing 43. That hit a new high today, I guess. More below high. Yeah, it's the market breadth is kind of weak, and it lets me know that maybe, a little bit of a sell-off could be around the corner. For those of you who like sell-offs, it could eventually happen because it seems kind of weak. Earnings, we got Amazon, Apple, Coin, Reddit, MicroStrategies, WDC, Rocket, Roku, Exxon, Chevron, and Abbott, and not Abbott. Is that Abbott? No, it's not. It's whatever it's called. It's AbbVie. It used to be Abbott. Whatever. Colgate, and that's just to name a few. There are a ton of earnings tonight. End of the month, of course, is tomorrow. I don't know if we see some end of the month flows. I don't know if we're starting to see a little bit already. I'm not sure. Markets are finally pulling back. Core PCE was supposed to come out tomorrow, but I don't think we're going to get it. And then non-farm payroll is supposed to be next week is jobs week. Believe it or not, it feels like we just had jobs week, but yeah, jobs week is next week. And yet, I don't know if we're going to get it. Number of S&P 500 stocks above 50-day moving average, like I said, is only 44%. Let's move to the platform. What are you guys thinking? What are you seeing? Mike Myers and Bieber, huh? Maybe it will. Meta, I kind of mentioned this. Just to make sure I talk about the earnings real quick. I already have this trade on. I've had it on for a bit. Am I losing on this? Amazon. I am losing on this. Yeah, stocks are already pulling back on earnings. Kind of interesting. Before earnings. Kind of interesting. This is a cheap one. 227. It's a fairly cheap one. You could almost make this a diagonal if you wanted to. You could go further up. But I just chose to do the regular calendar call, and I did the D-Snove, like I said. Apple also has earnings, of course. I'm not sure where Apple is going, but, I was looking at, I was kind of looking at further up in Apple. I was looking at 300 in D's. If I could sell something against it, that right there, it's not bad. I think I would do that. It's just more of a play on whether or not Apple eventually makes that level just another month from now. I think earnings is not going to be the thing that gets it there. If it does, awesome. But I think not. Apple and Amazon. Oh, First Solar earnings, huh? Yeah, First Solar does have earnings. I don't know, man. I wonder about this. I'm actually surprised the stock is where it is. I feel like solar has gotten a bad rap recently in this administration. They haven't talked about it much. They don't seem to care about it. I don't know. And stock is near highs already, 250. What's this thing supposed to do? What's the expected move? $16, $17 gets you to 250 something. Yeah, I wouldn't blame. I don't like the markets though. These are a little bit wide here, and I'm just still a little shell shocked from this morning on how much it took me to get out of a Caterpillar trade. So I'm a little bit wondered about that. Hey Jamal, if you were in an Iron Condor or Nove in Meta, okay, what you got? Nove, and obviously this is roll week. A lot of this calendar. You're short the 675 puts, and you're in the money, huh? 725 calls, I assume, and you're $10 wide, huh? Yeah, this sucks. This is annoying. And you got Nove. You don't love this. Because it's so near strike, I don't necessarily know if I would quite blink. This is one of those situations where basically, you might have to hold this through expiration a little bit and see if you get the bounce back. Personally, that's what I would do. I would wait to see if the stock recovers. I don't necessarily, if you roll, you're gonna, what are you gonna, you could roll it out and maybe collect more. Let's see, do you collect more on this? 675, 690, probably not. You said 725, 735. Yeah, I guess you could collect more. Why not? You could roll out. Yeah, you're going to collect at least a little bit more, about 688. I think you would collect at least about maybe 80 cents more, 70-something cents more. You could roll out too. I think rolling out is probably a good idea, especially since you're going to collect a little bit more credit. That's probably what the good move. Yeah, I would do. But yeah, a lot of earnings here, folks. I might put in you might see me put in a couple of trades here as we get to the end of the day. I don't know if coin is going to be one of them. It's been hard to watch these, but I'm going to probably put in a couple. We only got like a couple seconds here left in the show. Probably put in a couple and see how they play out. Not too many though. It just seems as though, these earnings haven't really done all the things that we would like them to do. Not much. Bearish calendar, huh? Bearish calendar and Tesla. I don't blame you. I'm going to try to do the bullish calendar, but you do what feels good for you. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, trade them often. See ya.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker.
Hey there. Okay, we got a red day for a change, and it makes total sense. I actually did a post on slopeofhope.com, which you should check out if you haven't already, about a week ago, basically creating a situation or describing a situation in which the promises and excitement of this trade deal would peak on the signing, and then watch out. And to be clear, the trade deal per se hasn't signed yet. They're saying it'll be in a week, but the framework's there. They've had their handshakes. They've had their photo ops. The news is out. And the highest point in history for the NQ was just hours ago. It was last night during the thrill of that thing. So as it is now, everything's red. The NQ's down hundreds of points. The dog's chewing my door frame off, and most of my shorts are down, some quite a lot. So that's good, and things are going to get boring soon because Apple and Amazon announce after today's close, and then literally NVIDIA in a month, and that's it for 2025. We're done with the industry. I couldn't care less what Exxon's doing tomorrow morning. So all the really cool stuff is, except for NVIDIA, is done for 2025. What a shame. But let's jump into the charts because we don't have much time left and talk about them. Here's the spider, and we're doing the same old. We're below the wedge. We're falling. Lifetime high was yesterday. It's okay. You know the drill. And this level right here is the one to break next. That would help the one or two bears left. Probably just one bear you're looking at him. The diamond, that is the Dow 30 ETF, has also remained below the wedge. And its own equivalent break point, which would be quite minor, would be around about there. And we'll kind of see what Apple and Amazon do. That should be instructive. It was interesting last night because even though Microsoft fell and Meta really fell, the NQ kind of shrugged it off and just blasted to lifetime highs. We'll see. The evidence from these earnings is important to the market weighing whether to hold or not. The small caps, IWM, oh gee, a moving trend line. I fix all these every time, every single day, and they just IWM is very, very, very close to failure on that trend line. It's not there yet. It won't take much. It's not impossible that it would happen before this day is over. We'll see. But we are getting very close to a possible trend line failure. As far as EEM goes, which I entered yesterday as my largest position, so far so good. We're down some on that. We've got a cool little reversal there. Plenty of room between here and the trend line. But yeah, this is something I talked about yesterday with respect to the fact that it was just about matching its lifetime high from back in 2021. And that's worked out nicely. In fact, this morning, everything was looking really good. I had like 24 short positions with one exception, which was Estee Lauder EL. And just for the open, it fell too. So that worked out well. It's been a really solid day. Now, as far as the stocks yesterday, there were three big ones: Meta, Google, and Microsoft. And what I said, if you were watching, was that Google, which is its real name, everybody calls it Alphabet, the corporate name, but Google was the only one I felt was good and would go up. That's exactly what happened. So let's review them. Meta is down really hard. And I have mentioned from time to time, and you slopers out there have heard about The Tale, which is this incredible story that years from now I'll relate. I can't now, I refuse to. But the content from that tale has told me that Meta is going to just wipe out its AI efforts and is vastly overspending on humans, at least, for this effort, because I've seen it myself. I'll give you $300 million, come into the office a few hours a day, and just hang. I've been there. I know what goes on. I've seen the contracts. I know it backwards and forwards. So it ain't that is not a business. It's not a business to give someone hundreds of millions of dollars to just chillax. But that is what they're doing. That's why, partly, it's getting wiped out by hundreds of billions of dollars today. Just watch. You'll see. The tale tells the truth. So Meta is getting blasted. And who knows? We may have seen their lifetime high for years and years to come. Microsoft is also down rather sharply. And I was negative on these two yesterday. The only one I said good things about was Google. And how about that? It's actually up. Now, it's off. It opened really strong and it's been selling off all day, but it's still up. Let's be fair. So there's that. Bonds stink. They're going down because Powell did not pledge to his firstborn great-grandchild that he would cut rates again in December. So the market's not liking that. So interest rates are on the rise and bonds are on the sink. Over in semiconductor land, NVIDIA is down for a change. And I don't know if it's still a $5 trillion company or I was screaming about that yesterday, but the Earth's equity markets depend on what NVIDIA does, rather astonishingly. 10 years ago, this was a company nobody cared about. And today it's the only thing that matters. So, it's really all up to the AI bubble and NVIDIA. Other semiconductor companies peaked yesterday also and are off just a skosh here and there. No real signs of breaking down. There's Micron, for example, in Mu. There's AMD, which I shorted yesterday, and it's got a, this is teeny little top right there, barely, but these are extremely loftily valued. In fact, I'm not showing Tesla today. I was glancing at Tesla. Their PE is still 306. 306. The chart still looks really good. I'm not touching it. I'm not sure. I mean, I love to short everything, but I'm not shorting that beast. But wow, the fundamentals are just still bonkers. But broadly speaking, SMH, now look, a moving trend line. We'll move that down where God intended. Yeah. There's the trend line there, and this one I got to move to be properly placed. There's the wedge. We got above it yesterday, and we're below it again today. So remember yesterday I talked about kind of a throw over? Maybe it was a throw over because it's failed already. We're back inside the wedge, and I'm short at SMH too. I entered this week very, very, very light. I have 5 portfolios, 3 were all cash, and 2 were like 50% committed. I've ramped that up from 13 positions to 27. So yeah, more aggressively positioned now. And rolling into the cubes, I'm not going to say it. Rolling into the cubes, we have the phenomena in which we were skirting along the trend line, failed hard, and been below it ever since. We got just within kissing distance of it yesterday, and now we're falling. So this is down about 1.33%, which is pretty right on. And the big winner for me today, percentage-wise, because as I said, I've got 27 shorts. They're all profitable, and almost all of them are down today. But the real winner, percentage-wise, was Carvana, CVNA, which has been a beast. Carvana was one of these stocks that roared higher, completely collapsed, and roared higher again. And now it seems to be doing a bit of a U-turn. I tend to be terrified of stocks that are acting like that, but I saw a documentary the other day which was so jaw-dropping that it's like, makes Theranos look like, JCPenney, but it was just like, wow. So on that alone, I didn't even realize earnings were coming out. I usually don't care, but based on the documentary and a pretty frisky chart, I shorted this one 2 days ago and was pleased this morning to see this thing getting pilloried. I'm going to hang on to it. It's not a big position, but who knows? Maybe we'll just do one of these again. What else? Gold is, I'm starting to get worried. I've held off on getting back into palladium. Maybe I blew it. Maybe I should have bought 2 days ago because it was at its lowest 2 days ago, and it is strengthening, and every tick higher kind of is agonizing. But gold is shoring up. We've got a bullish engulfing pattern on that. Silver is also strengthening. I've swatted my hand away again and again from diving back into palladium. Again, maybe I'm stone cold wrong. Maybe the precious metals bull market is so strong that this is the only dip you're going to get. I don't know, but I'm not getting back into it. May live to regret that, but the miners, GDX, are also up. Next major resistance for them is that price gap up there. And also XME, by the way, speaking of metals, XME is below its own broken trend line, but I don't know, it's not appealing enough for me to be involved with, so kind of avoiding metals altogether right now. As far as crude oil goes, CL, we're down a little bitty bit on this, and long term, I'm still thinking and hoping that we break down below this green level here, this major support zone. It has been inching its way slowly toward that. And I've got to say that right triangle patterns have been working quite nicely where I've seen them. There's a stock, DFDV, which just had a great right triangle failure, and a crypto was Ripple, XRP, which also did a very good right triangle fail. So this is another one, crude oil. And XOP is just kind of hanging out up a little bit. I covered this at a profit. It's not a great chart, plus the 2 giant oil companies report tomorrow morning. So no thanks, I'll just step aside from that. So in closing, the 2 big boys are Apple, like so, and Amazon. So I'll just throw my hat into the ring on these. So yesterday I said of the 3, only Google I felt good about. That was a 3 out of 3. This time, I'm going to throw another guess out there. I don't have positions in either of these. My guess is that Apple will do well and Amazon will sink. So up Apple, down Amazon. We'll see. Finally, in closing, RTY, the small cap futures. In this instance, we have broken a while ago the trend line, but if you have a more conservative trend line, like so, we're not quite broken yet. So if we zoom in here, we've broken this one, but we're on the cusp of possibly breaking that one. So that'll be pretty important if it happens. So anyway, good day, and we'll wrap things up tomorrow. And let's watch those 2 mega caps after the close. I'll see you Friday. Bye-bye.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market. Dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000, and then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of tastytrade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Tasty Trade's Money Match event, unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade
Mikey, we are back, my friend, and what a wild day we've got. I'm having a little kerfuffle with my platform here. If you want to go through the market real quick for me as I reload this. But the E-minis
are red.
This is a shocking day here.
Yeah, I mean, Meta did not have a very Meta performance here. Down 84 near the lows of the session, down 11% after earnings. You had Google up, is the only one that was up today relative to Microsoft, down 17. Wow, that's continuing its sell-off here. But yeah, E-minis down 56, NASDAQ down 330, Bitcoin down 37.95. Pretty much everything is red. Gold catching a micro bid here, up 30. Natty Gas up 4%. That's a big mover. But there's a lot of things that are within 1%, maybe just outside of it in the futures markets, and then you have E-minis down almost 1%, NASDAQ down over 1%, Bitcoin down 3.5%, Ethereum down 5%. So it feels a little murky here with Amazon and Apple earnings reporting after the close.
I know, a little scary. You got a slight bit in volatility. It's been pretty flat throughout the session. You're at 1905 right now. It's basically the high of the day, the high of the session here on the volatility futures. 1926. So we're just off the highs, but vol has not come in significantly throughout the session. Not a shock given the earnings that you have. You mentioned Apple, Amazon. There's also Coinbase. You have Reddit in there. You have Western Digital, which is WDC, Cloudflare, which is Net. You have Roku in there, Twilio for solar. So there's a lot of names. Tomorrow you got a lot of the oil names, XOM, CVX in there. So still continuing with this kind of heavy earnings seasons section right here. This week, I think, was 45% of the market cap of the S&P 500 is reporting. So
yeah,
gonna have some big moves.
Yeah, and just the NASDAQ alone, when you consider Meta, Microsoft, Google, Amazon, and Apple, that's like half the top 10 holdings, which is a big chunk of the actual sector itself. So yeah, craziness in the markets. I was talking earlier about my trade of the day in Amazon, which is just a 250 calendar spread. Long the 250 in December, short the 250 in the 1 day. And
like a $5 down move.
Yeah. I put that on when it was already down 3 or 4. So it is cheaper now. You can get a 50-cent discount on that same trade. But my thinking is I don't think we're going to see a blowout earnings to the upside here, given the weakness in the market. And at the same time, if you get a rally of 10, 15 points, that short option goes to zero tomorrow, the long option gains some value and it'll be a nice trade. But if not, I can just roll that 1 day into November, hedge a little bit, or just hold the whole package and see if we get a reversal over the next couple of weeks. But yeah, don't love the market weakness going into the close here for an Amazon or Apple earnings. If you're trying to play for a big upside move, I think the general market weakness makes that a little bit harder.
Yeah, I think that plays a lot on the downside. The upside, not so much, because
yeah,
the upside is usually low volume. But when you're having like these big downside moves, I feel like it does mute good earnings moves, like upside moves at least. That's what it feels like to me. I too am playing Amazon to the upside. I sold the 210 puts. I also have a crab trade, which is sort of a neutral / bullish position. Very minimal risk to the downside on that position, but with the short put, that does add a little bit of downside risk. I did sort of the same thing in Apple. In Apple, I bought the November 275 call. I sold 2 of the 282.5 calls in the weekly. So that's the 7-day. I did that package at $3.65. It's actually marked right now at a 387 cent debit to trade that, a credit to close it. So it's about a 25-cent winner at this point. But playing for like kind of inside up moves. I think inside up is kind of the perfect scenario for both those trades for me. I also sold a put in Coinbase. So I sold the December 250 put. Don't look at it yet. What do you think it trades for? December. 50 days, stock is trading at 330. I don't want to tell you what delta because I'll probably give it away. But the 250 put, 50 days, the stock is at 332. It's $80 out of the money. What would you price that
at? Between $2 and $3, let's say.
I would probably be in that same boat. It's at 5. So you definitely have some volatility in there. 71% implied volatility. It's about a 1 standard deviation down there. So it's about an 11 delta option. You have a ton of call skew here.
Yeah.
But took that on as a, if we get down there, I'm okay with leaning a little bit long at 250, $80.
Yeah, that's actually kind of surprising. $5 for this option. But
it's a lot.
I mean, to your point, if you look at the 400s, about 80 points out of the money, 70 points out of the money. You have a little bit of call skew there.
Oh, there's $12. It's a $12 option.
Yeah.
I mean, you go to the 420. Yeah, the 420s are about $90 out of the money, or $80 out of the money.
Yeah, it's crazy.
At $10, so it's almost double.
Yeah, huge implied volatility there, and this is kind of what we've been seeing with a lot of these earnings, where normally we'll see Coinbase at a 20-point move for the 1 day, and you'll see like a 30-point move for December. That's not what we're seeing in these earnings announcements. You're seeing 20 points in the 1 day and 60 points in December. Like you're not seeing that front-loaded IV nearly as much, which I think speaks to the uncertainty of what we can expect for the end of the year. But yeah, Amazon continuing its selling here, down almost 7 points.
It hurts.
Yeah.
I also did a put ratio spread in Reddit. So I bought the 180, sold the 170s twice. So I did 1x2, just normal ratio in the October 31st expiration. We hit one in Roblox today. A lot of big moves. I know you mentioned Meta. There were some other earnings that came out or earnings reports that had some big moves as well. So Roblox was one. It had earnings this morning down 21 and change. That's a huge move. You also had Carvana. That was another one that had earnings that reported earnings after the close yesterday. The stock down 50-ish here, kind of near the lower end of where it was trading. On the flip side, ServiceNow was one of the bigger moves to the upside. They announced a split. Didn't really have that much of a bid here. Only up 18. It was up about 40 or 50 earlier this morning. So kind of goes to the point of like when the market's weak, everything's weak.
Yeah.
When the market's up, it's a little more 50-50.
Yeah.
Like where it's not, the correlations are certainly not 1 to the upside. as much as they are to the downside here, like we're seeing today.
Yeah, and if we do get some selling, that doesn't necessarily mean, so selling after the close, let's say Amazon and Apple have down days, that doesn't even necessarily mean that they have misses on earnings. Like Microsoft had a great earnings per share report, great revenue, stock dropped. So it's like we're just in that time where things may not make sense to the naked eye.
Earnings are, for the most part, 50-50.
Yeah.
I mean, I know even the Meta numbers were adjusted for like whatever that one-time tax hit was that they had. But the numbers were, for all intents and purposes, good. You put them on a piece of paper, they look good. How the market reacts is another story.
Yeah. I didn't play earnings in Meta yesterday because it was so expensive, which is, in hindsight, great because I probably would have played it to the upside. But I think these are the kind of moves that spark my interest for trades going forward. Like the Jan-December 750 calendar spread, something like that, like getting back to where it dropped from over the course of 80 days. You can sell the December against the Jan. If you just did a straight up calendar spread, it's $600. But if you get any kind of reversal, if you get a 40-point reversal over the next couple of weeks, this trade is a $400 winner. So that's why trading small is so important, so that you have the ability to layer in more if you want to, especially into these big moves like we're seeing in Meta.
Another huge mover to the downside, which caught me, Chipotle. The stock is a pig. I sold the 39 strike puts. I got a couple of questions asking what I'm doing with this. When we put this position on, I think this was from What's Your Assumption, I said, we're going to sell the put. If we get down to new lows, the 52-week low is 38.30. I was like, I'm going to buy some. Now I'm in there. So I'm in much higher, an unfortunate situation. But had some upside if the stock were to not go down multiple standard deviations.
Yeah. I did a similar thing in Chipotle. I did a 40 call in January, and I sold the 45 against it in the one day. That was a $300 trade, so it's a small trade regardless. But yeah, I mean, the 7-point sell-off is insane.
It's not what
Chipotle dead.
It's always been dead to me.
To your taste buds.
A local Mexican restaurant. That's what I like.
That's fair.
Some of the things that did work today, long dollar positions. So I don't know. I think you had some on. Did you not?
I had the
Swiss franc.
What did I have on? I had the the dollar franc.
Yeah,
so
that was a big one.
I put that on yesterday, and I closed it for $35 winner on a 5 microlot position. So that's a big move. I have the only trade I have on in TastyFX land right now is a non-USD pair, long the euro pound. Or sorry, short the euro pound.
I was going to say, if you're long that thing, because I'm short that, and I was going to say, I don't know who put you in that, but I am in it as well. This is the euro British pound pair. I mean, this thing, and historically it's not that volatile because those two economies are very closely tied. So, this is quite the move.
Yeah. I'm short at 88.120.
Oh,
so it's almost the top.
Yeah, you top ticked that.
Yeah, it's up like $9 right now, but this is a nice trade where it's a price extreme and you're on the right side of the yield. So being short this at a positive 0.51 swap bid means you're collecting a couple of shekels each day, which is nice.
Yeah, you like that.
But yeah, whenever it pairs with like the directional move I want to be in anyways, that's when it's really nice. But yeah, kind of light in the TastyFX land, but it is always nice to have a weekly discussion on options trading concepts live with Glenn.
Yes.
He always brings the heat and lets us know what's moving, what's interesting.
Did you know he's our fire marshal?
Really? Like for this floor?
Oh, yeah.
That's pretty amazing.
He has a vest and all.
How did he get that position?
He claims it was an election, but I think it was a
Voluntary.
voluntary. You know, he was the only one kind of thing. Like, you know.
Got it. So he won, but he was the only one that submitted it.
Yeah.
Yeah. That kind of thing.
Yes. So.
Hey, I mean,
if there's a fire, just make sure to listen to Glenn.
Yeah. I mean, he's young and agile. He can get people moving in the right
That's true.
direction. That's the kind of
very
person we
true.
want.
That's very true.
What else have you done? Oh yeah, actually, so yesterday, placed some diagonal spreads, call calendar spreads, and some earnings trades. So Google worked out. Google, I had the 290 call calendar. I was long the 8-day, short the 1-day. That one was interesting because it was only a $200 debit, or sorry, it was a $100 debit, but those options themselves were trading for a couple, like $1,000 each. So that was a nice $100 winner. And then I did the same thing in Microsoft, the 550 calendar, long the 8-day, short the 1-day. Microsoft is selling off, so nothing to do there. But if we get a 10-point reversal from this move, that can be a winner, because that long option will be very sensitive now going forward. And then Nike, I had a downside put diagonal. I was long the 70.
Did they have earnings? No.
No, it was just a fade Nike move.
Okay.
Long the 70 December, short the 65 in November. I closed that for a $100 winner as well. But taking some heat on some other bullish positions. We'll see where we end up. But
you played Nike to the downside.
Yeah.
You hit that.
Yeah.
Do you buy the dip here on Nike?
I would rather buy the dip in
Meta.
Yeah.
It's an expensive
Honestly.
dip to buy. I did so today.
Yeah, I think so. I'll actually do this. I'm going to do the Jan December
In Meta?
in Meta. So I'm just going to buy the 750 Jan and sell the 750 December against it for $6 and change.
Okay.
So you're paying $1,800 in the Jan, and you're selling almost $1,200 in the December cycle. So it is under $1,000, $600 in risk. But again, if you get a 30, 40 point move to the upside, this will be a $300, $400 winner.
I did the 725, 750 diagonal spread in December, November. So short the 750 in November, long the 725 in December. What are you looking at in gold? You doing anything in gold? I got a little upside positioning with GLD, call diagonal spread. I also did a crab trade as well. Playing into that call skew. It's still there. Volatility is still very much there. IV rank of 29. You got anything in there? Or in gold futures?
So I had a gold put calendar spread at 370, and I closed that.
Okay.
It was like a 60-cent winner or something like that.
Nice.
So I have, and I have had on a 345, 335 put diagonal spread, long December, short November. So that was me trying to call a top at 345, and then it ripped all the way through that. So, but yeah, I haven't made an adjustment on this trade. I don't think there is an adjustment to make really, unless you wanted to narrow it to like a 5-point wide, but you're not really picking up any premium. This is kind of just a short delta position in GLD if we get a big wipeout. But yeah, that's my current position is just short gold, and then I'm buying the dollar in TastyFX and then playing these equity earnings as they come along.
What do you think Roku's trading at right now? Have you looked at it
I
recently?
have not looked at it. Roku?
Yeah, what do you think it's trading at?
Oh God, I don't even know where to begin with these stocks.
I know, that's why. I'm trying to...
72.
It's at 100. You want to get some short delta?
I guess. If I thought it was trading at 72.
I know, that's what I'm saying. I'm trying to bait you into joining me. I did the November. So I bought the November 95. I sold the October 88, the October 31st, tomorrow, 88 against it. I did that package at $3.69, 7 points wide. You got to think if the market's going to dump tomorrow on Apple and Amazon news, you got to think they're going to come for some of the pigs here. I got some downside in Reddit with that put ratio. It's kind of my thinking.
Yeah. The fringe, like
Yeah, the fringe, like
make the fringe illiquid is what you're saying.
That's what it seems like.
Yeah. They have earnings after the close.
Yeah.
But what if it's like Amazon misses and Roku signs a deal?
Or Amazon buys Roku.
Yeah.
That could be, then it could
Amazon buys Roku. Roku
Street hates it,
Yeah.
Amazon drops,
Yeah.
and then you lose both.
Yeah.
Yeah. That's true. There is that risk. I will give you that. That is a good point.
I think I'll wait on Roku, and if
Okay.
it rips, then I'll short it.
Okay.
Yeah.
All right. That's fair. E-mini S&P 500 futures, we're at near the low of the session, if not the low of the session. 68.55 the low, so we're just right there, down 66. You got the NASDAQ down 363, the Dow down 121. It was actually up at the earlier part of the session today. You've got the Russell down 17. Oil selling off a bit, 60.25 on /CL. Volatility futures near the high of the end of the range, 19.10. You got bonds down 18 ticks, down in the 117 handle. Gold has had a little bit of a bounce here back into the 4,000 handle. And you got silver up 79 cents. Bitcoin as well, taking it on the chin. Been very much a risk-off day.
Mm-hmm.
Flight to quality.
Someone looking at First Solar, too.
What are you thinking?
15-point expected move after the close.
It's another one, 120 to 240.
Yeah. So, Amazon is going to be right after the close at 3 o'clock. Apple is going to be
First Solar options do not look good. just putting it out there. They're, you got the 250 calls in November are $1.50 wide. Some of these are $2 or $3 wide.
Yeah.
I don't know.
Don't love that.
I don't know if you can trade that.
But yeah, First Solar, 3 o'clock, right on the dot. Roku, 3:05. MicroStrategy, 3 o'clock on the dot. Reddit, 3:05. Coinbase, 3:10. Amazon, 3 o'clock on the dot. And Apple, 3:30. So
Apple's always the late one.
I know. It pisses me off.
It really.
Like, what are you doing? Just give us the number.
Yeah, let me trade the number, and then you can talk about whatever you want. On
Yeah.
Like, come on, Tim Apple.
It's ridiculous.
Save this market.
But yeah, could be a wild session here. We need Amazon and Apple to save the market. But I don't like this. I don't like this tape action at all.
Yeah, no, it does not look. It does not look good, despite us giving back a full 3 days of price action.
Mm-hmm. Yeah,
I was trying to put some context around. This is a little blip.
It is.
You don't think so?
It's still on the upper end of the range of the year for sure.
Yeah, I mean, but this is just this week. I mean, we had that massive gap on Monday, and we just filled that in.
I don't know. I'm petrified, but we have 2 minutes until we get the number.
Just sit on your hands, so you don't
I know.
you don't add, you don't take it off. You just kind of sit on your hands a little bit here.
Yeah, you just wait and see.
Yeah.
I'm gonna do my favorite thing here. Flip to the 1 minute chart. Yeah, I am petrified. But if it's worth anything, I think Amazon. So Amazon is related to UPS in a way.
Okay.
UPS ripped higher.
Yes.
Amazon is related to Google in a way with their web services.
Yeah.
Google ripped higher. So, by way of osmosis, if both of those are ripping higher, why not Amazon?
I'm with you.
Especially with the liquidation we are seeing in Meta and Microsoft.
Mm-hmm. Yeah, the move in Meta, I think, caught a lot of people. It's a tough one. And it's at 666
I just saw that.
Does that spook you?
Not anymore.
Yeah.
Maybe when I was younger, a little bit, but
yeah,
I feel like I've seen it all these days.
I mean, you just got back about, if you've missed this ride, it's about 4 or 5 months of price action you got, just kind of erased overnight. So betting man would say that's probably a good spot to nibble on some long delta, no?
A betting man. Yeah, I mean, I think when you have big moves like Meta, I think it's...
Remember IBM? What if it has an IBM? That's what the peeps are saying.
I
Like,
do remember IBM.
yeah.
I'll never forget IBM.
That would be meta that would be meta 850
I want a documentary on IBM.
on that move.
Yeah.
That wasn't
Down 20, up 20 the next day, up 20 the next day, up 20. It was a complete reversal of bad news.
Yeah.
But how is that possible? How could the market say, oh God, here we go.
There's our bell. You got E-minis on the closing on the low of the day. They're down 71. NASDAQ down 400. You got the Dow down 150 and the Russell down 19. You got oil down 26 cents. Volatility 1915. Rallied into the close there. Oil rallied into the close there. You got bonds down 19 ticks. You got gold up 35, silver up 78 cents. Bitcoin taking it on the chin, the low of the session, 107 and change. Ooh, spooky.
Is that a Coinbase move or no?
Let's see what happened. Oh, you think like Bitcoin sold off because
maybe
Coinbase had a move? I don't think so. Not yet. Is Amazon up? E-minis just
Amazon
rallied,
is sitting there.
Yeah.
I don't see anything just yet.
Should we wait another just second, see if
Just
it
a
moves?
couple of-
yeah, just
oh, there it is.
oh, there you go. Amazon
26, 228, 29,
Come on.
230,
230. Okay, we like to see that.
231. Don't you dare give us this ghost candle here.
Well, it's funny because the stock's down 7 on the day, and it's now up 7 in the now it's up 10.
There you go. Praise Amazon.
235.
See that little blip?
Yeah, it's where it stopped for a second.
Yeah.
They got Amazon up like
$20 almost.
Yeah, 15 and change here. E-minis just rallied 20 handles. You got the NASDAQ just rallied 120 handles.
There you go.
I think I might have to take off one of these. I've been scalping NASDAQ futures all day today. It's been quite the trip here.
What a move. 240 at Amazon. Oh, man. So we were right. UPS plus Google equals Amazon.
By osmosis.
By osmosis.
On that, we're going to take a quick little 90-second break and come back with more Tasty Live. You got the Overtime Boys coming up next. You're listening to Tasty Live. We'll see you on Tuesday. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
We are back. This is Overtime. I'm Ilya Spivak here in San Francisco. That's Dylan Ranigan in Milan. Our returning champion, Thomas Westwater, in Chicago. Gentlemen, it's kind of a soggy day out here where it's tough to point the finger at anything other than the Fed. Your thoughts?
Yeah, I agree with that. I mean, I think that there are certain pillars here. One is rate cuts and a relatively dovish Federal Reserve, along with obviously the supernova. And I would say that, those aren't the only two pillars, obviously the labor market and sort of the tolerance for tariffs and all this. But I think that two of the major pillars got, kicked around yesterday. More significantly, the rate cut pillar, other than there was obviously the noise on the Microsoft and the Meta earnings yesterday, but that seems to be less consequential ultimately, at least for the moment. But I do think that it's sort of a digestion of the realization that more rate cuts in the short term are not a foregone conclusion.
Yeah, I mean, I think that's exactly right. I think The term I used in the article I wrote in the post-mortem of this FOMC announcement was, if not a piercing, then a denting of the armor of indifference that the markets had, where essentially they came into this week thinking, listen, we're living in the best of all possible worlds. Everything is great. Everybody's Dr. Pangloss, and everything's fine. Because the Fed is going to do what the Fed is going to do. It's all priced in, la-di-da. And the Trump talks with Xi are going to be great because they already pre-announced everything, and clearly both sides want to climb down, so at least the intent is there. And of course, Trump came out of the meeting glowing, and nothing ostensibly specific has happened other than everybody's decided that shooting each other in the face was not the move for anyone, and so everybody kind of backed off. The earnings thing, everybody went into going, oh, great, tech has been beating average earnings growth of 22% versus the average for the market as a whole at 9%. This is not going to go badly. So markets came into this week basically going, everything's fine. There's nothing to think about. There's nothing to talk about. All the risks are already off the table, which of course, and we talked about this on the show, made the markets basically priced for perfection. That is, if everything went right, there wasn't really much to do. And if something went wrong, everybody was skewed the wrong way. And so that's sort of how this Fed thing felt, where it wasn't really even that Powell said something so dramatic or out of sorts. He certainly made a point of saying December is not a foregone conclusion, but the markets really were kind of built around a pillar, amongst other things, that it was. And so that, looking at the price action here, that seems to have clearly done something untoward for the S&P. Because if we look now at what we've got on the chart here, we can see, I think, very clearly where the Fed is. I mean, there's that quiet sort of sideways thing. Then the Fed itself, the announcement passes without really very much notice. Then Powell starts speaking, you get the big sell-off. You rebound into those earnings that we got yesterday. That makes sense. Notably, those same rebounds don't appear if you look at, let's say, the dollar. If you look at bonds stay on the lows, the dollar stays up. You don't really see that kind of reversion. So it's tempting to say that really the market just didn't want to make up its mind ahead of things like Meta and Google and Microsoft. But now we see what's happened since, and everything's basically leaked lower. An interesting sort of tidbit here that I wanted to get your thoughts on was the implications for gold, because I think that's sort of part of this equation. And for some reason, our gold charts are having some trouble coming up here. Let's see. Oh, here we go. So, gold. You'd think yields are up, dollar is up. Why is gold up? How does this fit into your narrative?
I mean, I guess I would say, is gold really up? I would take issue with your assertion of up. I mean, in other words,
that I think that's fair.
I mean, and to the degree to which it's up, it's a fractional upness off of a huge sell-off material. I don't think it's anything.
Yeah, I mean, I think that's fair. I mean, gold has obviously been in consolidation mode here, and if we look at where the Fed was in this whole calculus, I mean, here's the Fed right here. This is Powell speaking. Gold was already on the way down. Powell gave it a kick. It kept going, found whatever bottom of the range exists down here, and then recovered to basically unchanged relative to the top of the range from whence it was descending yesterday. I do think it's curious that even intraday, sort of over the course of this right here, gold still manages to recover, whereas, I mean, obviously, we don't have to go far. Here's the dollar, and there's Powell's speech. I mean, there it is.
I mean, I just don't. I don't. I mean, I think that is the variable. I mean, I think the question is, you know, I mean, because Mike Butler was talking about it yesterday. Sort of, what is the mathematical component of this for the degree to which the cost of capital, the projected cost of capital, or the projected risk-free rate, or however you want to sort of say it, has been adjusted higher for the next 3 months. And I think that is the sort of meaningful adjustment that's across the board here. By the way, also won't surprise me if within a day or two the market goes full supernova again and doesn't care. So I feel like that this is a day of digestion on the back of a real piece of mathematical information having to do with the cost of capital in the short to intermediate term. But we've also seen the market absorb this kind of information more than once and then decide, the hell with it, I'm going higher anyway. Same thing happened with tariffs, which basically incremental increase in the cost of products.
Thomas, you wrote the preview, so I go to you with this question. We've obviously seen the markets kind of fall out of bed here after this Fed thing. So with that in mind, what are we talking about as far as these incoming earnings? Is that going to be the saving grace here? We've got Apple, we've got Amazon. You wrote the Apple piece. You're surely deep into the Amazon piece. Enlighten us.
Yeah, I mean, Apple, it's all about how iPhone 17 sales did. And it's looking like it's good. There's a couple of research firms that track early numbers, right? It was only about 9 to 10 days in the reporting quarter that iPhone 17 came out. But if those early numbers look really good, that could help really propel the stock higher. I mean, it looks like, you know, this cycle, people are actually going to upgrade their phones more than the last cycle. So I think there's going to be some bullishness in the numbers. Of course, it's had a good run, you know, so if it's bad, it might, you know, take a little dive here. I would see that as a buying opportunity for Apple long term. A lot of people's, you know, they're saying, why isn't Apple investing in AI so much? And I mean, I don't really think that's true. They're not investing in large language models. You know, when you think of AI,
that's an excellent distinction.
But they are investing in it in terms of integrating it into their things like a true AI series is supposed to come out. They're integrating it across their products line, just like Meta has done across Instagram, WhatsApp, things like that. Meta's done a very good job, but the earnings report wasn't that good. I see Meta as a buying opportunity down here. So, you know, the numbers, I think they come out usually 30 minutes after the bell every time. So we're about 12 minutes away from Apple. Amazon, I haven't looked into the numbers yet, but obviously the market likes the reaction there. So, you know, I think if you get a positive Apple report, that's just such a big weight on the market that it'll help drag us up. See it as a buying opportunity. I mean, you know, it would be great in NASDAQ futures if you got down to the 50-day SMA where, you know, we've had some solid support on those pullbacks. But, you know, I think if we get down to the 9-day EMA, that's a good buy point right there. Got a little bit overextended here, you know, this week up until today. But I still think it's all about earnings. As you said before, trade tensions are continuing to cool down. So, you know, that's more relief off of the macro narrative, growth cooling and everything like that. So I'm pretty bullish here. I think, you know, it's a one-day pullback. I don't think it's time to ring the alarm bells yet. I see this rally still going for quite a while.
I mean, to your point, the rally, that's certainly getting a nice little pick me up here is on display here with Amazon. Earnings beat expectations, EPS of $1.95 versus $1.57 expected, revenue of $180.17 billion versus 177.8 it looks like billion. EPS up 36% year on year, revenue up 13%. Solid numbers, clearly, and the markets like it. So it's looking like at least this part of it has gone pretty well.
Yeah, and if it was a case of where the market is panicking, it wouldn't matter if the Amazon numbers were good. It would still be selling off with everything else. The fact that it reported good numbers and the broader market's down, it's especially bullish for Amazon, but I think it speaks to that we can recover here. And I mean, one day, I hate saying, one day we pull back and, calling for a broader unraveling of this trend that we've had. I think you need a lot more downside to where you could call a market top. So, I mean, I'm not saying anyone is saying that here, but
sure.
I think you would need a lot more. I think, these pullbacks that we've had, they've been buying opportunities almost every time. You could do it after 1 or 2 day sell off. A week or two later, you're in the green again.
So far, that has certainly been the order of the day, at least since the lows in April. Just a little tidbit here on Amazon. It looks like operating margins got weaker on the actual goods selling and shipping side, both for North America and internationally. But Amazon Web Services, that is the cloud, that improved and improved by almost 2% quarter on quarter. So it looks like that's what carried us to these positive results. I think we're still waiting for Apple to hit the tape here. Hasn't appeared yet, so we'll see what goes down here. But to your point, clearly a lot of this stuff has been bought very quickly on every downswing. I do wonder, as I'm sure nobody is surprised, I do wonder whether what we're seeing here is kind of larger and more worrying, not necessarily because everything hasn't been bought, but because you've gotten to a point, and you were always going to invariably get to a point, which maybe we haven't gotten to and maybe we have, where that stops. And to try to tease out where that point is, I think going back to this idea that at the beginning of the week, you were coming into a place where you were sitting at record highs and all the good things that the markets were looking at were known and onboarded. And it seemed like there was relatively little room to get any better news. And when you're priced for perfection that way, just in terms of speculative mechanics, you're kind of tilted. And so what good news comes out leaves you anchored. And if any of the news is less good than perfect, then you're vulnerable. But to your point, that need not last longer than the event risk itself. And so, okay, we've had the Fed. The markets didn't like it for a day. Will they not like it for longer than a day? And I think that's the Apple test should be an interesting test, because of these two, one would think Apple, to what you were saying before, is probably the one that's the more obviously positive because we had those early reports that iPhone 17 sales are going well. And Apple has ostensibly already rallied on this. So this would be confirmation. In fact, we saw a big jump in Apple around it, I think, last week.
And the price action this month, it looks similar to what happened at the end of July into August.
Mm-hmm.
I mean, it looks really similar to there.
Yeah. Yeah, I mean, if you look at NASDAQ here, let's look at the continuous contracts so that we can see more of it. So here's July into August right here. So you get this kind of sideways consolidation and then the next leg. So perhaps this, I think, if I'm understanding you correctly, would be that same kind of sideways consolidation. And this is the extension.
Yeah.
Whereby you probably still have, maybe that much more if you were to sort of assume near perfect symmetrical kind of outcomes here. I mean, obviously that we're just kind of guesstimating for the benchmarking exercise. But if that's sort of your magnitude of move right here, something like this, then if you were to extrapolate it out here, then one would say, okay, if you had the equivalent breakout here as you did here, let's be conservative, off the lows of the pullback, maybe you've already done it, maybe you give a little bit more. That kind of a thing.
Yeah, I think there's more room to pull back, but if Apple is positive, I just see, some enthusiasm coming in tomorrow morning.
Mm-hmm. Yeah. I think that's probably the most fascinating thing for me here. And Dylan, I'm curious what you think about this as a kind of market psychology exercise. It makes sense that stocks didn't want to run away selling after the Fed yesterday when you had big tech earnings after the bell and everybody went, well, why am I going to commit? Watch, all three of these are going to blow it out of the water and then I'm going to be screwed. Stuck short until the next day. Why in God's name would I go and do that? I'm not going to commit. Let's reset this thing back to around where the Fed was. We'll see these earnings, then we'll go. Whichever way. Today, I mean, obviously, 2 out of 3 of those earnings were good. Microsoft sold off. I still can't quite make heads or tails on why. We were trying to figure out what that was yesterday because their numbers were not bad by any stretch of the imagination, but they did sell off. Not as bad as Meta, obviously. But of the 3, 2 out of 3 did great, and Google even rallied on its results. And yet the markets can't use this as fodder today. They're not neutral, they're down. Like, I would have thought, frankly, that we wouldn't get this sell-off today. Because I would have thought, you know what, they're going to wait. They got Amazon, they got Apple. Why would they make up their mind tomorrow when they didn't make up their mind today? But they did, for some strange reason. What do you think that is?
I mean, this goes to the 2 things you have to think about when you're trading. You have to have the direction right, or somewhat right if you're using options. And you also have to have the timing right. Your timing could be off a little bit, but that's why when we structure trades, we set it a certain time out, 30, 45, 60 days, let it work in your favor. If you're wrong on the timing by a few days or even a week or 2, that's okay. And the direction, I mean, you could also use option strategies to give yourself some cushion on on direction if you're wrong, and let the time play out and help you that way. So I mean, I see it as we really have to get these results and wait for it to be digested into tomorrow. And I think tomorrow's price action is going to tell us a lot. I mean, NQ, I mean, if we got down to the 50-day SMA, that's a point that's been bought up pretty regularly. So, I mean, I would definitely take a stab at it there.
Dylan?
So repeat the question for me. Sorry.
To me, it was probable that the markets didn't want to make up their mind this way or that, Fed this, Trump and Xi that, until tech earnings are out of the way. Mm-hmm. They showed that kind of resilience into the close. Yesterday, stocks bounced. Everything else didn't. Bonds didn't bounce. Dollar didn't back off. All of the things that were Fed-adjacent things, they all held except stocks, and it made sense. Okay, you got big tech earnings after the close. Why make up your mind now? Mm-hmm. But they made up their mind today for some strange reason.
You're saying
before Amazon, before Apple,
Microsoft, and before Apple, and
they for some reason still sold off. So for me, I'm sort of looking at this market psychology wise and going, well, what does that mean? Does that mean anything?
I mean, to me, it does not mean much, honestly. I mean, if anything, it means it's a chance to buy, Microsoft or Meta cheaper than it was a few days ago. I just don't. I hold on to the opinion that the dominant factor in the financial markets, well, the most dominant factor in the financial markets is the whim and impulse of the President of the United States. So setting that aside, assuming that the president doesn't decide to unilaterally change, global trade relations in a given evening or whatever it is, then the second most dominant factor is the optimism or even euphoria around the AI the tech revolution that is AI. Mm-hmm. And so, and then the third most significant consideration would be rates and inflation.
Ooh. And to your point, whoa!
But my point is, I think that the
Apple
AI
is out, and it's not happy thoughts here. But please continue.
My point is, I believe that the dominant force ultimately is going to be tech, mm-hmm. more than the Fed. The tech is only secondary right now to Trump. But what's the situation with Apple here?
Well, so Apple got whacked here. That seems pretty clear. We'll see if it sticks. Results wise, this is interesting because actually these are good results. And this sort of comes back to what we were just talking about. EPS, $1.85 versus $1.77 expected. Revenue almost there, beat by a little. Actual 102.5 billion versus 102.25 expected. So beat by about $250 million. And that's sort of this buy the rumor, sell the fact thing that I was kind of talking about, Thomas, just a second ago. This idea that we kind of thought that these were going to be good numbers when those independent reporting figures came out on iPhone 17 sales, and Apple had a pretty nice jump of them last week. In fact, I think there was a day last week where all of basically NASDAQ's gains was Apple around those reports. Obviously, this is not the world's biggest sell-off. I mean, it spiked down, but now it's kind of clawing at the bottom of its intraday range. It's certainly off the lows. But this sort of echoes what happened with Microsoft for me, where Microsoft's numbers were not bad numbers. They were good numbers. And it got smoked. Not like Meta, Meta's numbers were actually a massive miss. But they did fall and they didn't come back all day. So is this that? And again, are we seeing some sort of fragility here in kind of larger narrative flexibility?
I mean, I think the obvious answer is yes. I mean, I think that if the reason the big tech names are selling off is because they didn't beat by enough.
Yeah.
Which is kind of what we're saying here, setting Meta aside. But that the whole thing is, you didn't beat by enough. I mean, that really is getting at the ultimate dynamic here, which is that the price levels on these things are really, really high.
Mm-hmm.
And anything that is not exceptional, meaning an exceptional beat, is going to be punished. And we're getting that. I mean, it goes to also, I think about the sell-off when Trump tweeted about whatever he tweeted about a few weeks ago, and the whole thing went cuckoo bananas for a minute.
Yeah. The 100% tariff on China because how dare they install a rare earths licensing, Raj?
Exactly. What that really sort of said to me was this market is capable of really big sell-offs real fast.
Yeah.
Which isn't like, that there's a lot of air underneath all of this, right? That was
this right here.
That's an indication of how much sort of free, sort of how limited the integrity of the overall situation actually is. And I would say that the performance of Apple or the performance of Microsoft yesterday are further confirmation of the fact that basically the tolerance for anything that's not exceptional is down to zero.
Yeah. I think
because of the price levels.
Because of the price level. I think that sort of jives with the idea that and we were talking about this just a second ago, this idea that if you're not going to get cheap Fed money, it's a tougher sell to bet on kind of thoughtless continuity just on sheer momentum alone, because the money costs more. So if you bet wrong and you get wiped out, even on one of these things that are quickly bought up, but you're on the wrong end of one of these periodic washouts, it becomes more expensive to get more money and roll again. And so people are going to be more cautious about being on the wrong end of one of these things.
Mm-hmm.
If the Fed is going to give everybody cheap money forever in large quantity, then we're in a very different kind of a thing. Then, okay, yeah, buy every dip. Okay. Like if you get roiled on one of them, okay, well, so be it. That's okay.
Mm-hmm.
Just borrow for less again and go. But if all of a sudden you can't borrow for less, capital is not as cheap as you thought, well, then there's going to be some constraint on risk taking, maybe.
Mm-hmm.
And maybe the dips don't get bought up as readily.
No, I think all that's true. I mean, I think that the sort of more brazen question is, are you actually willing to incrementally build more, or at least sell call spreads?
I am.
Like,
I'm not selling call spreads. I'm buying put spreads. But yes. Yes. And by the way, the reason I'm doing it is the same reason as what we talked about the other day about buying call spreads if you were of the mind that Thomas is, which is, listen, why are we fighting a market? But it's a very reasonable argument. Why are we fighting a market that's going up? This market has shrugged off more. Why wouldn't you wait, not be greedy, not try to pick the top, let the thing actually take a real concerted hit whenever that's going to occur? Maybe it's this week. Maybe it's a year from now. Maybe it's 2 years from now. Who knows? But let it actually take a real gut punch, let it keel over, and sell into that weakness with the benefit of momentum on your side. In the meantime, if you're feeling iffy about buying at record highs, do it with call verticals because vol is low. You can structure 2-to-1 risk reward positions, and if a face ripper does descend upon you, this is why you have a vertical. You are you're very risk defined. So your max loss is what you set it to be at the onset. And if you roll the dice 5 times right, 2 times right even. If you roll the dice 2 times right and the third one is a face off level situation, well then okay, you've broken even. If you roll the dice 3 times correctly and it's a face-off situation, you've actually made money and now you just flip that bet over and go the other way, but this time with the benefit of momentum. So for me, where that gets into trouble is if you're selling vol. Because if vol expands on you in one of these face ripper situations, you're going to have a whole other kind of an issue on hand. And so, and it may be that there is an asymmetric vol expansion to the two sides of even a short call vertical. So maybe you end up being upside down in the wrong way. Or for that matter, a short put vertical if you're bullish biased. That might be asymmetric between the two options that you own in the spread. And market might be doing what you thought, but your protection isn't any good. So buying and locking in either on the long or the short side, whatever your opinion, seems to make more sense to me here than selling vol, especially with vol relatively low.
I mean, Apple's up now.
Yes. Let's take a look here.
So yeah, that's what I'm doing. I'm just buying a call spread in NQ. I'm just doing short term, 5 days out, right near the money. Pretty much max loss and max profit are right near each other. POP 50%. I'm gonna take the shot on it.
Yeah. I mean, that's one way to go about it. The alternative would be, instead of saying, okay, if I'm really, really antsy about buying at record highs, and this, your approach, Thomas, is like, you know what? I'm not that antsy. We're just gonna roll this thing, and it works until it doesn't. And the benefit is, of course, you get to keep your losses very small and very risk defined. And worst case scenario, your options expire worthless and you rethink. If you were really, really antsy and you wanted to dilute your exposure to delta in general, to sort of directional delta, you could go far out and not expect to hold it, but expect for that to kind of dilute your exposure to underlying delta. Just have tons of theta in there, so that if you do get a face ripper, you're more insulated than sort of the underlying asset, and then you can just choose to get out.
Yeah, and I mean, we're also going into a week of another week where we have some notable names. I mean, we have a good amount of chip stocks next week. AMD's reporting, Qualcomm, some other names that are AI, ARM Holdings. So we still got more to come. And, AMD is looking like it's going to... AMD's been really, up over 100% year to date. It's been on a rip. Their gap to NVIDIA is closing with what they're doing. Their benchmarks on every chip they put out gets closer and closer to NVIDIA. Some are even now exceeding it, and they're at a lower price point than NVIDIA. So they're carving out their own niche in the data center sector, where they have this client base that's expanding, where you could say, look, we're going to get the same performance or maybe marginally below it, but we're paying 30% less. So I mean, they've carved out a really nice segment of the market for themselves.
Yeah. I mean, for me, the logic there is very compelling. What I am concerned about here more so than those kinds of arguments, because I think they make a lot of sense, is sentiment extremes, whereby appeals to logic don't make a dent, only whereas appeals to logic haven't made a dent in sort of guiding us lower, and the market has been resilient. There comes a point after a long, let's call it dispensation of thinking on the upside, whereby things have become skewed from a sentiment perspective and from an exposure perspective, and thinking stops working in arresting the downside, where basically things just need to even out. And that's where you get those kind of correlation one sell-offs, where sectors don't matter, company specifics don't matter, sometimes asset classes don't matter. Things just go to cash. And everybody just goes, okay, whoa, that was crazy. And so for me, it's as crazy of a bullish sentiment extreme as we've been experiencing, that kind of leads me closer to thinking that to follow will be a bearish sentiment extreme. But there's obviously no knowing when that is. And so you kind of look at the sort of denting of the armor that was the Fed, and you go, okay, how bad was that? And so just looking at the S&P here as a kind of catch-all, here is what, and again, I don't know that this is quote unquote the big one. Who could tell? But I think looking at the sort of overall price action here we were before the Fed. Here's the Fed. We come back ahead of those earnings. We can't stick it, even though most of the earnings came out, I would say, relatively solid. Yes, Meta missed. Okay. But that's sort of the kind of one-off that happens. But here, what you've got now is this sort of general positive earnings, but you still capitulate. Okay. And you're kind of stair-stepping down. You get this new plateau around, let's call it 6,900-ish in the S&P. You crack it. Now we've got the next set of earnings. Obviously, we're bouncing. Still kind of stair-stepping in this rollover, though, and coming in on this former range bottom, but not even moving to challenge it. We'll see if we do, number one, and we'll see if it holds, number two. But it does look like things are sort of leaking lower outside of event risk. And so, and this could be nothing. We saw this obviously across a lot of things in early October when Trump said his scary thing and everybody freaked out. And there was a bunch of stuff that all of a sudden decoupled. We were on this very show saying, why are they freaking out now? He has said things like this 1,000 times in the preceding 6 months. What's this about suddenly? And so it's almost like we're starting to get this kind of extra fragility, as we were saying, and extra reactivity. And for now, obviously, the market is fighting back or has been fighting back. But we didn't even have that before. And so you wonder if kind of the market is getting worn down, if sentiment is getting worn down. And if whatever break occurs isn't going to occur because of this catalyst or that catalyst or the veracity of the supernova or blah, blah, blah. If instead you're just going to run out of hopium eventually because all the good news is there. And there's just no more new good news. And eventually the market kind of arrives at that idea. I wonder also if that's what gold's about. And the reason I wonder, and again, Dylan, to your point, I don't think this is anything like a, oh my God, direction change recovery. But it is curious that gold is up here today, with yields up and the dollar up. And I wonder if that's sort of disappointment-ish with the Trump-Xi meeting. Not because it didn't produce anything. It produced exactly what it was supposed to produce. A short-term, shallow backing off from the extreme. I don't think we still know all of the exact details as such, but I saw videos of Trump basically opining on the plane. We got a good deal. We got to renew it every year. Go, okay, so in the structural sense, we have a Band-Aid on a broken arm, and we got to redress the arm. And if anything happens or the president changes his mind, as he often does, then what have we actually achieved? So I wonder if gold being up here is, if we sort of think of gold as we have before, as a kind of multi-polarity idea, as the idea that gold is the thing that's going to be the go-between. If the U.S. and China were to go into separate kind of payment silos, where China is like, you're not going to use your economic weapons on us. We're just going to go into a different payment silo and just be by ourselves. And we've shown we can do that by scaling Russia. But so as you're not freaked out, gold will be a backstop to the settlement here because the yuan is not convertible internationally still. So we'll backstop you with gold, and gold will be your go-between so that third countries like, let's say, a Brazil or a Turkey can both do business with the U.S. and China, even if the U.S. and China are in kind of separate moded spheres. I wonder if gold is up here today as a kind of reflection of, well, Xi and Trump didn't really break any ground. They just took a step back from a crisis of their own making and were basically reset to, let's say, September-ish. But nothing substantive beyond that actually occurred. Thoughts?
I mean,
yeah.
Go ahead, Thomas. Sorry.
Yeah, I think you're right, but I mean, overall, the trade is still going in the way of de-escalation. I think China, it was always going to be the sticking point where it was one of the last that's negotiated, and that's because of the complexity of, just the size of the economy and the trade we have. I don't think it's something that, even if it deteriorates a little from here, I don't think it's something that derails the market. I'm still going on my view that the overarching theme that Dylan has said a lot, that AI is fueling this market. I still think that's going to overcome any near-term fear from trade. And, to bring up Apple again, it's up 4.5%. It's beyond 1% of its expected move. So, I mean, that's kind of showing, if the market is in a fear mood and ready to, sell off more, would a name like Apple be beyond its expected move to the upside on, what looks like just a modest beat? So that's why my view is I'm getting long NASDAQ and I'm going to be long the equity market.
And just piling on to Thomas's point, for the millionth, billionth time, the prevailing dynamic here has been to buy these dips.
Yes.
But the trading,
clearly,
when you get fragility or sell-offs, it's not a situation where you should pile in and get short. It's a situation where you buy what you want to own cheaper.
Yeah. I mean, that has absolutely been the case so far. I mean, there's just no question. There's just no question. I mean,
so if it ain't broke, don't fix it. I mean, I just don't see how that's not the higher probability decision.
I think it is the higher probability decision looking backwards. I don't think it's necessarily the higher risk or the better risk reward decision looking forwards. And I think that's really been the essence of why I have been kind of poking at the market whenever it seems to show a weak hand. And as we talked about, I mean, the moment Powell said the magic words yesterday, the moment he came out and essentially said, I know that I come out here every month or after every meeting, and I tell you all that the next meeting is not predetermined, and we're going to look at this and we're going to look at that. I am saying more than that here. You should not look at December as a foregone conclusion. Far from it. Wink, wink, nudge, nudge. You're wrong, markets. You should, in fact, he said, he's like, well, looking at the markets, looking at December as certainty, it's not a certainty, so that would be good to take on board. I mean, he was quite literally talking, it seemed like, to Fed funds futures traders going, you all need to stop it. And they have. So you look at this and you go, okay, from a risk-reward perspective, what do you do? I mean, the moment he said that and the markets fell, you go, in my mind, okay, maybe this is the one. Maybe it's not. Who knows? But with vol so cheap, you can take a little stab and see. And if you lose a little, so it goes. That's kind of the nature of what you're doing. When you're fighting a market like this, you're going to lose the first X number of trades because you're going to get rolled over, which is why you put verticals on the cheap and run away from them if the price action tells you you're wrong, as I have. So I did put on some SPY put verticals ahead of this, or ahead of today after Powell said the magic words. We'll see. I frankly was not expecting them to work at all today. We'll see if they stop working as of tomorrow.
I think if your view is that the AI narrative is going to continue to fuel the market, fuel spending, and you put yourself in the shoes of an executive who's making decisions on that spending, I don't think you're going to look at what Powell said and say, let's stop investing, let's slow this down. I think right now they're still going full steam ahead. I think that's going to push a lot of capital into the market. And
I agree.
I think we're going to forget about what Powell said by Monday.
I agree. I just don't make the same connection between what that executive is going to say necessarily. Maybe it's been the right connection. I just think there's a shelf life on the connection between what that executive is saying and what speculative risk capital does. And I think, were we not in a kind of now reflexively buy the dip type of an environment, there we would have long ago arrived at the place where the markets go, okay, we know those executives are going to do that. We know that this is a multi-decade build out of capacity and investment and then ROI. We know all of these things, and we've known them for months. At some point, surely that's going to be priced in until we get the next kind of layer of macro narrative. The next kind of, this is here. This is the next thing. And by the way, this always happens. There's always this kind of, bubbles aren't created out of nothing. They're almost always created out of an overhyping of a very real thing that ultimately works and ultimately meets its promise, at least to a large extent. Railroads, cars, telecoms, whatever. The steam engine, America. All of them, obviously, things that ultimately worked. All of them were speculative bubbles on the way in.
For me, I'd rather ride the bubble until it pops and be wrong that once.
Yes. Yeah, in a very Soros-esque way.
For the market's speculative nature, I think there needs to be a trigger for something to tell the market that this AI narrative is derailed. And I think that's something like, margins start coming in a lot. The return on investment into AI doesn't manifest like it's projected to. And I think we're not even close to that. I think that's going to take at least into next year at the very soonest.
That could be.
So I'm taking, how the market's been going, and I'm just applying that going forward pretty much.
That very much could be. And there's certainly no shortage of evidence that this is what has worked so far. And with that, happy thought, overtime is out of time. Don't go anywhere, everybody. Macro Money will be on momentarily here after a short break where we're going to dig into this price action and look ahead to what is coming next. We got some interesting testing of the waters next week with some third-party economic data, so we're going to unpick all of that. In the meantime, this show is done for this week. We'll be back on Monday for Dylan Radigan in Milan, Thomas Westwater in Chicago. I'm Amelia Spivak in San Francisco. Sit put, everybody. We'll be right back.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
We're going to go to New Orleans. I got to be in New Orleans. What's up?
Y'all three guys, just the whole organization is just phenomenal, and it's changed my life. And I wish more people would just sit back and listen to y'all and take it seriously, because it will change your life if you enjoy trading. I don't know if I could ever repay any of y'all for this free advice and free teaching y'all do. Is just remarkable. Tom, I got your hat on, and ever since I got it on, I've been blowing the market up. So make sure you don't give one to Tony or Scott, because I don't want them to benefit from us.
That's okay. Good job out of you.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday, you too can stick with the bat.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
after the Fed shocked everybody with a more hawkish outlook than the markets wanted. That's what's on the mind of everyone looking at what's happening here with Wall Street turning lower, even as we have more tech earnings in the wake. So, are we finally at that point where speculative appetite has given way? We're going to take a look at exactly what's going on and what might be coming in the week ahead. Macro Money starts right now. Welcome to Macro Money. This is Ilya Spivak, head of Global Macro here at tastylive. And boy, did we have an interesting set of developments here over the past 48 hours. Needless to say, the big story has been the Fed, and it gave markets quite a bit of indigestion. So without spending too much time on a preamble, what we're going to do is dive right into what the results of that Fed shock were and attempt to figure out why it was that it was so shocking, what it did, and what the next big inflection point in this story is likely to be. So, first and foremost, here's what we saw today. And there's a number of interesting standouts here. We have obviously a down day for the sort of big indexes. S&P off almost 1%, NASDAQ off almost 1.5%. Yields up in the wake of what the Fed did and really what Fed Chair Powell did. Crude oil digesting. U.S. dollar up across the board, especially against the yield-sensitive yen. It's not quite as up against the euro, but of course there was an ECB monetary policy announcement overnight. They held rates as widely expected, signaled that really they have no intention of resuming cuts anytime soon. That wasn't exactly controversial. Nobody was expecting them to. In fact, the outlook in ESTR interest rate futures, the equivalent to Fed funds futures for the U.S., had the ECB on standstill through the end of next year. So no big controversy there. The euro bounced a little bit once the ECB confirmed as much, or at least their intent. Since then, of course, it's kind of skidded lower with the general dollar strength. Bitcoin off almost 4% around sort of this generalized risk aversion, again, doing that whole stocks or risky assets on steroids thing. Wall Street sells off, Bitcoin sells off more. Couple interesting things to look at here. Obviously, this follows from what we saw yesterday. This is the immediate reaction after the Fed. We can see gold was down, dollar was up, Bitcoin was down, yields had a much more spirited jump in the immediate aftermath. Stocks were sort of neutral. And this is where this gets really interesting. Today we can see stocks decided to follow through. No real retrenchment on the yields, no real retrenchment on the dollar. Gold has interestingly perked up. Bitcoin just keeps getting slammed. So the most interesting sort of things in this price action that jump out at me is, number one, what in the world is gold doing up when yields are up and the dollar is up? That's typically kryptonite for gold. Gold is an asset that yields nothing, which makes it inherently vulnerable if yields go up, because why would you own something that yields nothing when you can own something that yields something? So when yields go up, the appeal of owning gold, at least from a speculative perspective, is diminished. Gold is also a kind of alternative to fiat, a kind of natural foil for fiat. The standby fiat currency, of course, the one that matters, the benchmark for all of them, is the US dollar. So when the dollar is up, well, you don't really need an alternative currency. And so when the dollar is up and yields are up together, that's speculative speculative kryptonite for gold for obvious reasons. And yet here we are. So that's one thing. And the other, of course, is that stocks decided to sell off. Now, when we look at the price action dynamics, it probably makes some sense why they didn't decide to do this yesterday. So here's the initial response to the presser with Fed Chair Powell. Note, by the way, this sort of sideways bar before the red one, these are 15-minute bars, by the way. This is the actual FOMC policy announcement. This is where the statement comes out. And the markets very clearly say, yeah, okay, there was two dissents. One of them was bullish, one of them was bearish, or one of them was hawkish, one of them was dovish. Stephen Meehan wanted more cuts. Big shock, comma not. Jeff Schmidt of the Kansas City Fed didn't want any. Okay, so now we know who the resident hawk is. Okay. We got a bunch of language in the statement as we looked yesterday, and I will link that conversation, that episode from yesterday at the top here, so you can check that out. But the language was clearly sort of saying, woe is us, we don't have all the economic data that we need, but the markets didn't think that was really the meat of this. They thought, okay, fine. That's about what you would expect to hear. Just give us our rate cut. They got the rate cut. And then Powell opened his mouth. He got up and to the podium for the post-meeting press conference. And we can see what the reaction was right here. And we'll review in just a second what that reaction was all about. But clearly, I mean, without even thinking about what Powell said, clearly what he said upset the markets. And then the markets sort of reset back to where they started. And that same reset didn't happen in bonds. It didn't happen in the dollar. But it did happen here. So naturally, this kind of begs the question. And when you consider that after the bell yesterday, we had the first kind of big batch of top-tier trillion market cap tech earnings for the week, it sort of makes sense. Why in the world would a market participant want to lean heavily this way or that in front of earnings from Meta, earnings from Microsoft, earnings from Google? These are obviously huge, huge influences on where the overall market is going to go. And as it happened, Microsoft and Google had good results. Meta had a big miss. Microsoft fell anyway. Google rallied. Meta fell more. But that the markets would get defensive, at least as far as conviction goes, and say, you know what, we're not going to commit one way or another to this Fed thing until we see these numbers, that seems to track. But then overnight, you get a big rejection at the top of the range, and then you leak lower for the rest of the day. And this is perhaps where things are really interesting as well, because needless to say, today after the close, we had Apple and Amazon, two other big names. And so if the markets were reluctant to be convinced one way or another after the Fed, one might have expected them to be reluctant to be convinced today, and more so in digestion mode. But that's clearly not what happened. We clearly saw a negative response. I mean, there it is. So there is the gold rally, which seems to clash with what's going on in yields in the dollar. And then there's stocks ostensibly caring about incoming earnings calendar event risk and then not. Well, of course, we'll see what happens tomorrow, but the question stands. What was it that the Fed chair did then, if the markets ultimately decided, you know what, risk off? Here were his comments, and I think very clearly the thing to pay attention to is this last bit right here, where he said, there are different views about how to proceed at the December meeting, strongly differing views. A further cut in December is not a foregone conclusion. Far from it. And there was a really interesting dance that Powell did here. He came out and said, and this is a direct quote, "I always say that it's a fact that we don't make decisions in advance. But this, I'm saying something in addition here. A rate cut in December should not be seen as a foregone conclusion. In fact, far from it." Now, what's interesting about this, of course, is that when the markets went into this thing, they did think that a rate cut in December was a foregone conclusion. And after some kicking of the tires here overnight as the CME FedWatch tool was adjusting for all of this, this is the accurate new view. So here's the current rate right here. And we can see that going into this, so this was yesterday, the market saw single-digit possibility that rates would remain unchanged and well over 90% probability that we'd get a further cut into this 3.5 to 3.25 range. Well, clearly, this has changed now. And by the way, today is a little bit of an improvement on yesterday's shock response. But we can clearly see the likelihood that we would stay unchanged here has significantly increased. The likelihood that we will get this extra cut has significantly decreased. And of course, that echoes all of the price action that we see. That echoes the lower bonds and higher yields. It echoes the stronger dollar, all of those things. And it seems to sort of track from what the Fed chair and what really the committee was signaling in September if we just take a look a little bit under the hood. Here was September's projection. We can see here from a baseline of 4.4 before September's meeting, because again, the Fed is setting policy in ranges here. So we're looking at medians, right? This is the 400 to 425 basis point range, the 375 to 400 range, the 350 to 375 range. So, and these are single numbers. So the range, the median range, before these rate cuts started in September for the Fed funds rate was 4.4, between 4.25, 4.5. Okay, so we get a 3.6 forecast. All right, what does that mean? Well, if we're in a 4.4 range and the number is 3.6, well, that's a difference of 0.8, which is just a rounding off of 0.75, which is 3 cuts at a quarter point each. 25 basis points and 25 basis points and then 25 basis points more. This forecast is issued when we are in September and the Fed has already issued one with 2 meetings left. October, which we just had, and December. So clearly the markets here are at 3 cuts. Before they were at 2, 3.9. In fact, they held at 2 really since the beginning of the year, even going back to December of 2024, if memory serves. And so clearly we've got the 3 cuts here. That's what the markets had on their bingo card, and the Fed is clearly saying, no. And if we look under the hood, it's perhaps because this is what skewed the outlook. We're only narrowly at a median of 3 cuts, and probably because of this dramatic dot. I'm not saying that's Stephen Mirren, but who else is it? And so I'd love to hear your argument for how that's not him. And so here we are. And so this average gets pulled, or this median rather, gets pulled. And you end up with now a serious debate on the committee. In fact, what Powell very clearly says here is that September and October were risk management cuts. And that's not the case going forward. Ostensibly risk management cuts, by the way, because the labor market demand has clearly softened and the balance of risks has shifted to a more neutral stance. So, clearly the Fed is saying December is something different, and whatever debate is implied here is clearly underway. We look at what that's meant for policy expectations, and we can see there's been a steady shift toward a less dovish setting across both the outlook for the rest of this year and the view for next year, most importantly. Now, we can see the way the markets have responded. It would seem that this is starting to give the market some degree of moderate indigestion. So here's this hawkish shift. And again, relatively hawkish. We're still looking for a tons of cuts, more, in fact, than the Fed has told us. At 61 basis points, we are still at least 50 basis points in, which, as we can see from the Fed's projections that we just looked at, is already double what the Fed is saying. They're saying a quarter percent only next year. So the market is already at double that, and 11 basis points in the direction of a third cut. Now, that's now less than even odds of 44% that we get that third cut. It was well over 50 even yesterday. So we're looking at a situation that's less dovish, but dovish nevertheless. The shift that we're looking here is a relative shift. But even with this relative shift, we can see stocks seem to have found some sort of a sticking point here, and they're pulling back. For the dollar, this has been very straightforward. The yields architecture has looked more supportive, so the dollar has continued to go higher. Importantly, though, when that architecture was not looking so supportive and things were getting more dovish, the dollar was still going higher. So for whatever reason here, the dollar is in a state whereby it wants to rise. And that's an interesting observation onto itself. In fact, the dollar hasn't made a lower low since July. Now, probably the most interesting bit here coming up next is whether this part of Powell's conversation is going to materialize. So he says here that data before the shutdown show the economy could be firmer. As a matter of fact, we saw from the S&P Global PMI numbers that were published just last week alongside that special dispensation CPI report, which came out despite the shutdown, that we're back to similar growth levels as were there, again, according to the PMI, in the second half of 2024, which were multi-year highs. So we're looking at a situation where, indeed, it does look like the economy seems to be accelerating. And that, of course, means less scope for rate cuts. So if the markets are responding negatively to that idea, well, then perhaps we're in this kind of good news is bad world once again, where the markets want their cuts. They're suddenly less sure of the Fed's conviction in delivering them. And certainly we can see in the Fed's own forecast, and they increased economic growth projections, they increased inflation expectations, they decreased bets on the unemployment rate. And so the key thing that then emerges as the next inflection point is the ISM manufacturing and service sector numbers due next week. The manufacturing bit is coming already on Monday. if this starts to show us what the S&P global PMIs are showing, because for now it's showing a standstill, as ever in the logic of PMIs, 50 is neutral, above 50 is growth, below 50 is contraction. We're hugging 50. And we're expected to keep hugging it. So if that's what's going on here, then maybe rate cuts have more room to occur because the economy is basically at standstill. But if that's not what's going on, if the S&P global numbers are what is correct, and what the Fed chair is hinting at here is how we end up going, then indeed we could have less room for rate cuts. And that limited scope for easing, if the markets really are now animated by their dislike of that, well, then this downside perhaps has some legs. As a matter of fact, if we look at the way economic data has transpired, such as it has, there's two things to look at here from the Atlanta Fed GDP Now model. Of course, we're still ages away from real third quarter GDP data, and frankly, with this shutdown, who knows if it'll come out even on that timeline. But what we know, as far as we know it, is that the data going into this model has been biased in a positive GDP direction, whereby those things that have entered the model, and this is what makes it a nowcast, is it takes in evidence in real time and updates accordingly. The data that's been going in here has clearly been generally biased towards stronger growth. Moreover, we can see even the consensus forecasts that this thing is tracking, and the Fed alluded to this, certainly Powell did, that's meaningfully improved. So even the consensus forecast now is calling for between 2 and 3% annualized growth. Obviously, the model here is even headier, but what all of this seems to translate into is the data has tended to be growth positive. And if that's the case, well then, rate cuts really do have a significant chance of being wound back even further with this ISM report. And the attention probably is on that ISM report, at least growth data-wise, while the shutdown continues and there's not better data. So, positioning-wise, I am still a bit short gold. I have it in futures form, as well as with a short call vertical here, basically looking for this bounce in gold to fizzle. I think the strange disconnect here with gold rising probably has something to do with a sort of buy the rumor, sell the fact type of a dynamic after the Trump-Xi meeting, whereby it didn't really seem to deliver anything more than what is already, or what was already benchmarked, the kind of shallow suspension of the most recent batch of hostilities. And so gold being a sort of long multipolarity, long siloing of the US and China from each other kind of idea, it's bouncing perhaps because some level of possibility that there would be greater relief than anticipated has been diffused. So in my mind, the bounce still looks corrective. The trend still looks to be pointing down for now. At least the correction seems to continue. And so I'm still a little bit short. I'm long the dollar. I've been long the dollar. I'm still holding that. I'm short against the Aussie, the pound, the euro, and the Canadian dollar. I have a little bit of exposure still short risk via this IBIT Bitcoin ETF. That's obviously working today. I put on some shorts on the S&P through SPY put verticals yesterday after Powell said the magic words. That's tentatively working. We'll see how that goes. Probably the biggest loser today was the bonds, which I'm still long through TLT, but I think the long end ultimately holds up better because the rate cuts will just move down along the timeline. And so I think 30 years or just generally the longer end of the curve looks better than the front. And still a little bit short crude oil after that geopolitical tension around the Lukoil and Rosneft actions from the U.S. seem to fizzle, at least as far as its impact goes. And that's kind of tentatively doing something, but still very early days yet. And that is macro money for today. We're here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, usually looking at the Wall Street close and where things may go therefrom. So that would make this the last macro money show of this week. We'll be back on Monday. I am likewise writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. And, of course, if you're watching this on YouTube and you're following along there, use the comment section. I respond. Like and subscribe. Macro Money is back next week. Happy trading.